Bien. Monsieur le gouverneur, messieurs les gouverneurs,
So, dear Mr. Governor, it's not because we have a number of people who've registered who are multiple that we need to wait. We do need to start on time to make sure that everything runs smoothly. I would just like to thank Governor Villeroy de Galhau, where I think, of course, we will need to with our good friend, and we'd like to thank the Banque de France for its very fruitful cooperation with FERDI, and I think I shall now yield the floor to the governor of the Banque of France. Dear Patrick, many thanks for your warm words. I shall be speaking French this morning, but I do believe there's simultaneous translation for our English-speaking friends. I would like to confirm how happy we are to be hosting this conference, this tripartite conference. Again, Banque de France, many thanks to Bruno Cabriac and his team, FERDI with Patrick. We go back a long time, both professionally and intellectually, and also on a more personal level, and AFD, who joined our trio and who are now a key part of it. Today's topic is crucial, although slightly unusual when talking about Africa, namely financial digitization. The title of the conference is Financial Digitalization, a Sustainable Development Tool for Africa, ? I think we have before us a full day to try and get rid of this question mark and to change this question into a statement. So in my introduction, I would say that financial digitalization comes with a number of opportunities, but also a number of risks. But the balance of risks and opportunities is probably very different, depending on whether you're considering advanced economies or Africa. Let me start with Europe, and particularly France. There are, of course, opportunities associated with financial digitalization, probably a key factor in the reduction of banking costs, increased competition, as was witnessed also with the multiplication of online banks, new services for cash management, for lesser favored persons, or the aggregation of accounts. In some respects, a strengthening of inclusion for a number of specific groups and no customers, notably those who are physically very far removed from a branch, could do without online or mobile services. However, the opportunities may be slightly less marked in France and Europe because we, of course, have a very high banking coverage, 91% in the Eurozone, 89% here. Use of cash remains significant. In the Eurozone, 59% of transactions are still made in banknotes. Obviously, this is a number of transactions and not amounts, because higher amounts are usually paid with cards. And based on this, the additional gains from digitalization may seem obvious, but are possibly less transformative in Africa. And then, of course, there are risks. Risks are, of course, something you need to look at carefully. You need to pay attention on potential complication access to banking services by groups, by certain groups, particularly older persons. We also need to pay attention that too many bank branches, physical branches, do not shut down, that there can still be personal contact with a banker. And there are also risks in terms of consumer protection. We implemented over the past few years an observatory of the security of means of payment, but as we're moving forward, the fraudsters technology is also moving forward. And there are also stolen identities, the use of social media, and so on, that these fraudsters are increasingly doing. And if we think of Europe, of course, essentially, a lot of regulation is necessary. But let me discuss now what seems to be a paradox, an apparent paradox, because on the one hand, there's innovation with great freedom, a lot of private sector players such as fintechs, and then on the other side, regulation, which requires stability, which requires a public intervention, public authority. And there is, on the face of it, a contradiction between innovation and regulation. I think it's only an apparent contradiction, because they are indeed converging. To use a simple simile, they are like two flying buttresses in a cathedral, the apex of which is confidence. Of course, innovation would be short-lived if there was not confidence, and stability without innovation would be exceedingly conservative and would lead to regression for the end beneficiary, namely the consumer. So for a number of issues, we will need to organize this combination of innovation and regulation, which must walk hand in hand. Innovation is essentially in the private sector, but not only, and regulation is, of course, the public sector's remit. A few examples about the advanced economies. So we talk about cryptos rather than cryptocurrencies, because we don't believe that they have any of the features of currencies, because there's no universal acceptance of crypto. And we'd rather talk about crypto assets. There's of course the blockchain. We ourselves at Banque de France use the blockchain to exchange for smart contracts and so on, but it requires regulation. Consumers need to be protected from from investments in Bitcoin. I think well-informed investors should be the only ones to be allowed that, and it can, of course, also significantly these crypto assets play a significant part in money laundering. So, of course, we do not want to prohibit or hinder innovation, but we do need to regulate it to avoid deviation. And the other example, which is the symmetry of crypto assets, a more positive symmetry, are the central bank's digital currency programs. We are working actively on this with the European Central Bank, with prototypes. We are possibly going to enter a preparatory phase and then a rollout in 3 or 4 years. And there, innovation is on the public sector side. The public sector regulates, but must also integrate and accept innovation. After all, a little more than 2 centuries ago, paper banknotes in themselves were an incredible innovation. So the digital currency of central banks is perceived by some as being a competitor for the digital currencies of private banks. But I do not think so. I think that currencies that are used for payments in a public-private partnership We will be retaining the false banknotes, but there's no reason that in the 21st century, when everything is increasingly digital, that the central bank's currency should be the only one to be left on the side. So if I look at the balance of risk and opportunities on the African side, which I'm sure you're going to be discussing at length all day, let me start with a personal memory. It so happens, and I'm saying this before in front of the governor of BCEAO and the Comoros governor, and it so happens that we have a conference of French-speaking banking central bank governors, and Switzerland was there, and we had decided to discuss digitalization and the challenges for central banks. And what was extremely striking was that our African colleagues were much more positive and enthusiastic than the Europeans, because the balance of opportunities was even more favorable to them. We all know, of course, that Africa is a fantastic seat of excellence and circulation of mobile services. Almost 1 in 2 mobile money accounts in the world is African. Mobile services allow a very powerful catch-up of access to banking, which was much lower in sub-Saharan Africa than elsewhere. Mobile bank accounts in 2021 covered 1/3 of Africa's population, and they are also starting to be a channel to access credit. Digital services also allow a significantly lower cost of remittances, notably for expatriates abroad, sending money back home. And we know how important this is for countries of the global south. Of course, much progress still needs to be made. 6% of fees on average on mobile remittances. It's less than cash, which is between 9 and 10%, but it's of course still much too high. As you know, in 2021, we adopted a G20 roadmap. I actively took part in drafting it with 11 objectives in the reduction of cost of remittance, faster, easier to access. All of this should be done in the coming years, and digitalization with the new entrants and notably fintechs will help us. However, again, in Africa, I think a number of questions arise, a number of risks. I won't repeat what I have just said about the protection of consumers and the fight against money laundering, but I would like to stress the importance of financial education, digital education. Financial services, albeit digital, call for a certain knowledge and mastery by users, particularly in payments, because they do come with their own risks. And today's conference will undoubtedly be a great opportunity to discuss the work of the Global Partnership for Financial Inclusion, the GPFI, which is a G20 group. And again, our French-speaking central banks are highly active in this. Let me round off after having outlined a few of the topics we're going to be discussing today. Let me finish off with something that is more specifically central bankers' reflection. Digital banking will allow significant progress in access to financial services in Africa if it is adequately regulated and comes with the adequate education effort. But digitalization will not challenge our profession as central bankers. I think in the background of today's discussions, I'm turning again towards my colleagues, other governors, I think we are facing major challenges both in Africa and Europe. The challenge of inflation, the return of inflation, which requires tighter monetary policies, and the challenge of the consolidation of sovereign debt, which exists both in the global north and global south. And then For Africa's monetary unions, of course, a great advantage is the monetary stability and the cooperation agreements that exist between various African countries and France on a voluntary basis. And I think that in the face of this new challenge, I think it is deeply necessary to preserve the independence of central banks and their monetary policies. It may be, of course, tempting to mobilize one central bank to use it for expansionist monetary policies, but that would create a very negative spiral of debt and would undermine the stability of currencies which are our common good, and the benefits of the fixed exchange rate and monetary union are deeply linked to the independence and resistance to government budget issues. And I think that the community's solidarity, the stability, and the inclusive growth this guarantees is a precious asset in the face of the crises we are encountering. And the central bank is a cornerstone and guardian of this. In other words, this applies for the ECB, for the Banque de France, and for the African central banks. Central banks are digitalizing. Digital or numérique, both words apply in French and English. They are digitalizing, but they are increasingly loyal to what they're trying to achieve thanks to their independence. I wish you a very fruitful conference. So without further ado, we can now listen to Morten Beck, who is director of the Swiss Innovation Hub. We were talking earlier with him of digitalization, and the Innovation Hub can also help the World Bank and IMF to digitalize through blockchain its relationship with the countries with whom it interacts. So that is a fine example of digitalization, perhaps not as important as means of payment. Mr. Morten Beck, the floor is yours.
Good morning. Thank you very much for having me. It's a great honor and always a pleasure to be in Paris, obviously, and what a beautiful weather we have. So anyway, I'll talk a bit about central bank digital currencies and opportunity for development. I also have a question mark. I think also, hopefully at the end of my presentation, I can remove that question mark. I think the answer is yes, but there's a but, and I'll get back to the but. I should say the views here are mine and not those of the BIS. So I will actually talk about two things today. Very quickly, I will talk about a little bit about the BIS Innovation Hub, and then I'll get into the central bank digital currency discussion. So first, what is innovation? So I was recently in Denmark, in the rural parts of Denmark, and this is what I saw out of my car. And I think it's a very good example of how innovation can solve real life problems. Okay, so that's actually what we're trying to do in the BIS Innovation Hub. And also, for those of you that are familiar with payment systems, I also think it shows the promise of interlinking different systems. Okay, so you can get the speed from one system to the other. What is the BIS Innovation Hub? It's a bit of like a contradiction in terms, or oxymoron, like central banks and innovation, right? And so I think of us a little bit as a bumblebee, something that in theory should not be able to fly, but somehow we are off the ground, and I believe, and hopefully you will agree, flying generally in the right direction. So what is the ambition for the BIS Innovation Hub? It is really to be a global force for innovation. We're not quite there yet, but I think, again, we're moving in the right direction. We started out with 3 centers in Hong Kong, Singapore, and Switzerland. And last year, we added a center in London and one in Stockholm. And I believe on May 1st, we also added a center for the Euro system, which have locations both in Paris and Frankfurt. And later this year, we hope to add a center in Toronto, mostly for the Americas. And then we have a strategic partnership with something that is called the New York Innovation Center, which is run out of the Federal Reserve Bank of New York. But of course, you can see we still don't have a center in Africa, but I'm sure that will be coming sometime in the future. So this is just the BIS Innovation Hub. This is the management. So I just wanted to mention this. We have a new head, Cecilia Skingsley. She came to us from the Swedish Central Bank, but before the head was Benoit Curé, who might be more familiar with the people here in Paris. And then these are all my colleagues in the other centers, and there's a very youthful picture of me, which I think needs to be updated, but anyway. So what is it that we do? I think we do 3 things, and they're kind of interrelated. So we scan the horizon for new technologies that might be of relevance to central banks. We do these projects, which are basically proof of concepts and prototypes with a lot of technology in them to try and solve real problems for central banks. And then if we do that well, we try to become a focal point for central bank experts on innovation. We have something that's also called the BIS Innovation Network, which is open for all central banks, and a lot of central banks are participating in that network, and there's a lot of discussion around all kinds of innovation in that network. By governance, we were given 6 strategic themes, and here they are. These are the areas that we should work in: subtech, regtech, next generation financial market infrastructures, open finance, cybersecurity, and green finance, and then finally central bank digital currencies. And just to give you a little bit perspective, I think we have started around 29 or 30 projects right now, and they are either ongoing or has finished. And I think 12 of them, so about a third, are related to central bank digital currency. So there's not an equally weighted portfolio. There's definitely more interest in central bank digital currencies. So what are central bank digital currencies? Well, it's a digital payment instrument in the national unit of account, and it's a direct liability of the central bank. And when we defined it, we wanted it to be different from the traditional reserve or settlement accounts or balances that banks hold with the central bank. What sounds like a CBDC, but it's not, that would be a liability issued by a central bank that is not in its own currency. But and there's a couple of reports by a group of central banks where you can find more information. But how to think about money in the context of central banks? This is a taxonomy we did many years ago now, but the idea is really that there are 4 characteristics of money that are important. One, money can either be widely accessible, it could be electronic, it can be issued by the central bank or not, and it can be peer-to-peer. Peer-to-peer is like Bitcoin or cash, that it can be transferred pretty much without the use of a intermediary or a third party. And in the center of this money flower, then there are central bank central bank money, and then there's 3 kinds of central bank money. 2 retail kinds. Either the central bank give accounts to everyone, or the central bank issues some kind of digital token. And then there's there's a wholesale CBDC, which is a digital token, which is not widely accessible. It's only accessible for banks for interbank payments. So this is kind of like the center. So there's 2 types of retail CBDCs, and then there's 1 type of wholesale CBDC. And then all kinds of other types of money you can find around there. There's cash, there's Bitcoin, there's gold coins, there's local currencies, and so on and so forth. But since this was my thinking in 2017, this is my current thinking. I'm an economist, so I think I have distilled central bank digital currency into a single mathematical equation. So what does it say? It says CBDC is equal to M0GA. So what does that mean? It's going to be a joke. We'll see how well it goes over with the live translation. So the right-hand side is short for making M0 great again. So I actually think that capitulates really well what central banks are trying to do with central bank digital currency. And what is M0? That is base money. And what is base money? Recall that base money is cash plus reserves. And so what this whole CBDC discussion is about is really what is the base money for the future? And here are just 3 examples of how that might look. The first one is that there is no base money, right? This is Frederick Hayek, so all currency should be private. I think we could dismiss that. But at least it is, this is what the crypto fanatics would like to see. Then there's a future where central banks only provide settlement assets for the banks, so we only have reserves. And then there's the future that the BIS articulated last year or last year. This is our vision for the future of the monetary system, where you both have retail CBDC and wholesale CBDC. So retail CBDC is for everyone, and wholesale CBDCs are only for banks or financial institutions. So why a wholesale CBDC? I'll focus mostly on retail because I think that's most interesting. Our reserves are great. It's kind of working well now and long. Everything is really safe and efficient. But we might need a wholesale CBDC if one of 3 things happens, if the private or public sector moves to tokenize the securities. So there are some that says, we should move all securities to distributed ledger or blockchains. If the private sector cannot improve cross-border payments, then we might want to use tokens instead. And also if banks, and this is a recent development, want to move to tokenized deposits, and then in that case, it actually also might make sense to issue a wholesale CBDC, which also would be issued on a DLT. But then let's move to why might we need a retail CBDC? I always says that cash is not the answer for the future. It just cannot be. I think if you were to introduce cash today, you probably wouldn't be allowed, just because of anti-money laundering and other concerns, okay? And so why this GIF is because I'm from Denmark, and in Denmark, seeing somebody paying with cash these days is actually as rare as seeing a fish on a bicycle. And there's a lot of bicycles in Denmark, okay? And there's a lot of fish. So this is really, really, and another example of the same thing is we're just seeing this great trend of digitizing payments, okay? This is from the UK, and you can just see the use of cashless payments is increasing very rapidly, whereas cash for transaction is slowly falling. And you can see there's really high growth rates on cashless payments, also at the global scale. So, but when we have to think about whether we need a retail CBDC, like a way that we look at what is a meaningful innovation in the Innovation Hub is we say that it's the intersection of 3 things. First, it has to be desirable, it has to be feasible, but also very important, it has to be viable. Okay, so using this very simple framework, let's see if we can make the use case for a retail CBDC. And of course, you want to be in the intersection. That's the sweet spot. That's the target in the intersection of all 3 things. So if we look first to desirability, so why would you have a retail CBDC? And like the governor, I think it depends really a lot on where you are in the development phase. So if you are a developed nation, some of the pros and cons might be different from a developing nation. So if we look at the developing nations, I think there's a clear, and this some of them applies to both, obviously, but we want to preserve the trust of public money. We do not believe in a system where there's only private money. Then there's things like monetary sovereignty, okay? We think it's for the government or for the state to own the unit of account. Strategic autonomy, you might not want, foreign payments are basically critical infrastructure, so you might not have want that all to be run by foreigners, so you want to have some strategic autonomy, and then cross-border payments. But for developing nations, I think the business proposition or whatever is very different. So I really think financial inclusion should be and is the big driver for potentially issuing a retail CBDC. And that would, of course, help with remittances, which we just heard is really, really important. On the other side, for the developed nations, what are people saying? Well, it's a little bit, the private sector is doing an okay job. Is this really not just a solution in the search of a problem? And there's some merit to parts of that. Then there's the concern around disintermediation. You know, if will the deposits just leave the banking system? Financial stability, there's a lot of discussion around digital runs, but actually we've already seen digital runs today. So maybe that's, it's already happening today. Maybe it could be even faster with a retail CBDC, who knows? And then there's some concerns about privacy and the surveillance state. What happens if the central bank can see all our transactions? Is that a good thing? In the developing nations, I was just in South Africa. They have like rolling blackouts or load shedding, as they call it. And so if you build something like this, you probably need some kind of offline solutions, but that's really difficult. The BIS Innovation Hub just released a report that was about 120 pages long, discussing all kinds of issues relating to actually providing an offline solution in the context of a retail CBDC. And then there's dollarization. It's a little bit, if other countries get CBDCs, will that make it harder for you to keep your own currency? So I think there's a lot, there's good arguments for and against retail CBDC. I think like the governor on balance, probably there's more pros than cons, but some of the cons are really, really difficult to solve. Feasibility. Is it feasible? Well, we can discuss that, but I think there's 4 live systems at the moment. This is according to my colleague Raphael Auer, but there's 4 live systems in Bahamas, the East Caribbean, Central Bank, Jamaica, and Nigeria. There's also these very advanced pilots in China. An advanced pilot in China, that means a city of 10 million people or something like that. So, it's almost, in my world, that's live. And so yes, it is feasible to issue a retail CBDC. And some of the BIS Innovation Hub projects actually focuses a lot on demonstrating or looking at very particular elements of what we call technical feasibility. So let me just try and give you, these are all the CBDC projects that I mentioned to you. I don't expect you to know all the names by the end of this presentation, but these are the project names, but more this thing that, you can either think of CBDCs either in a domestic or cross-border context, or you can think of it, as I've been arguing, between what is the use case? Is it just for financial institution, or is it for the general public, so retail and wholesale? And you can see our strategy is kind of like, we want to be leading cross-border. We are the Bank for International Settlement, so this is actually almost in our name. But then we also want to help shape domestic. And just to say that, so most of our focus has actually been in the cross-border wholesale space and in the domestic retail. And in the domestic retail, we really focused on very particular issues. So Seller is about cybersecurity, Rosalind is about API, Polaris is about offline solutions. So we haven't really come up with like an end-to-end system of how you would implement it, but like focus on very specific areas in retail CBDC. Just the retail CBDCs are quite difficult and quite hard to do them right. This is just an advertisement. So if you're really interested in wholesale cross-border, we have 3 different reports. You can read all of them, or you can read where we've synthesized all those reports into a single document, which is this using CBDCs across borders, lessons for practical experiments. Viability. Many years ago, there was I think in 89 or something like that, there's an American movie. It's called The Field of Dreams. It's about this farmer in Iowa that somehow gets this idea to build like a baseball diamond in the middle of a cornfield in Iowa. Don't ask me why, but the idea is that this cornfield whispered to him, if you build it, they will come. And who are they? Well, they are actually the baseball player, and they come and they play baseball there. I don't know why that makes any sense, only in America, but that's the way it is. But the idea is that this build it and they will come became like the mantra of the internet.com bubble or phase, right? And so the question is, is that good enough for a central bank? I would argue no. So we need to go a little bit deeper, right? So we need to understand how do we make sure that the retail CBDC is viable. So I would say just focus on one thing of viability. There's all kinds of, but really, I think adoption. Adoption is really key, right? Why would you build something and nobody's using? Like economists will argue, well, there's something called contestability that, even though it's not used that much, it still serves a very useful purpose. Fair, there's some arguments around that. Maybe the central bank then provides like a lower floor in terms of pricing and so on and so forth. But okay, let's focus on adoption. So far, the live system, we haven't seen great adoption. But it's also very early days and people are experimenting and they're learning. But also there's a little bit this thing that it's weird for central banks in that they want adoption, but they don't want it too much, right? Because if they have too much, then they are competing with the banking system, right? They're drawing deposits out. So it's this Goldilocks situation where it has to be neither too high or too low. So you have to find the sweet spot. And then, of course, I don't think people should be surprised. There's a lot of network effects in payments. And it's just like, even though it's not the best technology, just because there's a lot of people using it, it's a great payment instrument. A classical example is paper-based checks in the US, which are still widely used. And then consumer choice. What are the things that are really driving adoption decisions by consumers? And I think that's something that we central bankers do not understand very well, but we really need to think hard about. So one of these aspects where we need to think hard about what is it that consumers want, is it privacy? So there's a lot of discussion around privacy, whether the end of cash will mean the end of privacy. Will central banks monitor? Are there surveillance risk? And how do you trade off privacy, performance, and security? I don't have all the answers, but I just want to highlight a project that we're working on in the Swiss Center of the BIS Innovation Hub. It's called Project Tourbillon. Tourbillon means, I believe, twister in English, but it's also the thing that are inside a Swiss watch. So it's very carefully calibrated to get the right trade-off between these three things. And what we're doing is we're implementing a concept that's called eCash 2.0. And here you can see these are the authors of it. And David Charm is a very world-famous cryptographer. And it's super, super complicated. But what I want to say is that what is really interesting about this project is that it has a certain type of privacy. Like if you use cash, you have what we would call two-sided privacy. Basically, I'm private, you're private, and when we walk away from the transaction, nobody knows who we were. In Tourbillon, there's one-sided privacy. So it works in this way. So basically a little like cash. When you take it out into the system, it's like taking cash out of the ATM. So your bank will know who you are. But once I pay with it, then I'm private, but the receiver is not private. So that's one-sided privacy. So let me give you an example. Let's assume I have to go to the pharmacist. I have to buy this very expensive drug, legal, that says a lot about my health situation. I would like to be able to pay with that without there being any record on that. In this system, I can. But for the pharmacist, that's her business, right? To sell drugs, legal. And then, so she does not need to be private. So using these like very complicated cryptography, the system is set up in such a way that if you pay, when you take money out into the system, that is known, but what you use the money for is private. Once you receive money, that you cannot hide. And so, for example, for VAT or other issues, or for anti-money laundering, there's some transparency in the system. And so what we are trying to figure out now, is that the right trade-off between for privacy, so that you can both make sure that the money is not used for illicit activities, and that people feel that it's private enough so that they will like to do it. Anyway, this is all coming out, hopefully, if my team is working, is hard enough here in the second half of 2023. So key takeaways, this is, I believe, my last slide. So I actually think CBDC is not a panacea for development. I think it's the right way to go, but it won't solve all the world's issues, right? It will be very good, and I think it can help on financial inclusion. Wholesale CBDCs are hard, but retail CBDCs are even harder. So, and I think exactly the challenge, like on banknotes, central banks have a monopoly right now, but all of a sudden, I don't think anybody is suggesting that that would happen in the digital world, okay? So central banks all of a sudden have to think about, you're not a monopoly issuer of banknotes. And then the final thing, everything becomes a lot easier if you have a digital ID. So if you are going to embark on this journey, maybe that's the place to start, because like adding a central bank digital currency to a system where you already have a digital ID is just infinitely easier than the other way around. All the ones that have implemented retail CBDC have to figure out some way of getting an ID, whether it's a phone number or something else. So if you already have a digital ID, everything else becomes easier. I think that's the end. Thank you very much. Swiss time.
Merci beaucoup. On a bénéficié du tourbillon suisse. Thank you very much, Mr. Mortenbeck, for this introduction. And we don't have time now for questions, but I guess a lot of speakers will ask you questions about this very big innovation, which is CBDC. Donc, les monnaies numériques de banque centrale, c'est vraiment une innovation de rupture. Et c'est pour ça que c'est difficile de prévoir.
That's why it's difficult to plan this type of innovation. And it's even more difficult to see whether these innovations will have an effect on financial inclusion. And the task of the next panel is a very difficult one. All of these breakaway technologies. I'm going to hand over to Thomas Melonio, who is going to be moderating our first panel discussion. If the participants would like to come up to the stage. Thank you, Bruno. Thanks to the Banque de France for the organization of the session, and to FERDI. I'd like to salute the two governors of central banks here. I'd like to start with an anecdote and leave some time for our panelists to join us here on the stage. 15 days ago, I was in India, and along the roadside, one of my colleagues at the French Development Agency had bought a mango with the digital tools, the digital payment. So if you pull the spool of yarn you need to do all that with the phone call, sending the money, to buy a mango on the edge of the road, you have to have an application on your phone. It means you have to have a digital identity, as we just said, because in India, there's a national register. That means that there are applications that are authorized in banks that regulate and use those. So there's a whole set of conditions that need to be met. There are also digital infrastructures, digital access. So if you pull that spool of yarn, you get to a whole set of options of services that are available in order to enable digitization from the financials.
Digitalization and currency. We're going to listen first to Laura Kapler. Laura, I think you're online. You're going to set the scene by presenting the last Findex report. Donc, Laura Kapler, économiste principale à la Banque mondiale, va commencer par nous présenter le rapport Findex.
We're just going to start by presenting the Findex report, the special focus on Africa to show how far along we are in using digital financial services. Laura?
Good morning.
20 minutes maximum. Good morning,
yes.
Laura.
Thank you.
We can hear. The floor is yours.
If I may please ask to share my screen. Somebody else is still sharing. Okay. One moment. Can you see my screen?
Yes, we can. You can go further.
Wonderful. So good morning. Oops, sorry. Thank you, and thank you for the invitation to join you. And I'm sincerely sorry that I'm not there with you in person. So I'm going to talk about the Global Index database, which has been, I'm sorry, give me 1 second. Wait, hold on. Sorry, just give me 1 moment. Okay. So let me just start by just very briefly for a moment talking about why our efforts to expand the use of digital financial services in Africa is really built on a growing evidence base that financial inclusion matters for development. That digital payments is much more than just a convenience. In developing countries, access to formal financial services, typically accessed today through just a mobile phone, can increase employment and income, can reduce poverty, can improve financial resilience to medical emergencies and climate disasters, and can increase transparency of financial transactions, which is important for lending decisions, especially for young adults and entrepreneurs who might have thinner credit histories. There's also evidence from around the world showing how digital payments can offer women in particular greater security, privacy, and control over her own money. For example, in Kenya, women merchants who received a basic account invested more in their businesses. They also spent over 13% more on food for their families. So I'm going to discuss data from the Global Index database, which has been used by researchers, policymakers, practitioners, donors to measure access and use of financial services in over 140 countries. Importantly, we can identify gender, income, and other gaps in financial inclusion, use the data to design solutions, policies, and products, and track progress over time. So over the past 10 years, we've asked over 500,000 nationally represented adults about their use of formal and informal financial services. Our headline indicator is personal account ownership, which includes accounts at banks, MFIs, post offices, as well as card-based accounts and mobile money accounts, and accounts used to receive digitally government transfers, wages, and other payments. Importantly, all data can be summarized by gender, as well as other individual characteristics, such as income, age, employment, education, rural residence, and more. So what does the data tell us? So the good news is that account ownership continues to grow. Worldwide, account ownership increased by 50% in the past decade since we started collecting the data, to reach 76% of the global adult population. In developing countries, account ownership increased over 30 percentage points in the last decade to 71% of adults. And importantly, this really reflects the success in leveraging technology, including mobile phones, biometric identification, remote agents, the digitization of payments, and the interoperability between financial providers, which has all resulted in more equitable access to accounts by women, as well as poor and young adults, and adults living in rural areas. In particular, there's been astonishing progress in sub-Saharan Africa in the use of mobile money accounts. These are accounts offered by telecoms, by fintechs, that are accessed through just a text-based phone. In sub-Saharan Africa, 55% of adults have an account, including 33% of adults who use a mobile money account, up from only 12% in 2014. And really, in 2014, mobile money was a East African story, spreading to West Africa and really beyond in the most recent data. So here's a summary looking using the African Union classifications for across Africa. So the purple bar are adults who use only a mobile money account, really this marginal benefit of fintech accounts. Blue are adults who use both mobile and bank accounts, and green are people who use traditional bank and similar accounts. Although with the important caveat that we look at Asia today, many bank accounts are being accessed through mobile apps and being used using a phone and card in digital ways. So looking at the Africa region, we really see how the adoption of technology-enabled accounts has been driven by supportive regulations and investments in digital public infrastructure. And because these accounts might be better designed for the financial lives of poor adults, who might be laborers or informal merchants with daily incomes, who might only have enough money to buy food for one day, but might also want to put aside $1 or so a day to meet their monthly expenses, like a utility bill or school fees. So in other words, poor adults typically make high frequency, smaller value transactions. And the pricing structure and the local agent networks of mobile money and fintech products might be more affordable and more convenient to meet their financial needs. And the good news is that account ownership for men and women continue to grow. Yet the gap has widened in Africa as men have more quickly adopted technology-enabled phone-based accounts. We also saw in some countries over the COVID period that governments were able to leverage the mobile money network to quickly get money to people in need. However, the design of these social transfer programs in some countries also widened the gap. In countries where the money was made only to the male head of household, more men opened accounts to receive these social transfer payments than women. In comparison, in Bangladesh, most social transfer payments targeted mothers. And there we saw dramatic narrowing of the gender gap in account ownership. We can also look at the data by income, which has account ownership of the poor has continued to grow, mostly mobile money accounts. Importantly, education. Now, although tightly correlated with income, we actually find that the education gap has expanded. The majority of unbanked adults today in Africa have a primary education or less. And this really suggests the vulnerability of today's unbanked to misunderstanding terms or fees, and financial fraud and abuse, and the importance of strong and enforced consumer protection of financial institutions, including agents and other client-facing staff. So this figure focuses just on rural versus urban account ownership across subregions. And so in most countries and regions, the majority of rural account ownership has been through a mobile money account. Again, highlighting the importance of locally available financial services, access typically at a very local level from the same people who are selling minutes for phone are now becoming the local banker. I just returned last month from Malawi and Zambia, where we were testing these questions, and speaking to people in rural areas who are able to access a wide range of financial services from the agents in their village. As we've made great progress in financial inclusion, how do we reach the remaining unbanked? So another benefit of demand-side surveys is that we can ask the unbanked why you don't have an account. And so we hear about the potential for local mobile and bank agents to address what's reported as the high cost of banking services and travel distances. And we also hear about the importance of national ID. As Borden just mentioned, digital ID is critical for the development of digital finance. We also hear that adults use someone else's account, especially women, and especially in countries with high banking costs. And again, this is the only, using somebody else's account is the only response with significant gender differences. Also, it's important to build trust in financial institutions. Really notably, and this is even more so in other regions, there's a tight correlation between bank costs and trust in banks. If there are unexpected costs, you lose trust in your financial institution. In sub-Saharan Africa, we also asked the question why people don't have a mobile money account. So about 60% of the unbanked in sub-Saharan Africa report not having a mobile phone as a barrier. And here again, be careful about leaving women behind at the starting gate. I'll show you the next slide, large gender gaps as well in phone ownership. We also hear about, again, the importance of having a national ID, which is key to access both a mobile money account and a personal phone and SIMS card, which is necessary for KYC and to open a mobile money account. So you have to be clear. You need we actually asked a question on what in 2017 on what do you use your ID for? And really, to my surprise, when we asked for government payments, government services, financial services, the #1 reason by a multiple of 4 was to access a phone. to access a SIMS card in my own name. I used to put up here for a second some really interesting new data and the ID data we collect jointly with the World Bank ID for D team, showing this really tight relationship between the gap in access to ID, and this is growingly in Africa, digital ID, access to a phone, and access to an account. And these three gaps are very tightly related and really show us the importance of building out the ID, specifically the digital ID infrastructure, to access both telecommunications as well as financial services. One other point, it's really important that people have the confidence to use a financial account. And Magda's going to talk more about just the importance of ongoing financial education to build people's financial capability. And what's shown here is that about 30% of mobile money customers say that they need to ask an agent or someone else outside their home for help using their account. And this is important because we know that adults that depend on someone else to do their financial transactions for them often pay additional illicit fees. For example, a recent study in Ghana sent actors to banks and mobile agents and showed that adults asking for help were charged about 30% additional fees on average. Okay, so let me also now move on to the use of accounts, my remaining time. And let me start by dispelling, I think, a common perception, even among my colleagues, that mobile money accounts are only used for person-to-person P2P payments, like to send money around town to friends. And certainly when mobile money accounts were introduced in Kenya and East Africa, that was the main purpose of mobile money accounts. What I'm going to show here is of the 33% of adults who use a mobile money account in sub-Saharan Africa. And then again, a caveat that's actually much higher in some countries, but because Nigeria and Ethiopia in 2021 did not yet have large adoption of mobile money accounts, this is on average, population weighted average, but of the 33% of adults using a mobile money account, about half are receiving a domestic remittance payment, but about a quarter are receiving a wage payment directly to their phone. And this is, not only are these adults receiving payments, they're also making payments from their accounts. And about 20% are using their accounts to borrow, and almost 4 in 10 are using the mobile money accounts to save. And really what this is showing is that the ecosystem around mobile money has tremendously developed. And so let's dig into the data for a couple of minutes. First, we find over 70% of government payments today in sub-Saharan Africa are made into an account, both a mobile money account shown in dark blue, as well as banks and more traditional accounts showed in teal. This is important because there's strong research showing that digital payments are good for the government. It's cheaper, it's quicker, reduce government corruption. It's also good for the recipient. You think about government wages, and this is really brand new story. So we piloted the questionnaire around over 30 countries around the world. I often tell the story of a teacher in Zambia who told us that she had to close the school for 2 days a month to travel to the city to receive her wage payments. And she complained because of the danger of traveling by bus with a lot of cash in her pocket. And we would hypothesize, imagine if her wages are digitized. So just in Zambia last week, 2 weeks ago, and we met with school teachers who, rather than closing the schools to travel to the city, were now receiving their wages, their government public sector wages, directly to their they were able to withdraw the money via their Airtel account right in their local village. I was saying how much more convenient, how they saved the bus fare, how they could keep the schools open longer, but also that they could keep a little bit of money on their phone. They didn't need to withdraw the full amount in cash. They were able to keep money in their accounts to manage their money over the month and save for future goals. We also find about half of private sector wage payments are made into an account. And again, this is certainly, we're not referring to it, there's large informal workforces in many of these countries, but even thinking more about people working for large global value chains, and increasingly even domestic firms are paying workers directly to a mobile money account. Again, this is often safer and cheaper for the employer to be able not to have to disperse cash, which also has security concerns. And work that I've been doing with factory workers in Bangladesh shows that workers, these are factory workers, low-income workers, paid into an account more than double their savings and have a greater ability to cope with unexpected expenses. They're less likely to report going hungry at the end of the month. Importantly, we also show that workers benefit from what we refer to as learning by doing. They learn to use their payroll account without assistance. They begin to use a wider set of account features, and they learn to avoid illicit agencies. Less successful has been the digitization of agricultural payments. Although a farmer who might get paid seasonally and needs to stretch his money to the next harvest, purchase seeds and fertilizer, access insurance products, could hugely benefit from links to the formal financial sector. There are also really interesting emerging embedded finance models with more sustainable or organic practices are financed in cooperation with guaranteed buyers. But here we've seen less progress, with the exception perhaps of Kenya and Tanzania, Mali, and there's a tremendous opportunity for often governments are the buyers of large crops as well as international buyers. We can also really use the data to really more precisely understand where the opportunities are. So for example, we find nearly 70 million unbanked adults in sub-Saharan Africa receive agricultural payments receiving agricultural payments only in cash. And again, this is a way where the government and global private buyers, think the large crops, coffee, tea, cocoa, can really take the lead in expanding financial inclusion by digitizing some of these payments. And I will mention the important caveat that the unbanked have less experience with financial services and how they operate. Digitizing some of these payments, government payments, agricultural payments, must be done with ongoing financial education and support, as well as a strong and enforced consumer protection environment. Just to very briefly mention, the data also show that still most merchant payments, and in many countries, utility payments are made in cash, although digitizing some of these payments could help merchants get better access. There's these exciting models really succeeding in Latin America and Asia, more embedded finance models where the small merchants can effectively collateralize their future sales and giving the lenders greater visibility into the merchant's performance, as well as giving them better recourse in the case of default. And let me just finally, a remarkable finding in 2021 was that in response to the question, do you save money? About 15% of adults in sub-Saharan Africa report using a mobile money account, almost 40% of mobile money account holders. And so although most mobile money providers don't offer formal savings products, there's variation in the regulations on paying interest, we find this tremendous adoption. And an important caveat, note that in 2017, we asked people they save in any account, which should include both bank and mobile money accounts. In 2021, we explicitly broke out savings at a bank versus the green bar, which are adults who are saving using a mobile money account. And again, this makes sense. Banks just aren't designed for people to stand online and deposit the equivalent of $1 a day. But people understand the affordability and convenience of the mobile agents, on their bills, as compared to more riskier and often expensive forms of informal savings like susus in West Africa, who are people who come on a moped to collect literally $1 a day and return the money at the end of the month, less a day savings. So the alternative is actually paying to save money safely outside the home. And I was really blown away. I spoke to over 35 cognitive interviews last month in Zambia and Malawi. Almost every person we talked to told me they opened a mobile money account to save. They weren't sending money anywhere. They weren't sending remittance payments. As a farmer who made the equivalent of about $22 a month income was his household income. He said how previously he used to give his savings to his wife to save. And the money was stolen. If there was a fire, he lost money, or he just spent it in his pocket. But now every day he was putting in less than $1 into his mobile money account, and he was saving up to buy a motorbike. Other people told us how they use their mobile money account to pay for their school fees and other expenses. And this is an area where I expect there to be interesting progress. And also, even again, this is in Malawi with relatively uneducated, less formally educated adults, very poor adults in terms of dollar income, also were understanding how when the government made subsidy payments into a bank account, it was linked to their Airtel mobile money account. And so that they were able to access their bank money using their mobile money account conveniently in their village. When I asked where the closest bank branch was, few people even knew. They said in the city, far away, that they were all using the services, local services, just having a tremendous impact on their lives. So let me just conclude with an example of the potential of digital financial services to help adults in Africa manage.
Please, if you can conclude in just maybe 2 minutes, we're running a little bit behind. Thank you.
Last slide, I'm sorry. So we asked the question in 2021, what is your biggest financial worry? And over 30% of adults in sub-Saharan Africa name school fees as their biggest worry. And so women are more significantly more worried to cite school fees, including about 45% of women in Kenya, Uganda, Senegal, Ghana, and more. The research really points to the ways that digital financial services can equip parents to cope, including digitalizing school fees, trying to make it easier for schools to implement arrangements to match the fees to seasonal income flows, encouraging savings and appropriate borrowing, and this can all help parents keep their children in school. So thank you.
Thank you so much, Laura. I'm going to make just a very quick summary, peut-être en français. Donc, vous avez permis de souligner l'expansion rapide des services financiers, en particulier pour les paiements, mais aussi pour l'épargne, ça a été indiqué à la fin.
So we're talking about quick expansion of financial services, much lower levels in certain access options. What was reassuring was to see the development of financial services both in urban and rural environments with trends that are similar. Also, in terms of gender equality, access seems to be making progress at the same level.
We have online Magda Bianco. You represent at the same time the Bank of Italy, but you are also the co-chair of the Global Partnership for Financial Inclusions. So I'd like to hear you, and immediately after that, we're going to listen to Gisèle Kenindoy. And to both of you, I'd like to ask you what you see as the challenges for not only financial inclusion, but also as the representative of central bankers, your particular challenges. So Magda, the floor is yours, then you will move on to Gisèle.
Well, first of all, let me thank Banque de France for this invitation. It's really a pleasure to be here, albeit virtually, of course. To answer your question, I would like to start with 3 points, and then maybe we can detail some of them. And the 3 points, the steps that I would like to make are basically first, innovation, which here is mainly digitalization, is certainly essential and important, but it must be governed. Second, specifically in the financial area, it really offers huge opportunities, and Leora detailed many of them, which are already realized, but also challenges, as you were saying. And in order to really expand the former, the opportunities, but limit the challenges, we need a number of conditions accompanying digitalization, infrastructures, regulation, protection, education. Third point, without these accompanying conditions, we might have increased access to financial services, but not necessarily quality inclusion, or we might even risk new forms of exclusion, specifically for vulnerables. So let me detail a bit these claims and try to answer also your question at the same time. First, innovation must be governed. Innovation might produce, of course, greater efficiency, new products and services, but not necessarily these benefits, this efficiency will be shared with all users or produce greater well-being and reduce inequalities among people. I think in order for this to occur, it really has to be governed. It needs to be somehow guided, directed, or in some cases even regulated. And of course, here we have the difficult balance to identify between spurring innovation or avoiding to block innovation and guiding it. And I think Governor Villeroy talked about this. But I think it is becoming more and more obvious that this is the case. Think of artificial intelligence or the use of DLTs, and many authors are discussing this. And I would suggest the reading of a recent book by Darren Acemoglu and Simon Johnson on progress and its benefits. So in general, I think in the area we're discussing today, a good practice that we identified also as Global Partnership for Financial Inclusion, but I think that it's coming up also among developed countries, is to really embed financial inclusion in our innovation policies. For example, innovation hubs or sandboxes, or in some cases embed financial inclusion in regulation that accompanies innovation. Think, for example, of open banking or open finance. Second step, in the financial area, actually, we have really observed major benefits of digitalization. As I said, Leora showed the increase in financial inclusion in terms of access to financial services in many areas of the world, in most areas of the world. New products and services, mostly in the area of payments, but actually not only. Increased quality, speed, easiness of use, in some cases reduced costs. For example, we see digital remittances costing less. New processes, such as the use of machine learning or artificial intelligence for the evaluation of creditworthiness, which might favor an increased access to credit, also for groups that were previously excluded. But we see major challenges emerging: frauds and scams in payments, enhancement of unconscious biases in the use of some products and services, for example, due to the easiness of use. In some cases, biases in the evaluation of users by financial intermediaries, or even new forms of exclusion, especially of vulnerable groups who have either no access or more difficult access to technology, or risks of unfair competition by very large producers, such as big tech. The work of the Global Partnership for Financial Inclusion, which you mentioned, is a G20 working group created in 2010 to promote financial inclusion, of course. Well, the work of our group over the last few years has really focused on which conditions or preconditions are essential to guide digitalization in a way to ensure that we have a wide and solid inclusion of both individuals and MSMEs in a very horizontal and a very easy and not creating inequalities way. And these conditions refer first to digital financial services infrastructure ecosystems, which include, as Leora mentioned, but also I think the other speaker, Morten Beck, the availability of digital IDs widely, internet or mobile digital infrastructures for payments, first of all, infrastructure which must be safe, secure, reaching all. And here the challenges are really the possible lack of interoperability, or the lack of harmonized standards, for example, for cross-border payments, or the lack of a level playing field in accessing shared infrastructure. Second condition, regulation of intermediaries, but also fintech companies, to ensure their stability. And hence here we talk mainly of prudential regulation, but also anti-money laundering regulation to ensure safeness, favoring innovation, but also limiting risks, cyber risks or fraud risks, and regulation of data protection. Here, of course, as Governor Villeroy mentioned, it has to be proportionate in order to balance risk and opportunities. There is a third element, which is very, very important, which is consumer protection. In order to ensure that benefits are really shared, we need to have strong consumer protection. And here we are really moving in this area of digitalization, of innovation. We really need to move from what was somehow protection by transparency regulations, we need to move into what we call protection by design, in order to really ensure protection of vulnerables. What does it mean? It means encouraging intermediaries to design since the beginning products and services which are really inclusive, which are really designed in the interest of final consumers, also vulnerable ones. We also need to use more behavioral insights to develop more effective policies, both regulation, but also the way we supervisors work. And we also need, very importantly, effective redress mechanisms, because only these increase trust of final consumers, especially if they are easy to access and not very costly. Fourth pillar, which is very, very important again, is digital financial literacy, which means ensuring basic competencies to ensure that users are aware of the benefits of digitalization, but also of their risks. They are aware of their rights, but also of their responsibilities. And here we might even use, of course, digital tools, but we need to use also traditional ones to reach everybody. We need to use behavioral insights to reach everybody, to reach effectively users, but also address their behaviors, their attitudes. And we also need to evaluate the impact of financial literacy programs. And this, going to my third point, this is essential to ensure not just access, and we know that actually the wave of digitalization, partly associated with COVID, has increased access a lot, as the Findex report, the Findex data really show. But we need these preconditions to increase and ensure quality inclusion, which means moving towards ensuring financial well-being or financial health of final users, which means, yes, access to accounts and other instruments, but also their usage, their reasonable costs, their use for savings and access to credit, and Leora already mentioned some of these possibilities, ensuring that this doesn't create excessive over-indebtedness, that it ensures increased resilience. And we do have evidence that, well, digitalization does not always produce this. We need to avoid the risks. We need to avoid the risks of new exclusions for those who are not digitally or financially skilled. So I think this somehow sets the general conditions that we need to take into account. And of course, we can detail a bit more what we need to do in each of these areas. So thank you, Thomas.
Thank you so much, Magda. Donc, merci beaucoup. Je vais faire un très rapide résumé. Vous avez illustré ce que le gouverneur Villeroy de Galhau disait en introduction.
So very briefly, you discussed what Governor Villeroy de Galhau said, that there was a tension between innovation at reasonable costs and limited risks, which leads us to the second function of central banks, which is, of course, regulation, not just of payments, but also of access to credit and financial services or services such as insurance. So thanks already for going into the conditions in the manner in which we could reconcile that. So let me now turn towards Gisèle Canidoy, who's in charge of financial inclusion at the Banque Centrale des États d'Afrique de l'Ouest. Would you agree about the challenges that the banks face? We saw the figures earlier on. We saw how far we'd come in terms of inclusion, but also the gap that continues to exist to reach 90%, as in Europe, or even 100% access to that. So in your monetary zone, are the challenges the same? Perhaps you could give us a few elements of illustration. Many thanks. Many thanks for this opportunity that is offered to share our experience in terms of e-currency. I would entirely agree with the challenges just evoked, notably infrastructure, a huge challenge. a challenge for the central banks. But let me first discuss the energy infrastructure challenges. Notably for communities, very remote communities. We need something that is robust and that can reach these communities to serve these people. And then, of course, another issue is the availability of low-cost smartphones for these people. Second challenge, the lack of financial literacy. And when we talk about the lack of financial literacy, I think we're automatically touching upon the issue of consumer protection. They receive products and services, they have access to them, but they're not necessarily sufficiently versed in that. We need to develop strategies, policies, and regulations to support the use of these products and services. So financial education, financial literacy is second challenge, which I have identified. We saw in the Global Findex report a number of use cases. I believe it would be important to have discussion frameworks for discussion between the central bank and other stakeholders, such as telecom regulators or regulation authorities, to accompany the development of use cases. Financial institutions have developed person-to-person transfers, or from government to persons, but there are also other sectors that could be developed, such as the transport sector, healthcare, and others. I'd say there's a lack, perhaps, of communication between the stakeholders, and that will need to be addressed. Another challenge, the identification of the communities concerned. Digital identification, of course, but before that, there's already the identification of the target groups. We are in areas where people do not have ID, do not have papers, don't even have a birth extract. So that will need to be improved with assistance from the governments to expand access to financial services. And then the development of acceptance, transfers, payments, of course, but payments are taking a long time to take flight because of issues with acceptance. And that requires cooperation between the central bank, the states, and other stakeholders. The target is not to just have a cash-in, cash-out transfer, but to leave the money on the account to try to move towards a cashless society. And that needs more extensive acceptance. We also noted, I think it's the same case in our region, compared to what Laura was saying, the low development of second-gen services, by which I mean services which should allow communities beyond just transfer and payment to move toward credit solutions through the availability, either by fintechs or financial institutions, of data they use during these transactions in order to assess or to rate these populations and grant them access to credit. And beyond that, to savings, of course, because the electronic wallet is not remunerated. And there seems to be a trend to savings in the electronic wallet. So perhaps microcredit and micro savings and micro insurance. So these are the four great challenges I wanted to evoke. I don't know if you'll give me a further opportunity to expand on that or discuss the experience of our central bank, because since 2006, we have adopted a regulation which favors and encourages the development of electronic currency. And That is a contribution to the statistics presented by Laura with a very high financial inclusion rate in our nation. So that is a bit of an overview of the financial system in our zone. More 500 institutions of microfinance, 46 initiatives in e-currency, 211 fintechs identified, just for the development of electronic currencies. And currently only 46 initiatives exist in our zone, most first generation services. Essentially, we must still work on second generation services, I was just saying. That's an overview of the financial ecosystem. The regulation came into force in 2006. First initiatives started emerging around 2008 and 2000 to 2012 with a few private institutions that received an authorization as e-currency issuers and a few banks that worked in partnerships with telcos. And then the banking model allows a bank that is already approved to issue electronic currency in an extension of its financial services, but also the non-banking model, allowing microfinance NGOs in remote areas that we wish to serve, who can help us to make a link between these people in remote areas. And there's a fantastic opportunity for us to build on microfinance to improve financial inclusion. And these microfinance instruments may be authorized to issue e-currency, but the private sector too can ask for approval from the central bank. And we currently in our zone, as I was saying, have 46 initiatives driven by 15 banks, 12 telco subsidiaries, 17 fintechs, 1 microfinance institution, and a national bank that issues electronic currency. I won't go into the details of the currencies, which are up here on the slide, more than 150 million e-currency accounts, which brings me back to the challenge I evoked earlier. Identification, digital ID for users of digital services, who's in the system and who's not. And I think that will facilitate things. I think the governor will probably go more into depth into these subjects. Thank you very much, Giselle Canindoy, for showing us how dynamic the development of e-currencies was in the UMEA zone under supervision of BCAO. There seems to be programs and cooperations in terms of regulating microfinance. Perhaps Stéphane Tabary will say a couple of words of that, so I won't say more. You're also talking about innovation from the private sector. And I'm therefore going to turn toward Philippe Garciot, who represents the private sector here. I believe you also have a few slides you would like to show us to talk about use cases, and then we will listen to Stéphane. Philippe, the floor is yours. Thank you very much, Thomas. Thank you to FERDI, Banque de France, AFD. This is really a wonderful day. It's a very important. We're talking about very important issues, and the testimonial from Mrs. Giselle Canindoy and the other speakers show that a lot remains to be done. And you talked about digital ID, you talked about remote areas. There is a lot to be done indeed to reduce the distance between individuals, to make sure that cash, the role of cash is also reduced because the informal economy is, of course, a very real issue. So I had a presentation here with lots of slides, but I won't go into all of these, of course. But the first part here is just to remind you of the main objectives You've already said so in a sense, but the important thing is to ensure access to services. The idea is really to make technology accessible to all. We saw what Findex said, because for some people it's still a little bit complicated. People have older phones, smartphones that are not the latest generation, and there are technologies that make it possible on older devices to deploy interesting services. And then, of course, the reduction in the circulation of cash is, of course, very impressive. As you were saying, when civil servants are being paid and they need to stand in line in front of bank branches, and they go and withdraw all of their salary in cash, which generates, of course, huge security problems. And then all of the stakeholders who are working at every level, financial institutions, fintechs, banks, central banks, and so on, are trying to provide technological solutions, and all of that moves in the right direction. And then people tend to overlook the fact that, of course, there's the reduction of cash, but also the emergence of credit, microfinance, technological systems on older IT systems. With the newer digital systems, it is much easier to work with credit. And the more data can be collected for borrower rating, the quicker that microcredit can be delivered. So there are, of course, plenty of institutions with great professionals who are very good at generating answers about credit, but if you want to expand on that, much more data is required. And then these new digital technologies are often cloud-based, and that's actually quite significant. With companies who have so-called APIs or communication tools, a lot of documentation, and I think that's also essential. It's also essential for central banks to have systems that work with levels of security and authorization that are state-of-the-art. So, second point, in terms of technological evolution, I'm a former general manager at a bank. I'm not an IT man, but for the past 40 or 50 years, banks have been using the same sort of legacy systems, which have worked very well and which are still continuing to work well, but it's very complicated to integrate all of the new innovations and new technologies. So we really need to leverage open architectures, and that is really essential. We need to be agile and open to streamline the exchanges and reduce the use of the informal economy. And for these banks and financial institutions, they need the digital architecture, which are also going to help to bring all of these communities closer. And that's the essence of what central banks do today, as you were saying, madam. Which brings me to the end of this slide. A few important points. So for digitalization, for the development of financial inclusion, as we were saying, things need to be simple. We need to have increasing numbers of people, but it also needs to be frugal, if I may use that term, because very often operations and systems are far too expensive, which is very much the case in legacy banking systems. So you were saying that it started with telcos, but banks, alongside their conventional banking systems, are launching new products based on new technologies that are far less costly, with so-called lower operating costs, lower overheads, making the actual price of services much more affordable, because people need to use these services. So as I just said, we need these services to be very competitive. The digital tools that also consumed less data because in former systems, and I don't want to be overly technical, but there are a lot of tiers. For instance, in a legacy system for the same customer, you'll have 10, 20, or 30 times their address, the postal address, or some people don't even have an address, so and then not access to the bank. So there's in fact a central database, and these systems work. Those that are based on legacy phone systems are much more frugal because they don't require as much as what legacy systems require, not as many resources. And for the new innovative services, you talked about what is available. I have a couple of screenshots. Maybe I don't really need to show them to show how simple and accessible things are. With one smartphone, you can access all of these financial services. And then, of course, telcos play an essential part in this, but banks and financial institutions also use. I think we can skip these. It was a bank in Mauritania that had a system alongside its legacy system, a large Mauritanian bank, Masri, a digital payment system that's absolutely spectacular and that is being deployed very fast. So the if you want to move forward, I have a couple of screenshots there. It's very important for the banks to embrace this, and it's what you were saying, because banks now allow people to send money to each other, whatever their phone operator. There's increased interoperability, and in conclusion, I would like to say that what is essential is to really jump into that virtuous circle, reduce the use of cash, start to develop savings, and increase credit solutions. And if you still have another couple of seconds to show you that this is a screenshot, pretty simple and straightforward. And so, I mean, you can send money to just anyone, and there are also geolocation systems. This is not a good example because this is France, but it's actually quite easy with a number of sort of virtual bank branches, remote communities have greater access. There are no bank branches, but with these digital systems, it's now possible to create virtual branches. It could be just a corner shop or a service station who can help to offer banking access to remote populations. Thank you very much, Philippe. I think we have successfully identified the obstacles. As the two previous speakers were saying, we were talking about education. Perhaps not so necessary for first generation financial services, for second generation, which are perhaps more important. These are two important elements, but as Philippe was saying, the development of easier apps probably brings costs down, but also lowers the entrance barrier. And then we're going to listen now to Stéphane Tabary from the Direction Générale du Trésor. Maybe perhaps you could tell us about the development of financial inclusion and how it fits within France's foreign development strategy. Perhaps a couple of systems. Over to you.
Thank you, Thomas. Thank you, everyone. I'd like to thank the Banque de France for inviting me to the seminar. And was not able to come because of a G20 consideration. But they're also going to be speaking about financial inclusion in Africa. Now, there are three topics in our service in Senegal. But first is to do with the priorities in financial terms. The second is financial and economic changes in sub-Saharan Africa, and also running bilateral development activities in the AFP. And this is kind of the confluence of all of these aspects, in particular with respect to the African question. Sub-Saharan Africa is in a very strong growth period, but there's a very strong, something very important at stake. It is financial services. And the digital revolution is the way of accelerating adoption. I can cite as many figures as you've just seen from a colleague from the World Bank, but there are two figures that seem quite striking. The first of which is that over 10 years, between 2011 and 2021, in level of international went up from 50 to 76% of the world population, which is spectacular in terms of inclusion. This is thanks to digital technology, because financial services of a digital nature went from 35 to 57% of the population, which is considerable. Now, this increase is notable in Africa, and I'm going to repeat a figure that was cited by the person from the World Bank. That was in sub-Saharan Africa. You have 33% of the population on the continent that have phone access to banking services. Now, that was only 10% worldwide, so it's 3 times more than the world average. And I cited the governor of the Banque de France. From this point of view, Africa is really on the leading edge of this technology usage. You have electronic portfolios. They're really starting to transform that whole financial landscape in Africa with innovative multiple solutions to facilitate integration of the population, especially in the more rural areas, and to reduce the cost of transactions. Nonetheless, if we stay with just what's at stake, we observe indeed that this makes it possible to limit the use of cash and reduce security issues against all kinds of attacks, to speed up the time required for processing. So now problems with this creates a favorable approach to what's going on in companies. From the point of view of citizens, it makes things more secure for their savings. There are women now that until now had less access to these types of services and the effective positive effect had a lot to do with the public sector, both the payment of civil servants. Now they can pay their taxes online, which reinforces efficacy of the public sector, as we've observed in France and in Europe, because we also observe the same thing happening in Africa. Now, in terms of the challenges that we have in the ministry, many questions have been cited. I want to insist on a few. For implementation of adequate regulations in the government was cited. We also have the point of view of financial intermediaries for developing this type of services. They require investment in systems that are sometimes costly, which sometimes are difficult to implement. Sometimes there are problems of finding the right people to put into place the system, develop it, and so forth. And also cybersecurity and data protection issues. There's identification issues, identifying people, which is sometimes difficult in terms of the actual status of the person. So from this point of view, with respect to these challenges, France and multilaterally have dealt with a lot of digital inclusion is its #1 priority. Now, in the G7 in 2019, during which we set up a roadmap, and I'd like to go back quickly over the 4 initiatives that were taken and promoted by France in this respect, and the digital means, digital resources. The first is the Africa Policy Accelerator Initiative. This was the UN that was encouraging reinforcing capacity of the African governments to implement policies favorable to financial inclusion, with the co-creation with the governments, with a view to creating working environments for development for digital financial services in Africa. And France supported this program with other partners from the G7. The second initiative of the African Development Bank, Africa Digital Financial Inclusion Facility, which targets reinforcing financial services ecosystem with private players by promoting technological innovation and regulations adapted to private players. One specific component was priority of the French presidency in G7 on financial inclusion of women, which we observed that this has had very beneficial effects on the inclusion of women in the work and the labor market, and also in the financial access possibilities. Another important initiative, and I think that this was referred to, was identifiable element. Now, this is really an echo to what Mrs. Barreau was saying. Now, to develop digital services while still ensuring adequate protection for consumers and financial institutions that implement such technologies, we need to have the ability to identify account owners, the beneficiaries of the various transfers. Now, that initiative on the part of the World Bank that Francis contributed $15 million to is working on that dimension. And lastly, the last initiative, which is also totally in line with those objectives, and that is the program Digital Identification of Unfinanced Initiatives in Africa, which is an initiative in terms of research and assessing methods for assessing financial inclusion of women. To build data which will make it possible then for financial intermediaries to target beneficiaries and their bank accounts. From this point of view, many things have already been done. There are initiatives that are going to have to be there over the long haul. Building capacity takes time, but on a bilateral approach, we have activities which target both sustaining financial independence using digital technology. This is done by the AFD group and the private sector, Proparco, and they're ramping up of that response to that challenge. In 2001 to 2010, there were 40 million euros a year for support in microfinance and various other interventions in the digital world. 150 million euros per year now. In the last 3 years, we've done more than multiply that amount by 3 to accompany the development of these types of tools with a support which is not co-financed. In other words, this is our own equity. This fund was a development fund to support SMBs which want to go digital. Now, this is a financial solution, but also an administrator who's a specialist in digital infrastructures and data protection to make it possible to ramp up the capacity of these funds. The technical assistance is often help is often given in this respect to reinforce the whole technological aspect and data protection knowledge. This is extremely key. And as you know, since the summit on African economies a couple of years ago, one priority in Africa was exactly that. In other words, there are constraints that sovereign governments are concerned, whether it be indebtedness. And the key to sustainable growth is to develop a private sector and this individual investment of companies in formalization, which requires reinforced usage of digital technologies in this respect. And that will be one of the issues at stake during the summit in 3 weeks now, the summit on the new Worldwide Financial Pact, which will be mobilizing the private financial sector to standards. And that will be a priority for action and partners that are invited. Because obviously, investors in northern countries need to find in partners, and partners need to be formalized and properly identified to obtain financing so that can be made fluid and secure. And one last word to underline a point that the governor spoke about in his introduction in terms of the cooperation agreements with central banks in Africa. From this point of view, the issue of digitalization of central banks is also part and parcel of what we're working on actively. We grouped together several people from the ministers and governors of Central Africa governments. We talked about setting up this for Central Africa, certain putting into regulation for governing crypto activities, and also central bank management. And colleagues from the Banque de France were able to share what was being done in euros in France and developing technical cooperation in that respect. So that's another dimension we're following up on so that we can accompany central banks in Central Africa on the efforts they're making. I hope I haven't gone over. I'd like to respond to one point, sir, because the AFD tries to be innovative in terms of financial services. I could cite a couple of examples. The first of which, during the COVID period, we had adaptive social efforts, a very socially needy time. The idea was to set up the Innovacy program to provide resources during a health crisis. We've always been interested in a form of adapted social protection against natural catastrophe, which are certainly going to be on the rise. And we have to base this on services that are already pre-established and with a very complete knowledge of people's identities in a given geographical area, so make it easier to relieve people in terms of climate change incidents. Perhaps we can take a few questions from the floor. We have a little bit of time for that. If there are people who'd like to express themselves, to make comments, there's a couple of hands raised here. Perhaps we can grab a microphone. We will need the microphones if the interpreters, if you, okay, hi. Christophe from FERDI. In fact, I would like to have queried the woman from the BCAO who I'd like to congratulate for her interesting overview. Now, the question you shed light on in your work on digitalization, on the database coming from telephone operators, GSM-A1, shows that there's a big difference between adoption of digital technology in the existence of a cell phone and the usage people make of that phone. So that's an important case. In 2019, data was in line with Findex. In 2019, we had 76% of adoption, 34% of people in West Africa, in the EMEA area, were using their phone to do transactions from time to time. And active users were lower. If you look at the figures in 2019, only 1% in Niger, 20% in Cote d'Ivoire. So interestingly, and this is the question I wanted to raise, the point that's put forward the most in GSMA, and you understand where my question is coming from, because it's telephone operators that are asking that question, is the lack of interoperability of agents from that use these services and provide them. They're citing this is a factor that's important for them because they're looking at what exists in other regions of Africa, for example, where in Eastern Africa, they don't have a shared money, so that they need more interoperability. So I'd like to get your reaction with respect to that. Is there anything ongoing in that respect? Thank you, Christophe. I'm going to take several questions and then we're going to have the panel deal with those. Don't forget to turn off your mic. I'm Mr. François Goubat, chair of a think tank working on global rural development. I'd like to react to the person from the BCO who spoke and insisted upon the structural part of access to financial digitalization, especially for rural areas. We have thought of local solutions for that. We wanted to see how we're working and how we can work intelligently with the telephone operators, given that the cost, and I'm insisting on the data cost, does not make it possible to have access to the telephone network, and the structure doesn't exist in the rural areas. So the financial transactions that are done is 80% in urban areas, but outside of that urban area, there's nothing. It's black. And I'd like to know what interactions are possible between telephone companies and administrations, and obviously classical financial institutions to accompany structures in the development in rural areas. Thank you for the question. I have two more questions. Christian, and then you, sir. Hi, Henry David from a review called Literary and Artistic Africa, which is also part of involved in this issue. Madam, you spoke about problems of identification. There's a general problem in all countries in Africa in terms of to have reliable demographic statistics. Another problem from the banking point of view is the whole issue of address. Not everybody has an address. Nobody have a post office box, and I don't think that new technologies should be placed in the service of development of that. It does not mean that it's not because they never did it before that it shouldn't be done now. Otherwise, you're going to have an imbalanced system. The great new technologies are going to be in Africa. We explained that, statistically that there were 30% of bank transfers were done by a mobile phone, and in other countries, in Western countries, that's only 10%. And the other problem is that new technologies are all well and good. It's great. I was shocked to see the conditions to opening banking accounts in some countries in Europe were so difficult that it was like, cell phone companies that replaced banks. But whatever the facility of transactions using these new technologies, it doesn't change anything with the problem of being able to the cost of responding to needs and cost of living. I'd like to thank my colleagues from the AFD who are present and help me to prepare this session. Christina, thanks to all for these interesting questions. Now, I'm from the AFD. I'd like to get back to a point that personally I still rise to questions for me within the perspective of the summit planned for June. It's the access to financing for very small companies. Getting back to the case of Brazil, where I also observed that you can buy on a street corner, not there are people in the street that give you their QR code so that you can make donations. So there's an incredible acceleration in usage of all types of payments. And the Findex that Laurie was speaking about, Brazil is one of the countries that has more than 80% of financial inclusion. In this country, what we're observing is that the TPE, the very small companies, the credit they're developing are consumer loans. And I have the impression that the whole issue of financing TPMEs still remains post, and access to loans as such, sort of middle term or investments, very small loans are very much the business, as Mr. Tabari says, of microfinance institutions, with support, obviously, from the public in order to mobilize the private sector via financing at that level. Nonetheless, with respect to that, I think that progress is kind of slow. So what possibilities do you see happening in the future in terms of digital platforms that have a great deal of merit because they're starting to make these connections? I'm thinking about farmers and farming companies. They're getting them together with not only with financial services, but with access to, to buying fertilizer or to outlets for their products. So how can we explore that in terms of digitalization? Thank you. I have another question, Jacqueline, and after Madam. Very short questions, and then we'll have to go back to the panelists. In fact, these are questions of participants that are online. So we have a bonus. There's only one. An observation, first of all, is that the development of digitalization supposes a parallel development of education, and people to information technology. And the second question has to do with Madame Doyle, to know what are the challenges for microfinance institutions with respect to digital financial digitalization, which is maybe not easy to access in terms of cost because these are very small companies in many cases. Madam? Yes. Hi. Corinne, merci. Ian Group. My question goes back to what the gentleman was saying about the fact that ultimately there are rural areas that are not covered by any network whatsoever. So the utilization of a mobile tool has no meaning for the moment. So my question is as follows. Will central banks envisage using, particularly for this type of case, why not, and other cases as well? I'm not going to go into this for the question of time, but to use tokens ultimately that would be charged or loaded with digital money, and that would make it possible to unload them, as it were, and to make payments and to reload as necessary without needing to access a network. Thank you. Thank you very much for your question. There are a lot of questions sent to the BCIO. Please stay to the end of the day's proceedings because the governor will perhaps be able to speak to some of these things a bit later. Mr. Governor, would you like to ask a question to the central bank? Thank you very much to the moderator and the panelists. Just one observation, really, and this is really intended for our panelists. I'm speaking about on the level of developing financial digitalization. We've seen for Africa that 55% of banks have, and there are 33% have electronic banking. If we know that for cash, it's the whole population that uses cash, we're not excluding cash, but 45% don't have access to digital. Are we not likely to have two poles? One that is developed via digitalization, and the other is still back to cash. And this goes to say that financial inclusion is a priority. And we can see that inclusion is moving forward more slowly than the financial digitalization. I think we should move faster with financial inclusion so that digitalization can have more meaning. Thank you very much. There are 10 minutes left. I'd like to ask each panelist to give their responses in just 2 minutes for an overall conclusion. I think you've had a few questions for you, so we'll do them in backwards order. Yeah.
Commencer par la première question qui concerne les sociétés de télécommunications. Chez nous, ce sont des filiales qui sont agréées en qualité de monnaie électronique. Et certes, c'est vrai que depuis un
So yes, indeed, it's true that for a while, a lack of interoperability has been identified. But I'm very happy to say that this is currently being managed by the central bank, which is developing a platform for interoperability of digital financial services that will be up and running this year. You also evoked, there are 2 points, 2 important points. The question of inactive accounts in UMOA, or even globally. What we define as an inactive account is an account that has had no transaction for a period of 3 months, but I think that will need to change. There are global discussions in terms of the revision of our instruction about electronic currency, maybe 12 months, because if we look at just 3 months, there would be a huge amount of inactive accounts. And as we are above average in Africa, so that would be to answer your first question. On the other points, ID issues and reliable statistics and postal addresses or addresses that we do not have in our countries. As for the single ID or the unique ID, it's very important to have an identifier for each user. For countries like us, I'd say that most of the population would be excluded if that would be required. It's therefore essential for central banks and governments to think about how to create this unique identification. The BVN, the Bank Verification Number in Nigeria, is a great example. They have great challenges in terms of identifying users, but I think that biometric solutions could offer solutions, because all of these people we want to include live in remote villages. That's where the trust that exists locally with the village chief, for instance, or the organization, the conventional social organization could provide such systems, and that would probably encourage financial inclusion. And then I think I haven't answered the question by this gentleman. The question about local solutions, how we can interact, how telecom operators can interact with conventional authorities. What we did in UMOA, I told you about the banking model and the non-banking model. There is a very strong collaboration between the conventional banking sector and new entrants, such as fintechs. So all of that is ready to expand things. That's why interaction is important. When we examine these cases, we really want to reach an understanding to allow us to regulate and also see what use cases would need to be developed. So indeed, cooperation needs to be strengthened to develop use cases beyond the actors of the conventional sector or new entrants. We also need to reach other sectors of the economy, such as transport, healthcare, and so on. The objective would be to for the money to stay in the system rather than be withdrawn, by developing use cases to make sure that the users stay in the system. And that means facilitating the customer path, and that goes far beyond interactions with the regulators. Every element of the state, of the government, must be present to make that link to move towards a cashless society. Thank you very much, Giselle. Alors,
rebound on the comments that you heard, or maybe make a final statement. Magda, floor is yours.
Thank you very much. Well, it's all very interesting. I would give just a few observations on a couple of the questions that were posed. One was actually online. I think it was on financial education for ordinary people who actually do not need to know regulation really, but do need to know how to properly use financial instruments and to know their rights, also which kind of protections they might access to, whom to ask, and in some cases also their responsibilities. For example, in the EU, in the European Union, if you do not properly keep your credentials for payments, you might not be reimbursed after a scam or a fraud. So you need to know your rights and your responsibilities. I think here the major challenges are really how to reach adults. Well, of course, it's important to work in schools, but that's in a sense easier. How to reach adults? I think here we have to work on two levels. The first is a general level of awareness of everybody using both digital tools, but really also traditional ones, say national TVs, programs, and so on. And the second level is really going deeper into education that address really behavior of people. And this is really, really complex. You really need to work with a strong methodology, understand the needs of specific groups. You really need to work with specific groups, women, elderly, migrants, other vulnerables. They all have different needs. So understand specifically their needs. Secondly, work with specific methods, which means language, but also places to reach them. And then third, very difficult, impact assessment. Understand what really works and change adapts. So that's the first point. The second is the issue of access to finance for MSMEs that was raised by someone with the example of Brazil, I think. Here, in general, I think digitalization and technology really offers, in principle, huge opportunities. We are working as GPFI on this. We are producing what we call a living database, which will be present on a website in terms of innovative methods of financing of MSMEs, micro and small and medium enterprises, innovative financing methods also beyond credit. And as I said, digitalization offers huge opportunities in terms of business models, e-commerce, the possibility of selling also if you're in a niche market, but also in terms of management, organizations, in terms, of course, of financing, in terms of the possibility of credit scoring, which allows access to micro enterprises which have no history of data, of insurance, and various instruments. The issue here, I think one of the challenges is that we have no comparable data. We still have a huge data gap in terms of financing needs or financing gaps of micro and small enterprises. Hence, we do not have something comparable to Findex, which has been an immensely important tool to do, peer evaluation, to propose objectives to reach for members, for countries. So this is, I think, an area where we really have to work because it really helps inclusion. It really helps addressing the gaps and the needs. And I hope we will be able to do it. Thanks a lot.
Bien, merci beaucoup Magda pour aussi insister sur l'importance des données qui sont en effet la nourriture des systèmes financiers.
Thank you very much, Magda, for telling us how data is really important to fuel the system. And perhaps the words of conclusion from Stéphane. So I could just answer part of that with an example from Brazil, which is a country where I lived for a number of years. The issues in Africa, as we see it at the Direction du Trésor, is of course access to financing for very small businesses, identifying them, and then allowing them access to microfinance. And then on the other end of the spectrum, there are businesses that are well identified, either medium or large size businesses that can access the local communities. And then there's the missing middle, companies which have already been formalized but don't have the references or the clout to access the conventional banking system or international institutions. And what we are trying to work with on a multilateral level is how we can develop the de-risking of investments towards these entities there for potential lenders. Either we're supporting local financial institutions or banks, investment funds, or live through entities such as Proparco by mitigating the financial risk for them and creating an incentive for other European or international players to move towards direct funding of these types of entities. But it is a very strong and very tough challenge, which will probably be at the heart of our discussions in the June summit. And then perhaps to come back to Brazil, a country I'm quite familiar with. In fact, there's a total duality of corporate funding because there are public banks that fund a huge amount of corporate investments. And for those who cannot benefit from these public funding solutions, private lending is extremely expensive. So that's a structural problem. Thank you very much, Stéphane. Maybe Philippe, you were talking about applications for private individuals. What about SMEs? What would you like to add? Yes, thanks. Well, I'd like to answer the AFD's question, which is very interesting. But before that, I just wanted to say that these new systems are indeed digital. I'm here representing Scale It, but they're not as costly as one would believe. We're really not talking about the conventional IT spend, which is why there are so many projects that emerge, because, get in touch with private operators because they can offer technologies and systems that are highly competitive price-wise. So to answer AFD's question, I have two interesting and concrete examples that could work with Scale It. You have a farmer in a field, there's these virtual branches, and he needs fertilizer or pesticides or whatever. He takes his phone, calls the agent, And the bank has a partnership with a large cooperative that sells such and such product. And an hour later, the bag of fertilizer can be brought to his field. And then he can press a button to ask for a loan. Same in construction. Increasingly, people no longer need, if they lack materials, they don't need to lose time. They can have the materials shipped on site and obtain a loan. Same goes for fisheries on the Atlantic coast. They can send messages to their customers and say, I have such or such a variety of fish, and then they can receive an approval with a real-time bank transfer. And they will know that such or such a customer has bought such or such an amount of fish, and they can just put the crates onto the key, and it will be picked up by the purchaser. And then there are examples in Kinshasa, for example, in Mauritania, plenty of other places where gradually, in Burkina Faso also, La Générale had done that with Yup. There are plenty of use cases to boost access to credit by SMEs and craftsmen and so on. Yeah, it creates issues of interoperability and regulation to make sure that these apps don't become unregulated banks.
Thanks again for taking the time to set the scene initially by presenting a global Findex. So if you want to either to rebound on a few of the questions that were asked or make a final comment, and again, many thanks for the very important and interesting presentation that you did initially. Leora, you will have the final word.
Thank you, and thank you for joining this wonderful conversation. Just to comment on the various questions, to reiterate the importance of what we've seen, the benefits of investments in digital public infrastructure, like digital ID and connectivity, basic connectivity, mobile coverage, which is especially important for women to access local services. We've also seen the critical importance of a well-supported and enforced regulatory infrastructure, both to support agent networks, including the governance of agents, as well as interoperability, both between mobile money providers, but also importantly between banks and fintech mobile money. As the governor mentioned, it's also important to develop the complete digital ecosystem. And so not only, for example, digitizing some government payments, social transfers, wage payments, sales of agricultural products, but also the ability to use your account to make payments. For example, digital public utilities, which again is more than just a convenience, in that it can lead to more on-time payments, but also now critical for the development of various greener electrification pay-as-you-go models. But also quite importantly, the development of digital payments allows people to keep their money on their phone, which is safer, which research shows can lead to greater savings, but can also help address some of the funding challenges mentioned, both for individuals and small firms, by allowing, for example, merchants to develop that digital payment history that's excitingly being used in other regions for various embedded finance models, but even just more simply, creating that payment history that can be used to access appropriate credit. So thank you again for the invitation to join you.
Bien, merci beaucoup, Leora. Thank you so much, Leora. Nous avons pu faire tout un panorama à la fois de l'innovation technique,
Thank you so much, Leora. We had an overview of technical issues, of ecosystem, infrastructure, identity, regulation, customer protection, international agenda on financial inclusion. Many thanks to all of our panelists and to the audience for their questions. I think we're going to break for a few minutes before we resume for session 2 in 10 minutes or so. Thank you very much. I don't know if anyone has an announcement to make on the microphone. If not, enjoy the break.
Thank you. Bye-bye.
We are a bit late, but if we try to conclude on time nonetheless, because there's a lunch, we have an hour and a quarter. So we're going to start our discussion on the second topic. And this session is called The Impact of Financial Digitalization on Sustainable Development. So a couple of words about the title, a very solemn title. So the impact. It was clear at the end of the very interesting previous session via the questions that were raised. It was clear that the listeners were extremely concerned about the impact of this extraordinarily important movement and dynamic movement of financial digitization. And with respect to sustainable development, now this should not be simply, how can I put it, a ritual expression. Either development is either sustainable or it is not. But we need to remember that in the word sustainable, there are several dimensions. When you talk about, there's an economic dimension, a social dimension, and an environmental dimension, in climatic mainly. And in sustainability, the same is true. The question that we're going to try to deal with here during this panel is to know what the impact on these three components of sustainability, of growth, we can see through the extraordinarily fast expansion of coverage of digital tools, that there's doubtless an impact on growth. But economic research is actually a bit late on with respect to what's actually happening in reality. The impact on growth is a kind of, you feel that it's coming, but it's not really proven yet. So the risk of instability of growth was spoken about, notably by the governor in his initial presentation. Very important questions were asked, notably by the French Development Agency, the impact of digitalization on local entrepreneurial development and SMBs. We need to know a bit more about that, and the impact in terms of stability. And how can I put this? In this, that the government and the impact of digitalization on a better regime for exchange, and the impact in social aspects was dealt with significantly this morning in terms of coverage, the gap between rural women and city women, and the final question is, what is the impact in terms of poverty? And I think that here again, we need to know more. The impact on information is also very important. There are advantages and disadvantages to that, as the governor said, but he'll certainly be speaking about this later. Digitalization is not necessarily inclusion, and that's something we have to speak about. And sustainability in terms of the environment and climate change. Is digitalization a tool, is an effective tool to reduce vulnerability in the climate sense in terms of resiliency? So there are many questions out there. I'm not certain that we'll be able to deal with all of them, but we have eminent specialists with us this morning for the next hour. The first presentation will not be by Céline Rochon, who's she will be speaking first. She's a senior economist from the International Monetary Fund. There are 5 people we're going to hear from, and 5 are on Zoom. And we'll have the governor Youssane Aymani, who's the governor of the Central Bank of Comoros. And it's important because he's a governor of a central bank, but he's also the governor of a country that is actually has the presidency of the African Union currently. So we'll have your point of view as of the independence of the central bank. So we'll be hearing from him. Then we will hear from another person from the International Monetary Fund, Purva Kera, who will be speaking in English. And we'll be seeing her on the screen. Then we'll hear from Franny Leotier, who's Chief Executive Officer of Southbridge, who used to be in charge of the African Development Bank. She's actually ill today. She was going to be with us. I hope she'll be able to speak from her room. I don't know, if, Franny, if you're there. Yes, she's there. I am here.
Je ne suis pas présente sur l'écran. Mais je suis là.
I'm very much present. Thank you so much. If you could speak despite your illness. And Sheila Okiro, who's Chief Investment Officer at the African Development Bank. Sheila, are you with us?
Good morning. Yes, I'm here.
Je suis là, bonjour. And Vera Songwe, who's chair of the Liquidity and Sustainability Facility, and who's the co-chair of the high-level expert group on climate finance and non-resident fellow at the Brookings Institution. Vera, are you with us? Yes, I'm here. So let's start. We'll first hear from those that are present. So the introduction will be by Céline Rochon. Let me hand over to you. Thank you, Patrick. I wanted to thank the organizers of the conference and the Banque de France, FERDI, and the AFD. First of all, perhaps the usual comments. These are my opinions and do not necessarily represent the International Monetary Fund. Let's get down to the heart of the topic, the impact of digitalization on the environment. A few words, first of all, about sustainable development. The ecological and social crisis in the world, which is manifested by by climate change and the using up of resources, the lack of fresh water, and the tension between developed and less developed nations, deforestation, growth in the world population, diverse natural catastrophes, which are increasingly frequent. And now we require a response, and that response is sustainable development. And this is necessary on the part of governments, but also on the various economic players in development. What's interesting, obviously, is that sustainable development concerns all sectors, from agriculture to industry, family organization, services, and here there's tourism, but also finance, which will be the topic of today's proceedings. So I wanted to go over the spirit of the sustainable development issues and as translated into the Brundtland report. In terms of sustainable development, we know there are 17 goals. What we're trying to do is to find a consistent balance over the long haul between three issues in human activity: mental, social, environmental, social, and economic. So what approach do we need in order to succeed in meeting these responsibilities? And there's also challenges linked to poverty, inequality, the climate, degradation of the environment, responsibility for peace and justice. Now, in the Brundtland report, which dates back to 1987, sustainable development is defined in these terms. And I think it's interesting to say here what's mentioned. Sustainable development is not a static state of harmony, but it's the process of transformation in which the use of natural resources and the choice of investments, the orientation of technological institutional change are made consistent with the future and with the needs of the present. Along the same lines, the General Secretary of the UN entrusted a special task in this respect and the broader approach to financing of sustainable development by 2030. Now, the mission of the special team was to provide recommendations to catalyze the utilization of digitalization to facilitate the adoption of sustainable development. They produced a final report, and in this report, they're seeking to give conclusions and recommendations that were developed such that to shed some light on this issue. This was published in 2020, and many of the remarks during the presentation will be referring to the same report, to this analysis that was led by a special team designated by the UN. First of all, the idea is to define some terms. When we are talking about financial digitalization, practically speaking, what does that mean? I'll cite a few examples. We all have in mind thinking about increasing use of mobile banking. We're thinking about fintech solutions that I will get back to in a few minutes. We're thinking about digital banking. We're thinking about digital investments and the use of blockchain technology. Now, insofar as digital financing is concerned, there's data with it's less costly, more accessible, thinking about reduction in the cost of financial intermediation, and also about different innovations, both in terms of the products financed and the companies and markets involved. So when you think about financial innovation, you can't stop thinking that what we spoke about in the first intervention. It's going to help us to encourage the financial inclusion. How to do that? Well, not only this is going to reduce poverty, but it can also lead to a reduction in inequality. So what's important is that financial digitalization can ultimately lead to an increase in economic growth. So the question that arises, in fact, is how can one exploit digitalization to help finance to reach sustainable development goals? Now, what is the way forward? For example, we can think about accelerating the actual usage of national savings for long-term development. You always have to place this with the point of view of a long period of time and avoid short-term thinking insofar as possible. So the idea would be to improve the responsibility of public finance. We also might need to be able to ensure that the sustainable development goals actually have a place in financial markets worldwide, and they report back to that financial market. We think, as was said in the beginning, financing SMBs and middle-sized companies, and also in terms of individual citizens, how can you do to talk about consumption? Because too often, citizens' expenditures don't necessarily reflect concerns about children, about inequality, and about the environment, and so forth. So the idea here is, well, to think about that. So concretely, I'd like to give you a few examples of changes that we observed linked to financial digitalization. Now, certainly, the digitalization led to very important changes in the traditional banking system. For example, opening accounts online, which reduced the cost of bank account opening. We can also think about mobile payment systems, which led to changes in bank settlement procedures. You can also think about the fact that there are an increasing number of countries in Asia, in Latin America, and Africa, and in Europe, and in the US that have set up fast payment systems to make those funds available instantly. In Africa, in Nigeria is an example of that, which is very significant and needs to be noted. As was mentioned by the governor and another presentation this morning, we also saw that there are many central banks in the Bahamas, in Nigeria, that have started digital banking money in the central bank in several countries that are currently doing research in pilot studies, or they're even close to be able to kicking off the real official digital money in China. Another example which comes to mind is the fact that banks are increasingly using artificial intelligence and advanced analysis to assess more effectively the risk of loans and to grant loans to more people. So these are just a few examples of major changes linked to financial digitalization and the use of digitalization. Obviously, as time goes by, we can expect that there will be further examples of change that will come forward to promote the objectives of sustainable development within the various economies. Even if we note all of the positive factors which digitalization can incur, there are also obstacles and risks that need to be surmounted to reach and to remodel finance, and also to exploit the potential of digitalization in financing sustainable development goals. Amongst those obstacles, we can cite problems linked to digital infrastructures, which are often inadequate. We can think about access, which is inadequate, to digital connections in various systems. We can think about the lack of digital services which are affordable and secure. We can think about the problems having to do with inequality in terms of capacity. Here we're talking about poverty and social standards, or very simply, the lack of digital capacity and financial capacity, which can be an obstacle for adoption. And this would reinforce inequality as well. As was indicated previously, the lack of data is also a problem in many countries. So those are the obstacles. Now, what about the risks? And we can think perhaps there are a significant number of risks. There's a whole problem of data security and fraud. There's a problem of inequality between men and women, the increase in short-term thinking, super vulnerability, concentration in certain markets, and also the fact that in many countries, regulations don't cover everything, or maybe there isn't any regulation. So these are areas that require a great deal of thought. So the problem of inequality is still there. That's an important problem. And what we would like to avoid is inequality that's excessive. That would be an obstacle to growth, and that would mine the best efforts of the country to develop. Now, we need to correct inequality. And to do that, the government or several governments want to base their efforts on budgetary issues. These will remain essential tools, but you also need to think about the financial sector, since the financial sector can also work in depth and sustainable on inequality with effects that are positive and negative. So clearly, excessive financialization can feed into inequality. And so we need to find a fair balance between too much finance and too little finance. Now, in a certain way of thinking, you can think that our world is inundated by finance, but finance is not necessarily aligned with the objectives of sustainable development because of various gaps, the lack of clarity, the lack of standards, and the traditional weaknesses of institutions and markets. Now, in what we're interested here today, the impact on sustainable development, it's important to remind us that what is included in the discussion about inclusion. We talked about it quite a bit, but I'd like to get back to some research done by the IMF and the difference in growth in GDP of 2 to 3 percentage points over the long term between countries that are financially inclusive compared to countries that are less inclusive. So this is important to think about, that financial inclusion is a way of offering new possibilities. It's a way of enlarging the credit market. And there's also questions of debt and fragility. We need to have this be a source of stability, and the governors need to bear that in mind. Financial safety needs to be robust, but it also needs to not be uselessly complex. So what about fintechs? Invest entreprises are specialized in financial technology, which proposes loans throughout the world, prevents significant challenges for governments. They can work with companies in order to exploit the fintech potential and bat it while managing the risk as best they may. So there's a Bali project that was run by the IMF and the World Bank, and announces the main principles which concern the promotion of competition, better protection of consumers, and the purpose and the fight against leaking capital. This can contribute to the idea of the action of public authorities to reduce risk for banks and to create new jobs. So the Belly program and the way it was designed for fintechs was to align the digital finance with the objectives of sustainable development. Since we have this in the experts report that I just cited, their innovations in terms of governance are in fact the prior conditions to running digitalization and granting loans according to principles of sustainable development. This is to need to shed light on regulations in digital finance and the governance of a new generation of worldwide financial platforms with potentially cross-border effects needs to be looked into with respect to the objectives of sustainable development as well. We have reviewed certain of the economic effects of digitalization, and among the questions of note, there's also the question of the role of digitalization in times of crisis. And the question is to know what channel will we be favoring in terms of social and environmental objectives, and notably in the energy transition. So I'd like to turn towards these several points as well. First question is financial digitalization, can that increase problems during crisis? Well, a recent example of the pandemic certainly made digitalization much more important. Financial digitalization became a lifesaver during the crisis for billions of people. And innovation and investments supported the rapid extension of support to the more vulnerable groups. We're thinking about the expansion of the range and efficacy of the social safety net through the use by the government of payment platforms of a digital type. We're thinking about the fact that the world digital facilitates communications, facilitates purchases, and also facilitates, to a certain extent, work. And companies use this for their own business and also for electronic business. We're thinking about public efforts or philanthropic efforts to turn towards digital finance by drawing advantage from crowdsourcing to raise funds and to better target the people having needs. To shed a little light on how financial digitalization can increase resiliency during times of crisis. Now, what about the climate? Climate change, we no longer need to say this, right? It's very important today. Even the poorest population are often the first to pay the price. The reduction in carbon emissions require investments and financial support. Certainly, this affects the financial sector, which has not contributed significantly, and such that we can reduce carbon emissions to zero and that the objects of the purpose of the Paris Accord be respected. We can talk about the tariffs of loans should be better, would do better to reflect the consequences of climate change in the area invested in, to make proper usage of the financial sector along those lines. But we need to think about this at scale. And we need to change our point of view based on the horizon we are actually concerned with. Now, financial digitalization is also important when you talk about sustainable development goals that are linked to the environment. A few examples of that are of interest. I wanted to just cite them. Notably, digital financing can facilitate the collection of investment funds for green projects. Big data makes this possible to take into account the climate risks in the investment decisions. If we look at the blockchain, they're often used increasingly to support simpler solutions, less expensive solutions, to declare things, to verify, to check things, and to assess carbon involvement. thinking about the introduction of ceilings for funding in renewables, thinking about digital platforms on the carbon market, and also insurance products that are configured to support better resiliency to climate change. And I think that we could, over time, have new examples added to this list. And lastly, to get back to the last question raised about the energy transition, I'd just like to present 4 challenges to you that were identified in a recent article with the Finance and Development Review of the IMF that was published in December 22. First of all, the energy transition needs to be founded on energy security. In other words, an adequate provision at a reasonable cost to guarantee the support of the public and to avoid significant economic overthrows. So this is the first challenge, and the speed of transition is certainly the second most important element. The question is that how fast should this be happening and how fast can it be done? So there's a lot of pressure to accelerate the switch over in terms of carbon emissions to reduce it from 2050 to 2030, but the extent of what needs to be done is underestimated. The emergency of new north-south cleavages is important. There's differences between developed countries and countries being developed in the way the transition has to happen. So the new cleavage between North and South has to do with climate policy and transition policy on their impact on development, which will be responsible for cumulative effects and new emissions, and which will indeed be responsible for payment, which will be necessary. And the fourth challenge is that of ensuring new provisioning for zero net emission objectives. So these 4 challenges, North-South cleavage, and will all have significant effects on the way the energy transition happens. We have to make all of these work with each other in terms of their respective impacts. So a solution is possible, and that is a massively investment into green technology, such that we create value and jobs, making it possible to do more to help the world to go low carbon. Digitalization could make it possible to have a new generation of financial instruments and markets with the sustainable development. Because tickets financial could be essential in the fight against organized crime. Digitalization can also improve recovery of taxes due, and also to get back to the idea of data, the cheapest data and cross-credible data will also be necessary to grow the green markets and sustainable bond issues, and to reduce climate risk and take that into account in worldwide capital markets. So the growth in the digital world will amplify the opportunities and also the necessity to exploit these opportunities to reach these sustainable development goals over the long haul. And to do that, we need better data, more granular data, so that we can assess the social impacts, the more environmental impacts, and the financial risk. Thank you. Thank you. To have talked about the effect of digitalization.
Merci beaucoup et merci d'avoir resitué ce problème de l'impact de la numérisation par rapport aux objectifs de développement durable.
So thanks for evoking this in view of the SDGs, which shows how important digital impacts can be. We very much enjoyed listening to what you said. We're going to have other people in this discussion. I did note that you referred to research by the IMF about the impact. And I might be repeating myself, but I think it's one of the issues that our session have, because we see all of these different perspectives of impact, but we don't have much scientific research to allow us to assess that impact. It's still pretty normative. but we need to move forward. We can't obviously wait for scientists to have conducted their research. Mr. Governor, would you like to remain seated or would you like to go up to the lectern? The governor of the Central Bank of Comoros. I would like to thank Banque de France, FERDI and AFD for hosting this conference and for giving me this opportunity to speak before you today to discuss a very significant issue, the impact of financial digitalization on sustainable development. I have listened to what has been said this morning, and I would agree that digitalization has resulted in a reduction in the use of cash and has also widened access to financial services for communities which were formerly excluded from the formal banking system, including digital deposits, bank accounts, and savings. So we are in agreement that financial digitalization can contribute to the reduction of poverty by but then to return to the impact of financial digitalization on sustainable development, I would like to tell you about the experience in Africa and notably the experience of the Union of the Comoros, which has the presidency of the African organization. Of course, our population is only 1 million and the population of Africa is 1 billion. And we saw the brilliant definition given earlier. The economy, economic, social, and environmental. But development is only sustainable when it is shared by the entire population. And we saw that 55% of Africa's population is financially included, meaning that a large proportion of the population is still not included. And the issue is to have a more equitable and inclusive approach to the rural population, women, the formal economy, informal economy, illiteracy, and the population as a whole. And it's important to ensure that communities can also access technology, because without technology, one cannot develop financial digitalization, let alone sustainable development. Only 33% of Africans use the internet on average. 63% is the global average. So we're only 1/3. Before coming here, I asked the African Union, the department in charge of promoting technology, what their vision was, what Africa's vision was in these respects. And as part of its digital transformation strategy, 2020-2030, the African Union described this vision as aiming to create an integrated and inclusive digital economy to improve quality of life for Africa's population. Digital transformation is a fantastic opportunity indeed for economic development in every sector, with job creation, with a fight against poverty, reduction of inequalities, and the provision of certain services, notably in trade and exchanges. And it contributes to the Africa 2063 agenda, which is the equivalent of the UN's SDGs. And then there's the traditional, conventional, socioeconomic sector, and in fact, this was accelerated by the COVID-19 crisis. There are a few examples of success, economic, social, or environmental. We talked a lot about Kenya, which, with 1.3 million farmers, increased profits, and with mobile money, 1 million households were pulled out of poverty between 2008 and 2014. 2% of the population. In Tanzania, digitalization in water has helped to reduce the wait times very much, from 3 hours to 10 minutes. So huge progress, allowing women to do other things than stand in line for water. In Mozambique, after a number of floods, mobile money improved the lifestyle of villagers in remote regions with mobile transfers for their day-to-day spending. In Côte d'Ivoire, cocoa producers saved much more than usual thanks to digital savings wallets. In Liberia, as was shown this morning, a number of teachers could dedicate much more time to actually teaching than to standing in line in front of the bank to pick up their salary. That's the case pretty much everywhere in Africa, where people stand in line in front of the bank to get their pay in cash, their salary in cash. And then during COVID, there were a great many transfers through startups, education, payment of bills, utilities, and the Union of the Comoros, which I represent here, digital financial digitalization with, in 2019, a number of digital operators obtained permits, allowing a large share of our population to use online payment systems, such as electricity bills, which can be paid online, money transfers. The population of the Comoros is essentially composed of a diaspora who live in France, so 20% of our GDP is from remittances from Comorans who live abroad. And that is done, of course, through these money transfer services. And between islands in our archipelago, people can also save a lot of time to send each other money. And when money circulates quicker, it's of great benefit to the economy. So the use of money transfers is on the rise and has risen steadily in periods of crises, hence its effects on resilience. There were a number of hurricanes in 2019, and we noted that money transfers were much higher than usual. And in 2020, during COVID, when all the borders were shut down, both internationally and within our archipelago, the money transfers were up 30%, unlike what we expected, because we thought that during COVID, there would be a drop in transfers, and the opposite happened. However, if you think in terms of sustainable development, there's only a portion of the population, 22% of the population in the Comoros has a bank account. Add to that electronic wallets, you reach 30 to 50%, but only 11% of these electronic accounts are actually active. The challenges for the central bank are immense, which is why we have made financial inclusion our key objective through a modernization of our payment system, because the economy is dominated by the informal sector. 60% in our population does not really have access to banking services, and also acquiring a smartphone is a huge budget. So this program should allow greater access to financial services, interoperability, interconnection of banking systems, and financial education. And the major risk in this project is the infrastructure. We need robust and resilient infrastructure. So I was saying earlier that okay, I have been told to cut short. So what I wanted to say was that financial digitalization in the Comoros and the rest of Africa, when 2/3 of our merchants prefer cash to electronic payments, it is quite simply because there's a problem of trust, of financial education. And there you can really see that the use of cash, although it is dropping in other countries, continues to be extremely important in our country, which is why technologies have become much more reliable. And the priority is, of course, to popularize these digital technologies, but also to make sure that financial inclusion can be a key priority. Many thanks for your attention. Thank you very much, Mr. Governor, for this exciting and very interesting presentation. Just let me pick up on two of the points you evoked: the role of digitalization in periods of crisis with a dampening effect to facilitate transfers. It was true for COVID. It can materially be more difficult if there are natural disasters. Important point. And then another point that you evoked towards the end of your presentation, which I also believe is very important, is the circulation of information and prior education to make digitalization truly inclusive. Now we shall be listening to perhaps a briefer presentation for persons who will be speaking online in the order indicated on the program, which is also the alphabetical order, to avoid issues of protocol. And I think their presentations will be absolutely complementary. Perhaps Boubacara would like to take 5-6 minutes.
If it is a floor, I don't know. But can you take the floor for 5 to 6 minutes?
Yes. Can you hear me? Okay. Can you? I'm assuming you can hear me. So thank you so much. And let me jump straight into what I was going to say because of the short time. So I just want to start by saying, and this is repeating some of the points that Celine and the Mr. Governor made, which is that digitalization in financial services can really be a game changer for financial inclusion. Particularly, we know that in developing and low-income countries. So in our published paper, which is titled Measuring Digital Financial Inclusion, we measured the progress in financial inclusion in 52 emerging and developing countries through both traditional means, and by traditional, I mean bank accounts, bank branches, access to ATMs, etc., versus that through digital means, which is mobile money, fintech, online banking, etc. So we combined various data indicators from various data sources, looking at both the access side as well as the usage side. And what we found is that number one, in all countries, digital financial inclusion has been increasing over time. And this has been happening even before the pandemic, after which, of course, we all know and experienced that its uptake just accelerated. And second, that in fact, in some countries, such as in South Africa, in Nigeria, in Zimbabwe, among some others, improvement in financial inclusion in recent years is almost entirely driven via digital means, so not so much by traditional means. And this is simply because in comparison to traditional financial services, digital financial services are more accessible. You can access it over a mobile phone anywhere. It's low cost, it's more efficient. It provides much more flexibility and a lot of convenience. But what is interesting is that this is actually not the case everywhere. So while we found that countries in Africa and Asia maintain an overall lead in digital financial inclusion, there are significant room for further gains in other regions, particularly in the Middle East, in countries in the Caucasus and Central Asia, some of which still continue to feature large unbanked populations. Now, while digital payments are the most widely used, digital lending is also growing, and fintech companies are developing cheaper and more efficient ways to extend credit. So this data collected by the Cambridge Center for Alternative Finance shows that increase in loans intermediated by peer-to-peer lending platforms globally, and if we exclude China, increased more than 3 times between 2015 and 2020. And while it is true that the digital lending market is currently dominated by the US, UK, and Europe, we see that it is growing rapidly in some developing countries such as in Brazil, in India, and Ghana, among others. Now, you may be wondering, why should, as policymakers, why should they care about digital financial inclusion? And while the positive impact of financial inclusion more broadly is very well documented, we in our published paper titled "Is Digital Financial Inclusion Unlocking Growth?" we go a step further and find that, in fact, in more recent years, the positive impact of financial inclusion on growth and on reducing income inequality is mostly driven by expansion in digital financial inclusion. We find that an increase in digital financial inclusion from a country which is, say, at the 25th percentile to as high as the 75th percentile could lead to an increase in average economic growth of around 2 percentage points. And this is simply because digital financial services are found to help smooth consumption against shocks. And, we spoke about that in the context of COVID. And at the same time, the associated innovation and the developments in the digital economy enhances the overall productivity in the economy. And the last and one of the most important points that I would like to make is that while digital financial services have a lot of potential, its benefits shouldn't be taken for granted. As some other speakers touched upon this, it is leading to new forms of financial exclusion, which could worsen as digital financial services further expand. So, for instance, people who do not have access to digital infrastructure, and that means access to electricity, access to mobile and internet coverage, as well as digital identification, and those who lack financial and digital literacy could be excluded. Moreover, inherent biases in data and algorithms that are being used for, say, credit scoring or assessing credit worthiness could result in the vulnerable population being left behind and hence exacerbate existing inequalities. It is also important to adapt regulatory approaches to balance support for financial innovation with addressing challenges and risks to financial stability. To give you an example, data compiled by this India's central bank suggests that 60 out of the 100 digital lending apps that were operating in India in 2021 were all illegal. At the same time, stronger data and consumer protection and cybersecurity to bolster people's confidence to make digital transactions is also crucial. For instance, there are concerns related to unfair lending practices, such as digital lenders charging exorbitant interest rates, having additional hidden charges, using data without the customer's permission, and having very aggressive loan recovery mechanisms. For example, the default rates have almost risen to nearly 20% on mobile bank loans in Kenya. And lastly, investing in human capital is also equally important in order to ensure that innovation can continue to take place, as many low-income and developing countries face a shortage of workers with tech skills, which pulls them back in making progress. And I would like to stop there. Thank you.
Thank you very much. Thank you very much for these very illustrative examples of inclusion and exclusion. Maybe we can hear Franny. Are you able to take the floor to speak a few minutes?
Yes, Patrick, I'm able, and I'm just waiting for the organizers to unblock the video so you can see me as well, because I cannot unblock it from my end. But in the interest of time and as we wait, let me first thank you and the FERDI and IFD for the invitation. And I'd like to focus my remarks on a few areas because I think we've heard a very rich conversation since this morning. And so I will give examples that will situate the questions that you raised at the beginning in terms of the impact that the digital economy and mobile money in particular can have on the economy, on social and environmental issues. So let me start with what we see, what we learn, and what we are doing about the risks and barriers that we've identified. So what have we seen? During COVID, the IFC commissioned us to help them study the effect of COVID on medium, small, and micro, small, and medium enterprises. And we were able to find something quite interesting. We realized that these companies were coping with the COVID crisis where they were being impacted by supply chain constraints, so they couldn't bring in inputs that were very critical for their businesses. They had a liquidity crunch because that was one of the first effects that materialized in the banking sector and its knock-on effect on micro, small, and medium enterprises. And then they were having constrained purchases by consumers who were having to adjust to being working from home, those who could afford to purchase products, and the others were unemployed because a lot of the companies, the service companies in particular, laid people off during the COVID period. So we saw three effects that were aided by the digital platforms. The first one is that governments were able to transfer through the e-wallet system directly the grants that were being issued to individuals and families. And what you know about companies in Africa in particular, the majority of the companies are either single person or two-person companies, and therefore a transfer to an individual is also a transfer to a company, particularly if the company is being led by a woman or a young person. So the digital platform enabled direct support to the economy through those e-wallet transfers. The second thing that we observed is that the person-to-person or peer-to-peer lending became a very important conduit by which companies were able to get access to finance, and particularly through remittances, because they have relatives in countries outside of Africa who are able to easily transfer to their telephones using PayPal, Remitly, and other such transfer mechanisms. And then the third thing we observed is that the companies themselves were forced to gravitate towards digital payment and digital lending systems because it was easier to engage in business during the COVID time. So those effects continue even after COVID. The second thing we observed, and this comes directly from a platform that we've been running now for 2 years, is that it's very important to start with the lowest denominator in terms of technology access. So in the case of most rural economies and for low-income people in particular, if they have access to a phone, it will be a basic phone, which means the smart apps that all the people who use outside in the cities or in more advanced economies are not available for the people of a low income or rural residents. So what we were able to do is to use technologies that actually function with a basic telephone. That means you don't rely on the internet, you don't give very long forms that require a lot of data to be transmitted. Instead, you require very basic information like a simple ID, and you use the repayment history or credit history to learn. So using machine learning, blockchain, and other technologies to supplement for the difficulty of getting access to data. And that allows much more accessibility for people who would just have a basic phone. The other thing we used, which I think was very important and it links to the conversation earlier, is what kind of data science can be used and augmented with behavioral science to expand access. So instead of asking for audited accounts or other documentation that is very difficult for poor households to deliver and small companies, instead we use psychological games. So for example, on your basic phone, you can play a psychological game that gives all the information you need as a lender or an investor, and that allows you to issue credit to the company or micro, small or medium company without requiring audited accounts and other very difficult documentation. So those are the things that we learned. And then in terms of impact, in a very short period of time, we're able to create 10,000 jobs, lend to over 6,000 companies, and issue 8,000 unique loans. And that means, therefore, scaling up becomes much easier because now you know where the constraints are. And the target is to go to 100,000 jobs, 100,000 companies in 10 markets. The system is currently functioning in Kenya and Ghana, which were two of the countries in the materials we saw earlier in the presentation from the IMF, where digitalization is quite high. But there's also a unique feature there, which is you're not required to work through a bank. So a fintech can work directly. And that brings me then to the second block of impact, which is on the macroeconomy. In most economies, particularly in the English-speaking world, fintechs are actually allowed to operate directly without having to go through a retail bank. This is not the case in the UMOA region, where you have to, microlending can only be done via a bank. So what this is teaching us is how then you can interface the digital economy with the banking sector. And the approach that we have found works very well is to work with the smaller banks, digitize them and network them, and therefore approach the efficiencies that you find in the countries where you don't need a bank to intervene to produce the same effects of digital access at low cost and high speed. So with this approach, you're able to bring down the cost of a transaction to a few cents, the timing for an approval for credit to a few seconds, and giving access therefore quite rapidly to people who would need it. But it raises three macroeconomic risks that are in the remit of central banks. The first one is inflation. Through the work we've been doing, we observe that the majority of the borrowers in this type of platforms are actually working in the food and nutrition value chain, which is the most impacted by inflation. So 84% of the borrowers on our platform are in that value chain. And therefore, the inflationary impact is immediately visible to the platform data that we collect. And I think this is an opportunity then for central banks to improve access to data by working with fintechs to see the kind of patterns that are observed at that level So inflation would be one area that could be very good to do jointly between the fintechs and the central banks. The second one is currency risks. When you are working in multiple currencies and if you have SMEs that are exporting to neighboring countries in different currencies, the currency risks are very severe. The Ghanaian cedi, the Kenyan shilling, they have been severely impacted in the last year and months. And that's something that, again, central banks can work on. And you have the cross-border payment solutions that are evolving now, like the Pan-African payment systems that the African Union is working with Afri-Exim Bank to get implemented, or the private solution with entities like Asa Finance that are doing that directly from a company-to-person solution. The third risk that central banks can engage in when they have data from fintechs is liquidity. We have observed that during these COVID months and the post-COVID polycrisis environment we're living in, that there's a huge liquidity crunch on small and medium enterprises in particular. And therefore, using digital platforms to offer working capital facilities becomes very critical. And we've been therefore fine-tuning and moving those digital platforms to offer working capital solutions. But this is an area where central banks could actually evolve innovations that go directly from central bank to individual company rather than through the retail banking sector. And I was very interested to hear the BIS presentation with ideas in that area. I think it's a rich area for research and innovation. So let me close by saying a few things. Yes?
Pouvez-vous conclure, s'il vous plaît?
Oui, je termine. I'll close with a few areas which I think are important for the future. In addition to those that I raised for the central banks, I think we could look at how to improve the access to services when the internet accessibility is still low, and that's a technological and analytical space for work. Secondly, preferences for credit versus equity, which very few small companies are aware of, and there's work to do. And AFD and the presentation there was particularly relevant. And then finally, to look at the barriers to technological advancement in countries where there are controls that prevent new ideas from percolating into the system, because that also holds back digitalization. So thank you once again, and I look forward to hearing the other panelists. Thank you.
Merci beaucoup, Fanny. Désolé de vous avoir poussé à conclure, tellement c'était intéressant, notamment avec cette perspective que vous ouvrez sur...
Le micro ne fonctionne pas, on ne vous entend pas.
Merci beaucoup, Fanny.
Thank you for your presentation. Very interesting, with a perspective that you've opened up about the impact of digitalization for macroeconomic management and monetary policy. I have to hand over right away, though. We have still two speakers left. We can have maybe perhaps 10 additional minutes for questions. Thanks to the Banque de France for their flexibility. We're going to be hearing from Sheila Okairo from the African Development Bank, our own former home. You're going to be speaking in French or in English?
Malheureusement, je vais parler en anglais.
Unfortunately, we're going to speak in English.
Responsable du bureau investissement à la Banque africaine de développement, n'est-ce pas?
Thank you very much. And again, thank you for having me on this panel. In the interest of time, I won't want to repeat a lot of the very critical and impactful statements that have been made by my colleagues on this panel, and also that came through from the previous session. Indeed, as it was said in the beginning, digitization is not necessarily inclusion. And I think for me, that is the point that I will seek to underscore during my session. So, at the African Development Bank, one of the things that we have realized, as has been mentioned here, is that digitization has really been a game changer for the continent. We do see that, when you look at mobile money adoption, the continent is leading. We have over, 46% of the mobile money accounts attributable to the continent, and 70% of the value of mobile money. Now, that's a very strong testament. But however, we also know that when we look at key parameters such as the exclusion in general, in terms of access to finance, the continent is also leading. We still have 49% of the population not having access to accounts. And when we look at gender, which is a really key parameter, when you look at sustainable development, we see that the continent has a 12% gender gap, which is more than 3 times the global average of about 4%. Now, what these statistics told us, at the African Development Bank, and this was probably about 3 or so years ago, is that as much as digitization is progressing, and we are looking at the key parameters when we look at things like infrastructure, it is very important that we identify the areas where if they are not addressed, exclusion will be difficult to overcome. So we were able to commission a research with a research company called Vitalway, which identified that there were 330 million Africans who, despite having access to a mobile phone, actually did not have a mobile money account or an account with a bank. So I think for us that really spoke towards the issue of digitization, not necessarily equating to inclusion. And on that basis, the bank, working with partners, including the Agence française, the développement, AFD, the Gates Foundation, the Ministry of Finance of the government of Luxembourg, and later joined also by the French Treasury Ministry for Economy and Finance. There was, the Africa Digital Financial Inclusion Facility was set up in partnership with the bank. And the way we wanted to address the issue of sustainable development is to ensure that we are able to mainstream key aspects of digitization within the regular operations of the bank, and also scan the external environment to see how this can be done. And we identified 3 key pillars that required this intervention. So we have the digital infrastructure, which really looks at providing the basis, the rails as they call it, on which innovation can be overlaid. And we also looked at policy and regulation. And then, of course, closely tied to these 2, we looked at innovations with gender mainstreaming and capacity building overlay them. Now, to give specific examples that might speak to some of the issues that have been raised today, since our launch in 2019, we have been able to partner with a consortium out of Luxembourg to establish a resource center that will help improve, for example, cybersecurity on the continent. We know that as much as we are pushing for digital adoption, it also comes with risks. And if these are not addressed, then we run the risk of actually reduced adoption, because we have a very vulnerable population, and we have to be able to take care of this. And basically, this resource center is looking at things from 3 aspects. For example, they are looking at capacity building with the higher education institutions, capacity building at a commercial level, but also providing a shared platform upon which tier 2 and tier 3 financial institutions can also access cybersecurity services, which are normally quite expensive. Then when regards to infrastructure, we look at driving interoperability. Affordability has been mentioned as being one of the concerns when it comes to digitization. Now, interoperability, of course, reduces the barriers to adoption. It also increases competition and innovation to the betterment of the customers. So we are very keen towards this. And we also look at aspects such as agent banking, where we have seen that in addition to reaching the last mile, it has the benefit of actually providing economic opportunity for informal traders. Now, just to give an example here, we are working with MTN Nigeria. We are working with the financial subsidiary, the Yellow Digital Financial Services company, to see how women can be integrated more into the agent banking network in north of Nigeria. Now, the north of Nigeria, of course, looks at us, it has attributes which make it unique and which present challenges for women. There's the issue of security. There's also cultural and social norms, which may make it difficult for women to access, financial services in the traditional way. And this has, become, it's very promising in terms of the findings of the research that we've commissioned. They're currently doing a testing, and we are looking at moving into scaling this particular research that was done in Nigeria. Now, climate, of course, is another issue that is very critical for not just for the continent, but the world. And one of the things that we have seen is here again, digitization can be employed in a positive way to help make it sustainable. Now, ADFI is working with an agri-tech. I think we have spoken about the importance of the fintech sector to support the access to digital microcredit. We have supported an agri-tech called Pula that's working in Nigeria, Kenya, and Zambia, and they have had phenomenal results where they have reached about 1.3 million farmers. And basically, this has been through collaboration with other stakeholders, including government and private sector. And basically, in addition to providing yield-based index, loss assessment, they are also providing capacity building for smallholder farmers, where they, use card games and very interactive ways of teaching them on the importance of insurance. Now, that is very critical for sustainable development. Now, for Africa, we also know that the youth are, we have a burgeoning youth problem where we have a lot of unemployment. But when we look at digitization, it actually opens another frontier and opportunity for driving techpreneurship for our youth, whether it comes to being able to open their own businesses and transact online, going social, using it for social content development. Now, for the African Development Bank, this is really, really critical. And we are at ADFI are actually using this aspect through the support of fintechs. We recently supported the African FinTech Network, which is an association, it brings together an association, 34 associations, fintech associations on the continent, to set up a digital hub that will allow African fintechs to showcase, their solutions. They may have them, but Africa, of course, because, there are disparate solutions all over the place, it's not easy to really get down and know who's doing what and, how can they be integrated into other solutions. So I know the time is short. I want to stop there. I know there are other things that are really critical when it comes to making sure that we have sustainable development, but in the interest of time, I'll leave you with those 3 examples. Thank you.
Merci beaucoup de cet exposé extrêmement riche et je me permets comme à chaque fois de prendre juste un point. Merci.
Thank you so much. I'd just like to take one point compared to the previous persons. With such a panel, we couldn't avoid looking at the impact of digitalization and the whole problem of gender. You've demonstrated perfectly that there can be a risk of discrimination in digitalization, and even more so, there's a possibility, on the contrary, of reducing the gap via digitalization. It can be a tool to promote improvements. Vera will be our last speaker. I'm sorry we've been so late. Thank you so much for talking to us about the topic you wanted to deal with. If you can perhaps keep it a bit short, 5 or 6 minutes. We are awaiting your words.
Thank you so much. Since I have to say 5 minutes, I'll go in English, if you permit. First of all, thanks to the Banque de France, FERDI, and of course AFD for this. Listen, given what everybody has said, let me just take this. Can you hear me?
Oui, très bien.
Okay. I think I want to focus on 4 things. The first one is access and cost of capital. It's good for us to talk a lot about financialization, but when the cost of capital is high, even as we do more financial penetration, it's very expensive. And so I think that one of the more important things that we need to be looking at, and of course we're having the Paris summit soon, is the cost of capital. Franny talks a little bit about the FX. In Africa, we're all frontier markets. So our cost of capital is 5 to 7 times more expensive than for many others. And I think for us to be able to deepen financial intermediation, we need to reduce the cost of capital. I think that's the first thing. And there is a lot of work that needs to be done, both in terms of regulation, of course, in countries, but also with the market, see how we do that. So that's number is on the African continent, have the African Continental Free Trade Area Agreement. This is sort of our signature program. Right? And for the African Continental Free Trade Area Agreement to work, we need digitization and financialization, particularly of small and medium enterprises, and particularly of women. We talked about the PAC, which is the African Payment Systems. One of the ways of doing that is to see how we can harmonize across so that small and medium enterprise businesses, I always say from Algeria to Zimbabwe, can trade without high intermediation cost. And I think this is a second and important point. Third point is very few people know that when the Silicon Valley Bank got into trouble, a lot of fintechs on the continent were in panic. The reason being that the Silicon Valley was financing a lot of fintechs on the continent. But the regulation in the United States and the regulation on the continent harmonized. And so we looked at how we could save, depositors in the United States. It took a while for us to figure out whether the Africans were going to be able to get their money back. And so an important thing with digitization and financialization of the global financial system is to see how very quickly we can harmonize rules and regulations. Because while it's a very good thing, actually it's an excellent thing that Africans have access to the US fintech market. I think being able to harmonize that process is particularly important. And my final point is on data privacy. Of course, with more financialization, with more digitization, we put out a lot more information. We are seeing today a lot of the conversation around data centers. Where do we want to put data centers? TMSC in South Korea. Do we want it in China? Do we want it in the United States? I think the African continent as well has to think about what are our laws around data privacy. How can we harmonize them, not just on the continent, but internationally? Because again, as I said, with the Silicon Valley Bank, that is clear is that digitization and financialization are now global issues and not just sort of specific issues that we deal with in small corners of the world. So I think three things, as I said, cost of capital, we still need to deal with that. We need more capital, we need more concessional capital so that capital is cheap, accessible. Secondly, we need to make sure that harmonized regulation, and we need to ensure data privacy as we go forward. Thank you.
Merci beaucoup, Vera, de cette présentation aussi courte que...
Thank you very much for this extremely relevant and short presentation. Two remarks before we hear a couple of questions. Does digitalization enable you to reduce the cost of capital for operators in SMBs? That's a question that remains open. We need to examine that more closely. And the other question about regulations, your last intervention, it builds a bridge with respect to the session of what's going to be coming up this afternoon. Are there two questions we could take from the floor before we go to have lunch? Madam, Sylviane, the floor is yours. At the heart of development, we have investment. I'd like to draw your attention to the fact that in 2014, in a conference similar to the ones we're attending today, we invited the big economist called Ronald McKinnon. And a few months before he died, in fact. And this economist was a specialist in conduct, the idea that in low revenue countries, development depends on small and medium-sized companies, and they will only invest if initially they can have a certain level of self-financing, and then they can have a loan. But they have to self-finance at the beginning. In the first session, we insisted on the fact that financial digitalization made it possible to develop savings. But this development savings for small producers was quite meager. And I think this, and we spoke about this, this particular kind of savings is not paid. And that's a big problem. Because if you want it to develop, it has to be paid. It's so important in countries where there's inflation. And since inflation is on the rise, it is an issue. And I think that it's really a key point, a key problem that we need to get involved in central banks, because it depends indeed on the monetary policy and what we are requiring that people be paid when they're saving their money. Thank you, Sylviane. Another question here. Please introduce yourselves. I'm François Bombard, President in charge of regional development for small SMBs that are intervening in farming activities in rural areas. Just a question for the governor of the Central Bank of Comores. For those who are financial players in Africa, notably for savings and SMBs, and we've also observed that central banks were doing mandatory loans to raise funds. Are there initiatives, similar initiatives oriented to SMBs? If those programs exist, and especially in relationship and with the Choose Africa program, which is put forward by the French Development Agency for SMBs. Thank you. Hi. My question, in fact, has to do with all panelists who'd like to answer, but specifically Fanny Duautier. The development of fintechs from the new world, as it were, seems to be mainly guided by investments that don't come from Africa. Is that not an issue that would warrant further vision? There are reasons for that, I would imagine, the cost of capital, but there may be other reasons. But fintechs are massively funded by other countries and African countries. The microphone is off. We cannot hear the question. I think the moderator has to turn his microphone on because we cannot hear him. I think somebody needs to tell him because thank you, Patrick. And thank you for the question about the cost of developing fintech platforms and why is most of the financing coming from abroad? It's a good question because I think that this really comes along with the technology. If the technology is developed outside of Africa, then the funding comes from the outside of Africa. But today we see interesting development in this question. For example, as to us, we're an African business bank and we are investing in the sector. But there are others in major banks, particularly EcoBank and others that are involved in digitalization and that are using their own banking platforms to move forward with fintech solutions. And there are some innovations, for example, in Nairobi, which we call the Silicon Savannah, where there are quite a few innovations that are being used in various systems developed there. If we look at companies such as MS Africa and others that are similar, they're able to aggregate investors, domestic investors in bigger countries such as South Africa and Kenya, Ghana, and so forth. So I think that the change is in the works, but the biggest change will be coming along when the utilization of fintechs, which is moving forward significantly. In terms of the usage of digital platforms, for example, with electronic services, we're also advancing in the use of financing, which come from institutions such as retirement funds and others. Thank you so much. Your microphone is not on, sir. Thank you. And our best wishes for getting better. Vera, would you like to answer the question about the cost of capital? I don't know if she's there. Yeah, she's here.
Yes, yes. Oh. Non, deux choses, je pense au fait.
Two things. And this is linked to the previous question about the financing of fintechs from abroad. As I was saying, the Silicon Valley Bank financed roughly 60%, I think, 72% of fintechs in Africa. And that's because, how can I put this? It's a financial pack with a view to stabilizing prices and reducing costs, because you're borrowing in dollars and you're borrowing in UST bills rather than borrowing on the back of sovereign rates, which in Africa are quite expensive. Donc, il y a ce problème-là, donc il faut voir.
Of course, is to see how in Africa we can reduce the cost of capital. The first thing to do is improve our economic balances so that we can improve the cost of capital. But we can also do a couple of things, which is work with credit agencies, risk perception, and improve on some of the liquidity premiums that we have. So I think there's a package there that we can work on, see how we reduce cost of capital on the continent. Thank you.
Merci beaucoup. Merci. Il y avait une question sur l'investissement.
The question about investment in small and medium-sized companies. A word of Sheila. Sheila Okero, would you be able to say a few words about
small and medium-sized enterprise in Africa?
I'll just try and speak loudly. Yes, so I was saying for the African Development Bank, in addition to the traditional instruments of venture capitalism, traditional loans to lines of credit to banks, we are also looking at setting up a youth investment bank that will look at supporting access to credit to MSMEs. In addition, just as an example, I had talked about an intervention around digitization and access to finance for WSMEs. ADFI is working with the Women Entrepreneurship Finance Initiative that's managed by the World Bank to support actually within 5 countries on the continent, Egypt, Nigeria, Kenya, Cameroon, and Mozambique, to actually design solutions that can help increase the access to finance to WSMEs and also leverage data. Now, how they will do that, of course, is supporting them to improve their operational efficiency when it comes to aspects such as stock taking, making payments, so that they're able to also build a footprint with traditional institutions that can improve their chances of accessing finance. So access to finance for SMEs is absolutely fundamental to sustainable development, and it's something that the AFDB is very, very, very keen on supporting. Thank you.
Merci beaucoup de ces très utiles précisions. Est-ce que le gouverneur veut
perhaps
dire
we could hear from the governor in guise of the conclusion? Or Mrs. Auchan?
Oui, il y avait une question qui a été
There's
posée.
a question asked about central banks and raising funds via the RFE of commercial banks and guarantee funds for developing SMBs. We're in a particular situation where we're fighting against inflation. So this makes the credit policy more complicated. In normal times, it's possible to set up a mechanism. It's easier. And so to support what I wanted to see is financial digitalization in sustainable development is the future, very simply. It's the future for Africa and for the whole world. But indeed, in order to succeed, we have to include everyone, because if these are transactions, in transactions, everybody has to be included. And the challenge of technology, the challenge of financial education, and so forth are all involved. So with respect to Africa, just imagine somebody that has a digital account, he can't access the account because there's no electricity or there's no connection. So they're not going to be happy. With cash, they can use that cash anytime. And that's one thing of great importance. And that's kind of my conclusion. Thank you, Governor. Just to get back to the whole question of cost of loans, I was thinking as well that this cannot be solved easily unless we assess the real risks on the part of banks. And management of risk is all important. Risk assessment. So the hope is that digitalization should make it possible to have a new generation of financial instruments with sustainable development goals. We need quality data, and we need to better assess social impacts and environmental impacts and financial risks. And obviously, I agree with what was just said. I think there's one word that was pronounced, which cited by Christopher Angeli. The idea is digital trust. The idea of the word trust being linked to the impact of digitalization that we spoke about. Thank you for having perhaps wrongly trusted me to run this session. I was a very poor manager because I obviously allowed us to plow way past the final time by 20 minutes. So thanks to all. Have a good lunch. And we will have a great afternoon at 2:30.
Bien. Eh bien, d'abord, pour vous présenter nos excuses, puisque on commence cet après-midi avec un peu de retard.
Well, first of all, apologies, because there is a slight delay in starting this afternoon, because we finished a little bit late this morning. And as they often say, it's very hard to be the last hurdle between you and lunch, but it's also very difficult to be the first one to speak after lunch. So I do believe that this morning we extensively covered the opportunities and risks of financial digitalization. And if you remember rightly, and if you remember what the governor of the Banque de France said this morning, he compared it to two pillars. On the one hand, the pillar of opportunities, which needed to be strengthened, and on the other, the pillar of risk regulation. And these two pillars met together to create the keystone of trust and the networks of acceptance that Mrs. Kennedy talked about this morning, which is extremely important in boosting financial digitalization and factoring in these opportunities. So this session before our final panel discussion really is a continuation of our discussions about regulation. We abundantly evoked the risks and the reason for regulation, and we're essentially going to be talking about how to regulate things. On the face of it, it looks very easy. Regulators and central banks always try to sum things up by saying that regulation is necessary because same activity equals same risk equals same regulation. But this assertion is sometimes very difficult to make real because these are breakthrough innovations in an entirely new world, and it's not necessarily the same activity, not necessarily exactly the same risk, and that creates a number of issues about regulating what and how. Hence the presentation by Professor Robert Wardrop, who is director and co-founder of the Cambridge Center for Alternative Finance.
Professor Robert Wardrop, I let you the floor.
Thank you very much. This is always, when I'm teaching at Cambridge, the worst possible time for a class right after lunch. So I will do my best to make it interesting for you. And it's a really interesting topic. We're talking about regulation, which normally doesn't get people very excited. But it's a pretty exciting topic as we're talking about the digitization of the financial system and the impact on regulation and how regulation can respond. Now, I'd like to obviously thank the Banque de France and the FERDI and FERDI for inviting me to speak today. But I also want to thank Vera Songway, who was in the last session and perfectly set up some of the comments that I'm going to be making today, particularly around this concept that she talked about, harmonization. It's a huge issue when we talk about digitization. So could I have the first slide, please, to come up? I think, I can't see them here. I can see them here. So maybe I will stand. Okay, so please, next slide. So today I'm going to talk really and make 4 or 5 key points. I think, first of all, talking about why we see new and emerging risks as a product of digitization that is really a COVID and post-COVID phenomenon. There were some references this morning about the impact of COVID, but clearly the adoption of digital financial services has not only created new ways for people to do things more efficiently, but new risks have arisen. I'm going to talk about what some of those are specifically, and I think the panel will go into more detail on that. I think an outcome of how to respond to this digitization is the need for collaboration and coordination across jurisdictions and across different regulatory authorities that really haven't collaborated a lot historically, is essential going forward for effective supervision. Again, this is sort of what Vera was getting at this morning in talking about the challenges of harmonization. In addition, I think regulatory authorities face their own challenge in digitally transforming how they go about policymaking and particularly how they go about supervision. And if you look at regulatory authorities in emerging and developing economies, they have a particular set of challenges, some of which are resource-based, that really risks technology itself becoming a new inequality wedge at the regulatory authority level. In other words, access to technology for regulatory authorities in developing economies as opposed to more advanced economies, there's a gap. And I'd argue that gap is growing because the sophisticated are getting more sophisticated at a much faster rate than the less sophisticated are able to evolve. And a lot of that, again, is resource. And then I'm going to talk about, okay, those are some of the challenges. Those are some of the things that regulators need to do. We have a research center that has a very broad program in supporting regulators. What are we specifically doing to help that process? And I'll give some 4 or 5 examples of that. Could I have the next slide, please? So this is some data that we collected. We did a piece of research surveying regulatory authorities, primarily central banks, about 2/3 central banks, 1/3 other supervisor authorities in 2022 to really understand what they saw as the risks emerging from digitization of financial services through the COVID period. And what you see here is absolutely fraud. Fraud number one. And fraud, a lot of it was related to some extent to payments, but in particular, digital assets. So not just crypto, but you're going to see, I think, coming in the next decade, what we call the tokenization of real and financial assets that is going to increase some of these risks. And there are particular challenges around regulation I'll talk about in a minute. But there's no question that the regulation is needed and needed in a different way as a result of new forms of risks that are emerging to a much greater degree than pre this digitization wave. Next slide, please. Now, this is an interesting shot. It's a bit blurred. Maybe it'll clean up a little bit. Okay, so I'm making the case here that if there is not greater collaboration across regulatory jurisdictions, there is going to be highly sophisticated forms of arbitrage by organizations that are technically sophisticated and delivering financial services and new channels of finance. Now, this is Binance. Now, what we have is we have a data set, and I've got the reference on the lower right here, of about 6,000 fintech firms that we've tracked for the past decade. We've tracked their business model changes, the activities they're involved in against a taxonomy of fintech activity. Binance is one of them. And what we're looking at on the left is I just mapped what their activities are in 2017. You can go onto the website, you can play with the sliders, you can do whatever analysis you want. It's a public good. And what you see is a very clustered, narrow, relatively few activities. But take a look 6 years later. Now, if we were to add the geographic dimension, in other words, where is this going on cross-jurisdictionally? What you'd see is where the legal entity is, where the employees are, where the activity is, where the governance sits, all becomes distributed. So the activities are being driven by rapid technology change, and that's enabling, I mean, the notion of political boundaries is irrelevant in this world. So if there isn't greater collaboration and coordination across those geographic jurisdictions, arbitrage will move to a very severe stage of sophistication. Okay, next slide, please. This is a depiction of where digital asset regulation sits today in terms of the approach. The approach, in simple terms, bespoke. In other words, do we have a regulatory framework for crypto and digital assets that is specific to crypto and digital assets? Or are we, do we have a set of obligations or regulatory requirements associated with crypto activities that actually sit in adjacencies? In other words, sit in market abuse or AML or capital markets or payments or payment infrastructure securities. And the point I'm making here is you have different approaches to this around the world. And regulators love to say, we're technology agnostic. If it walks like a duck and it talks like a duck, it's probably a duck. And so we'll classify it as a security and we'll regulate it like it's a security. But if the technology changes what the duck looks like, actually, it's not a duck. It looks like a duck. Then you have a problem with that non-bespoke approach, where that sort of bespoke framework, and I've identified some of the countries that are taking the more direct approach, the technology actually matters, particularly as you start to look at decentralized finance technologies. So the notion here that you've got to have more, again, across different types of authorities, securities regulators, payments regulators, capital markets regulators, as well as crypto framework regulators, have to have a dialogue to coordinate and synchronize. Otherwise, again, you've got organizations that have to comply with all this. Can you imagine being a regulated firm in the digital asset space? You got to figure out where your obligations sit in all the adjacencies. It's just not as simple as having a crypto framework. Next slide, please. So part of the, I would call it arguably critical infrastructure for the digital economy or the digital financial system, it isn't just data. Everybody talks about data. There were words used this morning, important words, interoperability. But how do you get to interoperability when you're talking about data? You need structured data. The problem, there's lots of data in the world. But number one, most of it's not structured. And if it's not structured, there's no opportunity for interoperability. And if the structures are different in terms of how people structure and use the same data, there's no interoperability. So this concept here of structured data, and this is what a lot of authorities, so this is some work we did again with the World Bank survey. We asked, well, what is your biggest challenge in addressing some of these emerging consumer risks? And you get the same, it's the insufficient data, but insufficient data is a proxy for unstructured data or different structured data or siloed data. The data problems are significant and they have to be overcome. Otherwise, regulators are not going to have the ability to introduce at kind of the application or the tool level ways of supervising or policy making that can keep up with what is a very rapidly technology changing marketplace. Next slide, please. So we also, in the same report, asked regulators, where do you need help? Okay. And number one was framework design. I'm going to talk a bit more about framework design in a minute, because framework design is a key use case. Now, how do we develop a new regulatory framework? Imagine what happens today. If someone comes and says, we need cloud regs, okay? We need data privacy. Well, the process today is some poor analyst working in the regulatory authority has to start guessing who has cloud regs. And on a spreadsheet with rows and columns trying to put in the bits of who's got what, it's a highly imprecise, labor-intensive, long process. And it results in something which is often suboptimal. I see some people nodding. No one wants that job. And by the time it takes so much time, by the time they're finished, it's all changed again because the regs are all changing, especially in areas that are very turbulent, like data privacy, like cyber, like digital assets, like ESG. You've got high rates of change. So next slide, please. So how do we tackle that in our research center? First of all, look, what we do is we really, through our research, we listen to try and surface what the needs are. Regulators are saying, particularly in emerging and developing economies, what do we need to understand? That defines our capacity building and training agenda. On the left, the FinTech and Regulatory Innovation Program since 2019 has had 1,700 regulators, 320 regulatory organizations from 160 countries. They told us over the course of time, actually, we need to understand more about digital assets. The stuff I showed you about the crypto frameworks, they don't understand it. They don't understand it well enough to introduce effective frameworks. They want to know more about it. So that's a launched program. Subtech, how do we build tools? How do we transform our organizations to use technology to more effectively supervise in this digital environment? That led to, and I should acknowledge Gates for funding, very large funding grant. That has about 35 jurisdictions, I think, in it right now, regulatory authorities, probably 150 regulators going through a 2-year program on actually doing tech sprints, building tools that can be used commonly, all public goods, run by Matt Grasser and Simone De Castri. And all of our graduates of our programs they formed a WhatsApp group after they graduated. The first couple of cohorts, they maxed out at 500. We realized they don't have a forum to exchange information as peers. So we launched a platform called the Regulator Knowledge Exchange. Next slide, please, where they get answers fast. We're not in a world where you can wait 3 months for a working group to get answers to questions about what's happening in your market today. You need it now. Next slide, please. So this platform, which again has been funded by Gates. Next slide, please. Yeah, has right now very broad global distribution. Often what happens in South America has relevance to something that might happen in Asia, or might have something that's relevant to happen in sub-Saharan Africa. just some, 1,500 regulators, 220 organizations on it right now. I mean, it's doing really well. One of the most interesting things we observe in the patterns of the interaction of regulators on this platform, right? No one else other than regulators. Paula, you either work for a Ministry of Finance or you work for a regulatory authority. Otherwise, you don't get on the platform. It's the engagement of women. Women love the platform. They have a voice. They can ask questions. They're just the whole thing. I won't go into the gender dynamic, but it's very interesting to me, the level of engagement that women working in regulatory authorities have in a platform that actually gives them a voice and an opportunity for engagement. Next slide, please. Again, SupTech, okay? It's another initiative. Consumer protection, if you look at where SupTech tools being applied, right? Supervisory technology tools. How are we going to use technology to supervise differently than the past? Number one is consumer protection. Our panel is going to talk more about those consumer risks. It's not just knowing what they are. It's how are you going to supervise differently? Next slide, please. I won't go into the detail, but the SupTech Lab is actually building tools. Now, this is a POC right now that several regulatory authorities have clubbed together on, and what we call a next generation consumer complaints management system, right? So what you've got is all kinds of different data sources on the left, social media, consumer complaints, multilingual input. So I can text in a complaint as a consumer on my phone about something, and I can do it in multiple languages, and the machine learning models will pick it up. But the key is structured data, because you see that processing, you did see the processing that was in the middle. That's where you've got your structured data. Once you've got that structured data, now you can interoperably analyze data from multiple sources. Next slide, please. And key to this foundationally is the state of regulation. It's not digital. Most regulatory authorities are publishing the regulatory requirements that they want firms to comply with as PDFs on websites. And sometimes the PDFs are scanned documents. I mean, we process this, you'll see in a minute. And so until you can move to what we call AI ready, no one in this conference today has mentioned generative AI. No one has mentioned ChatGPT. It's huge. And until regulatory authorities can translate the publishing of the rule book into a machine readable form, not a human readable form, there's a big transition coming to move from human readable PDFs to rules, to regulatory obligations that machines can understand. Someone did mention smart contracts this morning. That's going to be essential infrastructure. Next slide, please. Now, once you have structured data, you can do a lot. That's an example, because we're talking about sustainability. That maps the entire regulatory framework of a jurisdiction against another jurisdiction. One of those jurisdictions, I will tell you, is the EU, right? Now, what you see in the colors is you see how stringent are the obligations within the framework. The darker the color, the more a regulated entity is compelled to do something as opposed to guided towards best practice. White is almost ignorable because it's you should do it, or you might like to do it. But dark green means you got to do it. And the frequency of mentions are those numbers. So you can see in the lower left, green bond in A, or in country X, there's a lot of green bond obligations sitting there, right? You go to the right, you see green bond, 0. Now, if you're a regulator, I showed this to a regulator who looked at this, who was deciding whether they should introduce something around green bonds, disclosure requirements. And when they saw that, and it was their jurisdiction, they realized what they were up against other jurisdictions, where they were out of line. Now, how do you get to this? How do you actually get the data to be able to do this? This took us, to put this together, took less than an hour. You got to have the structured data. Next slide, please, and run the video, and that will close my presentation. Is there audio there as well? It's not critical if you can. You get the idea without the audio. The audio's. That's okay. Can you just hit play, please? It's a processing power challenge. Okay, I was hoping to wake you up with the music. Music's horrific, actually. But the idea here is simple. We have, over the past 2 years, created taxonomies in collaboration with standard-setting bodies and some regulators in 12 regulatory themes, and we've crawled the website and captured 4 million documents that are regulatory relevant. Guidance, white papers, green papers, rule books. Over 100 countries, 3 languages, French, Spanish, English. We built almost 1,000 machine learning models with training data to tag those documents at sub-document level. That means that analysis that I showed you on ESG, you can do it in minutes to small hours. I don't even know if you could do it with human beings in a typical regulatory authority today if you wanted to. So I'm trying to show here the power of structured data, the need for different approaches to approach regulation, how you go about supervision, how you go about policymaking in a world which is going to be is becoming rapidly very different as a result of financial digitization. Thank you.
Merci beaucoup. Vous nous avez stimulés et réveillés. Et merci.
Thank you so much. That did certainly wake us up. And I think you have probably made the regulators a little bit dizzy, but you've also given them a lifebuoy to hang on to, the lifebuoy of artificial intelligence. So you're talking about ChatGPT and the manner in which ChatGPT could perform better than our panel. I thought perhaps I was going to try and do that. I thought maybe it would be a bit embarrassing for members of the panel, so I didn't. But without further ado, I think we can now listen to Timothée Dufour, who works who's a fintech expert at the ACPR, which is the banking sector's regulator in France, with direct links to the Banque de France. And the ACPR is perfectly aware that a different type of analysis was required for digitalized finance, and therefore we created a fintech arm. So Timothée, my first question to you would be, how do you envision the regulation of Binance at fintech? Because we saw it was both very complicated and multi-dimensional, because it's very fast changing. And do you use AI? Well, I can answer your second question very quickly. ChatGPT is something that we saw, that we were very excited about at the ACPR, because large language models have been around for a while, but this is the first time that we had free access, of course, pay access if you want to place a significant amount of requests, but something like such as ChatGPT. And I'm very sorry, but ChatGPT talks a lot of rubbish very often, as soon as you go to the heart of the regulations, but its answers are often, or at least generally, quite interesting. And we've already had people come along with projects who had run them through ChatGPT because they ended up having very precise ideas about what their regulatory obligations were. As for your first question, I could start with that. In the various points of your approach of digital supervision, and Professor Wardrop, of course, talked about the importance of that dimension. It's that of collaboration. As regards Binance more particularly, and the broader crypto asset community, we are currently working on the purely crypto assets or decentralized finance aspects. We published a paper 2 months ago, and we're already talking a lot with our European colleagues, specifically over Binance. But this collaboration should also expand to other regulators. When ACPR created its fintech arm, it already had that in mind. It was launched in 2016, and when founded, it was already, from inception, considered that it should work jointly with its twin brother at AMF, the Financial Markets Authority, because they also created their own division, or whatever they call it, digital finance and competitiveness, and we work very closely with them as part of the FinTech ACPR AMF FinTech Forum. For those of you who don't know the French system, the AMF is the financial markets regulator. We have a two-headed system. But the gentleman needs a microphone.
One small comment. There is an assumption out there. People take comfort in believing or having a view that ChatGPT can hallucinate. And so we can't rely on it. And no serious organization would really use this. We trained an advanced GPT model on the data set. When you do that, it's a whole different world. The precision from the prompts goes up like that. So I would argue again, it's data quality drives large language model performance, and that people shouldn't assume that the poor performance of the open models is a limitation of the technology. It's a limitation of the data it's trained on.
Merci. Peut-être pour continuer, un des autres aspects que je mentionnais.
Another aspect I was mentioning in the cooperation between authorities, we evoked that briefly, was the cooperation between authorities in different sectors, because a lot of technologies explored by players in the financial sector cover overlapping fields, data protection, privacy, and a fintech ACPR. We tried to keep a very close eye and work closely with the competition authority or the media supervisor, and of course some of today's regulations are explicitly transsexual, such as the IA Act, which is still being negotiated on the European level, but also in exploration, more exploratory aspects, because the fintech innovation arm is conducting a number of experimentations to explore technologies which are not yet fully regulated, and for which we're working hand in hand with CNIL, the Data Privacy Authority, and we're seeing how data can be shared in the fight against money laundering and terrorism, with data not just from one bank, but from multiple banks, to better spot suspicious transactions or transactions requiring further investigation. And against that background, of course, in terms of data protection, there are a lot of questions, and we have been working very hard with CNIL on these issues. Perhaps a further dimension of our approach of regulating innovation in the financial sector, and I can pick up on Professor Wardrop's presentation, it's neutrality vis-a-vis technology. You were saying that regulators were technology agnostic. So we may be agnostic, but we're certainly not blind. We've not become great duck specialists, but part of our work is to look at new technologies and to try to identify not just the services it provides, but also the new risks that it harbors within, which may be financial, but also non-financial, but also opportunities, because some ducks are dangerous, but other ducks can actually also help us. And in our particular department, we think that DLTs, blockchains, and so on, which people look at very warily because of the anonymous aspect, but it's also a huge strength to open up a book that includes all of the transactions that took place within it from inception. And by encouraging people to look up the chain, there are in fact huge opportunities in tracking these funds. And then a third dimension by which I wanted to start initially to qualify and describe our approach of supervising the fintech's ecosystem is that the fintech innovation department really has an approach based on proactive proximity. Of course, the creation of the fintech department in itself was a reaction to the risks posed by fintechs and the ACPR starting to face them, and we wanted to take a little bit of advance there. What we do is that we talk to fintechs or those are projects. They can be young graduates or someone who's already created 3 businesses or who's just worked for 20 years for an institution. And what we wanted to do was meet these people as early as possible. Sometimes we even go out there and find them. We have very tight contacts with fintech incubators in France, and we ourselves go and see project owners. We say, okay, tell us about your project, consider this or that aspect, but always with a view to help them to comply, because we strongly believe that compliance results in more trust, and that trust results in more commercial success, or at least that's what we're trying to tell them. And there's an approach of proactivity that is not only individual, but vis-a-vis the ecosystem. I talked about experimentation in Romania, but also the links we have with all of the trade organizations in the market. And it's in fact very important to be not the only point of contact and to have allies. So to each his own, but we need to have people who have the capacity to tell the entire ecosystem, don't be afraid, go and see the regulator, because ultimately it'll be a win-win situation.
I have just a question. I'm sorry to keep going. Professor Waldrop spoke about the importance of structuring data. Is the regulatory authority going to be intervening in that to try to standardize data so as to make it more effective, both in production and in regulation? The question is, how far do you go in structuring data? There was significant efforts already made in thinking about the format that was imposed for all reporting data, that was imposed on all players, and at least to have figures that was faster than in the past. One part has to do with data that the regulator can use. We're thinking about going further. And then there's another portion where we can also give the main lines and let the markets decide on the standards they want to use. Thinking about data that is produced by banks in the framework of the DSP2, the open banking, where standards were decided by the market. There are several standards, obviously, but there is standardization, but the tools to be used are variable. Thank you for that answer. I'm turning towards Ernest Carré, who represents an Central African bank. Mama Tabastudi is had an emergency which he had to take care of. He wasn't able to come. But he has sent the representative of the BEAC, who's going to be giving the point of view of the regulatory authority in Africa about this issue, which I found vertiginous. Thank you, Mr. Gabriac. I'm Ernest Carré, and I represent the BEAC in Paris, the Banque des États d'Afrique centrale. As was said earlier, Mr. Abastoli was not able to, was retained, who wasn't able to come to this August assembly. And so he's asked me to represent him and to talk specifically about the case of fintechs in the CEMAC area. So you have to understand the CEMAC area is a community area which is shared by 6 governments, including Cameroon, Central African Republic, the Republic of Congo, and the Gabonese Republic, and Equatorial Guinea, and Chad. Those are the 6 members of the Banque des États Afrique centrale, and the CEMAC. And from this point of view, the question of the fintech lately has been greatly developed in that sub-region. And the theme which brings us together today is to secure and finance regulation. And so the case of the CEMAC, you should note that in the CEMAC, the fintechs that we are fundamental in this finance and technology. Those are the areas. And the combination of these 2 areas is the origin of fintech that has been developed in CEMAC via electronic payment systems, notably money, crowdfunding, participative funding, as the French say, and investment funds and financial advisory, often in the form of chat box or trading or virtual money or crypto money. And the financial analysis with a view to granting micro loans, microcredit, and digital or micro insurance. So all of these fintech companies have seized the opportunity of that development of technology to make this type of service available. And the CEMAC, we cannot remain indifferent to the development because it's something that's new. We have to, but to frame that in, we need to attempt to see how to regulate it. And this brought to light a certain number of regulatory issues. For example, in the Central Africa, this would implement this regulation via the means of payment. There's the Banking Commission, which also involved the central bank in monitoring financial institutions. And we've also had regulation in terms of financial markets with the COSIMAF, which regulates all of the issues relative to the issues involved in the market. And the CIMA in the insurance area, which insures as well a certain number of arrangements to join these activities. So the idea is to control everything that's going on in the area, given that these are areas that are quite new. So we have to assure some kind of a framework. So indeed, we're going to be talking about that question in the CEMAC, these 4 aspects of the CEMAC. So how can we approve, regulate, and fintechs against any kind of remediation? How do you secure the means of payment with respect to risk of money laundering and financing terrorism? How do we avoid that? There's also more specific issues of protecting consumers with respect to digital, because this calls it puts us really facing the consumer, which we need to protect absolutely, to make sure that the consumer can be sure of such things before committing. And so, as well, how are we able to face up to these double requirements as the challenge of education and digital, and at the same time? And I conclude my speech by a short conclusion, which is statistical, with everything that's been going on in this era. So, without further ado, in terms of all the regulators that I just spoke of, enumerated, have been put together to attempt to develop a corpus of texts to frame in the activity, to enable the activity to be better handled. So I'm not going to go back over what the regulators have done. I just cited the BEAC, the COBAC, and the COSIMAF, the CIMA, and there are many others. So all of this, in fact, is commanded by a set of regulations that CIMA, I'll make a copy of it if you need it, that's made it possible since 2018, that has been the reference to frame in this whole area. So that's so far as supervision and regulation is concerned. Being understood that all of these providers of financial services are starting their activities without having any approval. So indeed, there are those that have developed and that will be able to present the right arguments for the investors in that area, so that you know who's doing what and so forth. And the second point has to do with the tools. Now this is more orientated towards the central bank, which is facing the problem of in the fight against money laundering and financing terrorism. So to try to frame in these types of activities with the MT, which is the Center for Payment Incidents. This is put into place by the Central African Republic Bank. So this is a kind of database which is biometric in nature, so that you can just check all of the potential users that the users of financial payments or systems. So using this with a database makes it possible to follow up on the origins and endings of various transfer flows of money. In terms of tools that are secure, in terms of means of payment, I think it's the central bank that has taken the lead on that issue, and they've made it possible to set up what I'm speaking about here. It's a payment incident central. Every time a user has been identified in the database, they've been identified. There's a single identifier, in fact, which makes it possible to follow him or her all their lives, or for quite some period, via all of the transactions that could be brought to bear. Now that's from the point of view of the tools. Now let's talk about the main issues with respect to protecting the consumer when facing digitalization. Now these questions will much more be seeking confidence and trust than the consumer will be having to do in real time. so that they can exchange a certain number of flows in the area of payment systems. The main issues are trust in the functioning of the financial system and the implementation of a protection framework for users of the bank, which is necessary for many people that are coming and have the confidence in the public, because we need to put everybody into trust situations. And I think the fintech has a number of good years ahead, and that the providers of these services will also lose very minimally. They'll develop the finance, and it'll make it possible for the users to have both the resources and the rate of. And another aspect is the bankerization rate in this area. That's important to support, because the arrival of fintechs has brought about a kind of a boosting of the means of payment advancement. So everything having to do with means of payment and financial flows in the past had seen the rate of bankerization bring people to further use open systems that are moral in nature, but they weren't able to be fully expressed or traced. Now, the point here is the securing and regulating finance digitization. Just a quick word about this aspect, because digital education these days, public authorities have their sub-region, but you've understood the department and all the issues that are being considered in a department which talks about things digital and who's highly involved in digitalization. So this is a real recuperation, especially in Central African Republic, because the public authority is already echoing this document. So the real problem remains, how do you finance this? Indeed, there are not many projects ready to be used, generally speaking. And some people haven't been educated along these ways, because even some training background, we can conclude them without getting back to or the bank or whatever. It's about that aspect that the central bank and all of the regulatory authorities are trying to work on to give the correct information to users to make it possible to bring these sustainable finance points to fruition. So I just wanted to add a few statistics. Today in the CEMAC, at the end of 22, we have 4 million euros in our banking account and 32 million in the payment account. Mobile money. So this is just to say that the population is around 45, 50 million in population. So potentially could be 40 million of users of the means of payment system. And today you can see clearly that we only have 5 million worth of bank accounts and 32 million of the PayMe account. It's my city account. They're part of the infantech. But anyway, they represent how important it is for public powers and regulatory authorities to try to understand their contributions to music and dance. For me, that's become a fintech. You also have to really go so there are many companies that are being defined, letting themselves be defined as fintech. So you can see clearly that this is a sector that is moving very quickly and requires having a head, so that you can keep an eye on the financial flows and so forth. So I finished what I had to say. Thank you. Thank you, Ernest. I'd like to thank you so much because you accepted to participate at the last minute in this panel. So thank you so much. And one thing that you said was the proportion between payment accounts and bank accounts. Now, the essential part of the population is covered by there's no bank accounts. You can see clearly in the CIMIC region that we're talking about technologies used in the framework of leapfrogging. Since mobile phones have disappeared in fixed phones, the involvement of whether development of payment systems created by fintechs are going to be getting rid of the population out of the banking sector. Maybe it's science fiction, but in any case, it's worth attention. And it's worth attention, as was just said, for the protection of the consumer. And so I turn towards, remotely, I turn towards Eric, who's a specialist of financial systems, who's going to explain to us in a couple of words what CCAP is, and to try to focus on the problems for involving protection of consumers. Eric, the floor is yours. Thank you, Bruno. Thank you. Can everybody hear me? Thanks to the Banque de France for having invited me. I'm very sorry I couldn't join you in person. The CGAP, in a couple of words, is a European think tank. It's a member of the World Bank, and with it, and the charge is to move towards financial inclusion. The main point is that this is a new approach that we talk about, the approach of the inclusion in social networks. So financial services were used to their advantage in the past. And for us, this is very important in digital finance. We've been working on that for a long time. We talked about fintechs and digital finance. What we're describing here is all types of financial services, whether it be payment, savings, insurance, investment, and we access that from a digital system on the phone or a computer. So obviously, as several speakers have said, a world database, the World Bank database, they're going to go from 51 to 64% of adults have access to financial services. So we have absolutely incredible progress. And as we were saying earlier, we don't have the rates yet at Washington, but they're being defined worldwide, and it's important to be aware of the figure they're going to be setting. And that'll help us as regulatory authorities be more aware of the risks involved, about all aspects of research that has been performed over the last 5 years on risk for consumers in terms of digital finance. So we're looking for figures mainly because we wanted to see what the solutions were and the nature of the risk and the actual independence in terms of risk. So given that the figures worldwide are quite disparate and sometimes quite poor quality, but we have identified 76 types of risk in digital finance. There are several types of risk, obviously. And we've also found changes in the scale that fraud and the poor usage of personal data have entailed. So now we have figures that are real figures with the perception of the way it was, so that we can speak with the regulator. And these figures have identified as fraud in a growth process. And you can see the bad use of data. The data, the personal data, are obviously a gold mine to access real estate services. But that was perhaps a major question about. Now, we've done studies more recently in several countries in cooperation of local and regional authorities, which shows some very disquieting trends. There are two national studies which showed national sample 98%, 90% of users in digital finance, which is a huge number of people, had risks. They had to face up to risks in the last 12 months. Almost 40% in the two countries, 40% have lost money in the last 12 months. And 40% of users in digital services have had problems of capacity. So now, if in addition to financial competition, things are becoming very complex for the coordinators and supervisors. You have to know this. And you've known it since the beginning of the session. So what are the solutions? Well, solutions are legion, and at CCAP, we are always promoting things, and so long as it's a responsible ecosystem. Our approach to ecosystem means that we're taking into consideration all of the players involved: regulatory authorities, consumers, service providers, fintechs, banks, telcos, consumer associations, and investigations. And we usually start by the national study to focus in on the consumer, and then we get together the ex-people involved to define the group having to do with the ballast in terms of in terms of that particular ecosystem. Now, there are three conditions that are necessary in order to have that responsible ecosystem. The first series is a customer approach. We consider that all players need to have a customer approach in one way or another. For example, for regulatory authorities, we talked about being in phase with the supplier's business phase. There's no longer a matter of just checking a box. No, here the idea is for you to get back to so that we can actually make sure that the supplier is going to be providing a service that includes and is transparent for the consumer. So it's a different culture. It's a change in our culture. There's a movement of this type in Great Britain and Africa as well. The second thing is that these are capacities. These ecosystems are capacities of local authorities and regulatory authorities, but also that of users. The aspects of digital education, which is represented by the BACE. The third part was cooperation. And for me, this is the most important part of it. Since it was underlined, we've seen how complex services are. With obviously looking for new staff right away. We need many more staff locked up into areas where they're going to be active in the ecosystem. So the authority to protect consumers more generally, an authority to telecommunicate. So there are two journalists that push this idea forward, and there are more and more staff and associations defending consumers, which is an interesting thing. And the final point I wanted to make was about that branch of the ecosystem, but also practical tools for authorities in charge of protecting consumers, but also it can be a surveillance, a supervisory authority. And we have developed a toolbox for authorities so as to better check out the market. And so we have 8 tools, along with the AFNOR, the user guide, and so forth. For example, how do you use the phone line? How do you use social media? How do you tell an anecdote? It's what we were talking about earlier in India. And for 2 or 3 years, we've been working on that. This is kind of the innovation hub that uses artificial intelligence to analyze messages from digital users. We've heard messages on Twitter and Google, but we need to better understand how is the consumer being protected. The idea is to identify the suppliers that are suspicious and that don't need further attention. So I think that we have talked about a lot of things already, but I'd like to get back to the point that was spoken about initially by the fact of having, because you can have all the technologies in the world, if the data is not reliable, you won't be able to use those tools. So the first thing is that it's your own to be responsible about it. Thank you. Thank you very much, Eric. I'm going to remember one word, and that is the word ecosystem, which translates how complex the problem of regulation is, especially in these ecosystems which are evolving on an ongoing basis and which are not necessarily the best possible positioned to choose a system today. Just looking in the rearview mirror, and Glenn Stephens is an advisor to several financial institutions. Hopefully you'll be able to explain that to us very briefly, how all this looks from your point of view. And the occupancy rate is also protective of the public. And in this ecosystem for protecting the consumer, you're interested specifically in the standards and norms. And here we're moving towards the idea, can't the regulatory authority react by creating standards? And is that enough? Thank you, Paul. Thanks for the invitation. I represent, in fact, the president of Cerise, who could not be here, and SBTF, a partner. It's the social department. So there's a group of institutions that are interested in inclusive financing. And if I may do so, I'd like to add a picture that was spoken about this morning. We are cathedral builders here. I think that from the point of view of regulation, we should be able to get inspired from practices today and problems met by the financial service providers, because the digital world is moving so quickly, and providers are going to be having problems, including IT problems and risks as well, weighed upon the consumer. So Cerise SPF has started an approach to developing standards and practices in the area of social performance and consumer protection. And last year, in January 22, they celebrated their 10th year anniversary. They practiced implementing by hundreds of institutionals throughout the world of all types and all shapes. And what's interesting is that here we're talking currently about a project of updating and reviewing the standards and practices, and today, including digital changes. It's you can find in the images that we saw with Bob a bit earlier about risk, you can see once again a certain number. So if we look into the evolution over time, we come back with the fact that we have new risks. For example, you can talk about, of course, just talking about what about the risk of cybersecurity, which is a new risk. We'll talk about, and I was spoken about this morning, about the VA of algorithms. So digital can be a decision support tool, if you like, but there are legitimate risks. Even if you're reducing the cost, facilitates the transaction, maybe it makes the time longer that you have to wait for it. So let's say the data, as we said earlier, does not represent enough goods. So our objective and the data and these models can block the access to a product because nobody could pretend to have it. In other words, it's an issue having to do with the access by the algorithms. This could make it possible to have a kind of a product which is not living up to the needs of the user or the person that's receiving that loan, because the models were built on data that does not necessarily reflect the different use cases that are actually out there. So we're protecting consumers in this respect as well. But this is new in digital approaches. And what's interesting is that when you enroll, you can see the change in the consumer protection coverage and how the issues that were there and have been there for some time have changed over time. So you might cite the issues such as over-indebtedness, protection against that. It's an issue that is so very important to inclusive finance because we want to bring people into the circuits of services that we spoke about this morning of a second order, such as loans, while still being certain that we can do this with in relationship with the capacity to repay on the part of the consumer. Now, in terms of actual usage, there can be new products. We need to think about the adaptation and usage of these to protect the consumer. For example, just imagine that there may be short-term loans that can be allocated quite quickly, which can facilitate consumption of a loan. But there are resources such as, we talked about this morning with our colleague from GPFI. You can think about the protection on board, the onboard protection by default. So rather than facilitating the approval of the loan, we can put a little bit more friction in the system until the person confirms. Yeah, that's the amount, that's the interest rate. Yes, my first draft will be due at such as. So just to go over and help people to think, help them along in terms of thinking about their decision, to be sure that the person has thought appropriately about that loan, and the product itself can encourage a situation of safety for the client. This was cited about the case of fraud. The fraud, because today with the data and phenomena such as social engineering, you can take data on people and put together case studies of people that are hopefully wanting to loan. You can also think about how you can sweep through that in different ways. Notably, we talked about communication, as Eric did, to think that maybe now we have first loan takers, but also the first time they've ever been in the digital world. So how can we adapt our communication to such circumstances? Not to explain what it is, how to use this product, whatever, how does it work with other products, but how you save your access codes. How do you keep your password so that these people have running the least risk possible of being a victim of fraud? So providers of financial services, I was happy to see in the observatory, there's the means of payment security and there was a press release a week ago about that. And they were talking about even in the area in France with a strong authentication, even if the rate of fraud is down 30%, but it's still there. And so the observatory issued a certain number of recommendations, and amongst those was the fact that the service provider was responsible, even in the case of using strong authentication, to be sure that there was not a case of negligence. And if there was negligence, if they could prove that there was negligence, they would have to reimburse or pay damages due to the client. So these are issues having to do with consumer protection that have been there for a long time, but now the way we looked at these problems have evolved with the problem itself. So I'd like to conclude a few words about the perspective of these norms and standards and practices from end to end. We're trying to have a view on the topic for consumer protection in all of these factors anything that touches upon the consumer and the institution. We cited an example earlier by GPI this morning, the claims. What do I do with a claim? Who do I send the claim to? So in the standards that have been around for 10 years now, by setting up a claim system, you have to inform your customers that it exists. How do you access it? You have to make sure that you get somebody on the other line. Accessibility. With respect to the target customers, you have to have a policy to actually help in processing the whole thing.
Then how long is it going to take to process these claims or complaints? You need to make sure that we can analyze in order to remedy these repeat problems. But then let's try and look into the future, into the digital future with this vision there. Of course, we're going to need to fully review with the current vision of digital to see whether there are not new problems emerging. And then if I look at Bob's image about his diagram about Binance, you can see the atomization of services provided by Binance, or even in the transaction chain we were talking about earlier, and the various stakeholders who are involved in this value chain or transaction chain, and it's all also all the more stakeholders who of course the question is who's responsible. So standards and practices must also address the fact that in this multipolar world of digital finance, what are the standards and practices for these institutions which have a customer but whose identity has been verified by a third party, say the algorithm who took the decision belongs to a third party. How do you handle the complaint, and how do you support the customer or consumer in all of that end to end? And I'll stop there, and I hope to answer any questions if necessary. Thank you for your presentation. It can indeed be very difficult to set standards for institutions, but it's even more difficult to set standards for algorithms that don't seem to belong to anyone. So at this point, and if we look at the time, I have two pieces of good news. The first one is that we're going to take 15 minutes more to ask as many questions as needed on the question of regulation and supervision. And the second piece of good news is that this will not impinge on the coffee break. We're just going to move things forward a bit. So now a few minutes over to Miles Harvey, who works at OECD and who's politics analyst, and who's stepping in for Andrea Gruffoni, who could not attend today. And if I understand correctly, in addition to everything that has just been said about consumer protection, Miles Harvey will also tell us what can be done for financial education of consumers, which he's involved in, and regulators must also be involved. Miles, the floor is yours.
Hello, thank you, and good afternoon, everybody. Can I just check if you can hear me well? Yes, you can. Okay, I'm going to... Yes, I'm going to continue in English. Apologies for that, but as I say, I'm stepping in at the last minute for my colleague who had an urgency today. I think this has been a very interesting discussion, and thank you for inviting us to participate. At the OECD, I think everyone knows our role is to collect research and data and to conduct analysis, ultimately to produce standards and guidance for governments and public authorities to follow. And I think there's 3 points I'd like to make listening to the interventions that have been made so far, which I think have been incredibly interesting and illuminated many relevant points that at the OECD we're also working on. The first thing I wanted to mention is that as regards financial consumer protection, the G20 OECD principles for financial consumer protection have just been updated and endorsed by the G20, the OECD, and the Financial Stability Board. And these principles set out the standard for governments and public authorities in terms of putting in place a guiding framework, or the foundation stones, if you like, for effective financial consumer protection regimes. And among other things, these principles pick up on many of the points that have been discussed in this session, not least the fact that digitalization is recognized as one of the cross-cutting themes across all of the principles. And digitalization or responding to the risks of digitalization have been reflected in the principles themselves, not least through the development of approaches in response to new delivery channels and new digital financial assets. The role of public authorities, regulators, and supervisors. The principles set out that such authorities should have, of course, the appropriate tools at their disposal, appropriate toolkit, and capabilities within the organization to be able to keep up with the rapid pace of change that other presenters have talked about. And here, I think there's lots of scope for detailed and complementary toolkits, such as those mentioned by Eric, to fit in here in terms of practical use on the ground. The principles also cover data protection and the need to address the risk of frauds and scams and cybersecurity risks. I think another important component of the principles on financial consumer protection, which I think is relevant to the question of technology neutrality, is the principles place a renewed emphasis on consumer outcomes. So achieving fair outcomes for consumers from the products that they buy or that are sold to them, irrespective of the channel, I suppose. So we tend to look at these things from the consumer perspective, or the outcome that the consumer is getting. And of course, that's underpinned by the need for equitable and fair treatment of consumers, and also for financial products themselves to be of sufficient quality and with appropriate governance mechanisms. The second point I wanted to make, the professor was talking about subtech, and obviously others have been mentioning that too. And I just wanted to flag for any public authorities who may be in the conference who are not already members, you can consider joining FinConnect. FinConnect is a network of market conduct supervisors from around the world. It's not an OECD body, although we do support it. And it's a network of supervisors that basically work together, share information, and identify common challenges and responses in terms of how to practically supervise financial institutions and those offering financial services, including fintechs. And they have done a significant amount of work on subtech, different applications and tools that are being developed by supervisors, whether it's to monitor or more easily analyze advertising materials, complaints, reporting to the supervisors, supervisory reporting returns, and so on. So you can find information about FinConnect easily on the website for FinConnect, and it could be very useful for supervisors, particularly from developing jurisdictions who are looking to work with colleagues from around the world who are actually doing the job on the ground. And then the third point, which is the one that I was asked to address specifically, is digital financial literacy. The OECD has been doing work for many years now on best practices and policy approaches in terms of financial literacy. We have a dedicated network for that topic that has about 100 countries from around the world represented. And increasingly over the last few years, they have been focusing on, well, financial literacy is obviously incredibly important in terms of supporting the consumer in all of this. And now to be financially literate more and more means needing to be digitally literate. Research shows that those people who engage or are more comfortable with digital services or using digital tools are also likely to have higher levels of financial literacy. And obviously, conversely, those who are not able to benefit from the greater access, choice, cost reductions, and so on associated with the delivery of digital financial services. And so we're, of course, concerned about this divide opening between those who are maybe digitally literate and those who are not, which can sort of increase their risk of financial exclusion. And, we can all think there are many, many people around the world, notwithstanding the vast increase in digitalization, who are still not comfortable, not able to, or not don't wish to transact in a digital way. So we have been doing a lot of work to encourage countries to invest in digital financial literacy as part of their overall financial literacy efforts. Things that we have done there include developing a measurement framework, so a survey that can be freely used by countries who wish to measure digital financial literacy levels in the population. We have developed a competency framework that sets out the competencies that you might want to help someone to achieve in order to be able to transact digitally in a confident and informed way. And we have a number of policy guidance notes about how to effectively harness digitalization to make the delivery of financial literacy more effective and more efficient. So you can, of course, look at the use of digital channels to increase the reach and to scale up financial literacy initiatives, to lower the costs, to encourage positive financial behaviors. And of course, digital can really help practitioners to gather data to help them constantly improve and evaluate their financial literacy programs. So there's plenty of information about that on the OECD website, or of course, I'm happy to elaborate on that further as you wish. Thank you very much.
Thank you very much, Miles. So the floor is open for questions. Please.
Bonjour, Henri David Calalubé, l'Afrique littéraire et artistique. Vous parliez de réguler la numérisation.
Henri David Calalubé from Afrique littéraire et artistique. You were talking about consumer protection. With digitalization, Mr. de la Becque has just said there are less bank accounts than accounts on mobile phones. And security is much more difficult to ensure on such supports, because digitalization is, in a sense, is a loss of sovereignty by states. And we're going to have digital currency when the basics aren't even assured. How can you assure consumer security in these instances? Because digitalization, in fact, only undermines security for consumers. Do we have other questions? We can take a few. Aboubakar Abdoulaye, coordinator at the techno-targeted program of the Ministry of the Economy. I have two questions for the representative of BAC. First question. The bank is a guarantor of the currency. Why did you let China generate a monetary crisis in the sub-region, in CEMAC, particularly in the Central African Republic? Because for the past 3 years or so, China has implemented a strategy which it uses to try and hoard all of the coins in the country. And there's a very serious problem with coinage in the country. As you know, the population is very poor. They live day to day, and people have a lot of problems in their daily life. What measures have you taken? You have left China hoard all of the coins in that country. What are you doing about it? Second, question about crypto assets. BAC and COSUMAF are two institutions which regulate and approve currencies and crypto assets. So there isn't a regulation per se of crypto assets. And the Central African Republic has decided to set up its own crypto asset currency. What measures are you taking in the sub-region? Thank you. Other questions? We have a gentleman in the very back of the room. Thank you very much. Alain Bouchang, a researcher at Bouchang, working on migratory problems and financial digitalization with the Tontine system, notably. This is a question for BAC. From what I have heard since this morning, and first of all, many thanks to the organizers for this event. You talk about sustainable development for Africa. Financial digitalization is a priority and a crucial question for the region, for the CIMAC region. And here you are in France talking about it, which is a great thing. Would have been even better had this conference been held in Yaoundé or Dakar. But my question is, do you, so at BIAC, which I'm quite familiar with, do you have any systems or instruments to monitor as the series is, or I don't know, other organizations such as the FinTech Innovation Branch, which I believe are all instruments that are there for kind of technological intelligence to monitor developments. Do you, within CIMAC, you talked about regulators, CIMAC, COSUMAF, COBAC, and BIAC itself, do you have these types of practical monitoring systems to help to provide support? While in fact the name of the game, essentially things are happening in your own field of competence. Hello, Génération Banque de France.
Maybe I should ask this question in English because it's mostly for Mr. Wardrop. You showed the picture of Binance, which is somewhat really interesting, but in my understanding is that it only shows the pace of diversification of this company. But maybe we should also focus on where these companies, not only Binance, but the whole market is actually profitable, where they are actually making profit. Because to say it differently, yes, Binance is an octopus, DeFi is an octopus, but what is interesting for the policymaker is to know what are the stronger arms of this octopus. So this leads me to a question to you, which is, how do you manage to reduce this level of complexity for the policymaker, especially because on the policymaker side, my job and our job is to provide our bosses with clear messages on where to go and what to regulate. So how do you manage to reduce that from the data you collect? Thank you.
Merci. Est-ce qu'il reste une question, Florian?
Merci Bruno. Donc je me fais l'écho des questions.
Thank you, Bruno. Just echoing the questions that have been asked on Zoom, 2 questions, which I'll slightly reword. The first one about agriculture. And if you allow me to reword it, it's how can digital regulation make sure that this sector can benefit the agricultural world, the farming world? Another question that's about financial education, but also digital education. And also, someone also asked a question about knowledge of legislation by consumers. Anything is being done? Might I add my own question? Yes, there is another question, so please do so. The microphone is actually in the armrest. So I'll ask my own question while you're rummaging around for the microphone. Professor Wardrop, so you were talking about regul-tech by, regulation by using AI and technology, and the regulated sector that is largely using the same thing. Isn't there a risk that there might be a bias that would lead us to miss a number of pitfalls if the ecosystem is itself entirely built on algorithms? But maybe we could have the gentleman's final question now, if he's found the microphone. The gentleman hasn't found the microphone. Unfortunately, the interpreter cannot hear it. We can't hear the question because the gentleman is not using a microphone. Just a very short question to the regulation authority and ACPR. I just wanted to ask how you work. Do you consider that the manner in which you work, you were talking about your team, is what you're doing here in Paris similar to what your colleagues are doing in London? Thank you. So we had a lot of questions for the representative of BIAC. I hope you don't regret your decision because you are standing in for the Director General. So maybe you could answer these questions there. Maybe you would like to answer the questions about financial education, and Professor, I'll let you close, Professor Wardrop, to answer my own question, and that by Julien too.
Yeah, I think this was a good question about, from a practical point of view, what do regulators do with all of this? So first of all, if you cut this data, you can cut it on multiple dimensions. So you're completely correct. Think about it as the octopus is multidimensional. It's multidimensional in activities. It's multidimensional in governance. It's multidimensional in employees, in legal entity, and it cuts across geography. You have to unpack that. So it relates to the other question that was asked about active crypto, right? The challenge with crypto is the pure crypto, let's call it, right? Is the decentralized nature of the governance structure. But when so Ethereum, most Ethereum projects have a centralized governance structure. It's not that hard to find an accountable party who will carry whatever liability. The tricky bit with crypto and highly decentralized projects is you need to follow the money to find where the governance lands. Think of Wirecard. What happened with Wirecard? You had a regulated entity in a different jurisdiction and a different entity from where the real decisions were being made. That is going to be more and more common in a decentralized finance world. You have to find where the governance, the end, where the buck stops, is the English expression, right? Where does the buck stop in the governance? Because some people have governance tokens. Some people have administrative back keys. Somebody in the back, somebody somewhere is making money, and there's probably some control over the governance, because very few decentralized projects are truly 100% decentralized. You as a regulator, you got to find that. You got to find that. Where does the buck stop? That's what you need to focus on, in my opinion.
Thank you. Timothée, you want to react in just 1 minute?
Should I speak in English as well? Maybe it was just a quick note to say that this problem is not actually confined to DeFi, and in the general framework of this is a very practical answer. I'm going to give a practical element, but also concerning passporting, for example, passporting activity. One of the main mission of the ACPR, when we have like activities that pretends to be in France, some of them coming from Britain, from Great Britain, for example, following the Brexit. We also are trying to find, is this real? Are you actually going to implement your activity in France, or is this just an empty box and somebody is actually taking the decision, but somewhere else? So this is not a new problem, but I agree that it's particularly prevalent for DeFi.
Merci beaucoup, Timothée. Donc, beaucoup de questions pour la BEAC.
Merci beaucoup. Alors, beaucoup de questions pour la BEAC, effectivement. Et
There are a lot of questions for BEAC, indeed. So I do understand the concern of participants and the population of CMAC, which of course is exposed to all of the implications of new finance and fintechs. So in terms of consumer protection, we as a regulator are taking measures to ensure that providers of such services make provisions for the general population to be given sufficient information to make informed and responsible decisions. It's undeniable that fintech has become essential. We cannot do without it because the conventional banking system is not attracting much demand. We saw that earlier with the inclusion of bank, 4 million, and fintech has 32 million customers. And in fact, these new digital tools, financial digital tools, are simply must-haves. They're unavoidable. But what the regulator does is ensure that service providers make sufficient information available to allow them to make the right decision, and also work to develop, because this of course can sort of concern the fees that are paid, the list of transactions, and any type of transactions within the limitations allowed. And what we also ask for is that at least each operator has 3 information channels available 24/7 for consumers, customers, to obtain information before they do anything. We also work on developing a degree of flexibility in the complaints system. If a consumer were exposed to an issue, he or she should have easy access to this. One of the speakers talked about coins, and and another one talked about cryptocurrency. Obviously, this is not quite the same, but in terms of the coins, the actual coins that are being hoarded by China, that I think that deliberately they are trying to subvert a system. The bank's purpose is not to issue coins for them to serve another purpose than payments. And it's true that unfortunately, these coins are used in gambling venues. And they're trying to interact with the public authorities who are trying to take measures to counter this. So as we face difficulties and new risks, we are also developing new tools as we go to regulate or monitor any behaviors in the field. As regards cryptocurrencies, it's a new phenomenon. Everyone is trying to do their best to regulate, which is why I was talking earlier about regulators in COSUMAC, for instance, as part of their remit. They ask us to focus on fintechs to manage things as best as possible. These are systems that are very new, and therefore we're discovering new difficulties, new flaws on the way as we make progress and finding new solutions to address these new issues. That's what I could say right now. Thank you, Ernest. So I would have liked to have been a better moderator to ask Eric Duflo to describe what was specific about the ecosystem in the agricultural world, or even ask Ben Stephen to tell us about financial education. But unfortunately, I've reached the end of my tether, and that would really jeopardize our coffee break.
I've said lots. Do you really want me to? Okay. Okay. My 1 minute concluding remark will, I think, go back to collaboration again, and the need to coordinate and collaborate across regulatory bodies and authorities and jurisdictions, because the digitization of the financial system does not understand boundaries as we understand them today.
Thank you. Je pense qu'il y a différentes façons de comprendre les frontières.
Yeah, there are probably different ways that borders can be envisaged, even outside of the world of digitalization. Sorry for delaying your coffee break. But why don't you use the coffee break to answer any questions?
Oui, on va donc reprendre, et je vous présente à nouveau mes excuses et surtout à nos auditeurs pour le retard. Et donc, Éric Lacourège va venir modérer cette dernière table ronde avec de nombreux régulateurs et de nombreux gouverneurs. Puis il y aura...
And then there will be a talk by Christian Roca, who's the African director of the AFD. He's going to be giving his point of view as a fund provider, giving his experience. We can qualify him as succeeding in a country in East Africa, but I don't want to spoil his intervention. I'm going to hand over to the moderator of the session, Eric Lacourège, who is the General Director of the Cash Retail Payment in the Banque de France. Eric, the floor is yours. Thank you, Bruno. Hi, everyone. I'm so happy and honored to be with you in today's proceedings. As I can see, you've had a very rich program with a lot of central bank issues at stake. Our panel discussion today, we still have 1 hour and 15 minutes, is that it? Okay. So we're going to go until 6 p.m. if all goes well. Our panel, our purpose is to wind up talking about opportunities and risks for Africa linked to digitalization and competition between currencies. It is my pleasure to invite to the fore for this roundtable the participants that are physically in the room and remote. Mr. the Governor Sugulam from the Central Bank of Mauritius is remote. Hello, sir. Mr. Morobou from the Central Bank in the Central Bank of West African States, and the Governor Andrea Naurivelo, who's the Governor of Madagascar, who's also remote. And I'd like to thank him, and I'd like to send my friendly wishes. And Mr. Morten Beck, who's the Director of the Innovation Hub in the Swiss Innovation Hub and the Bank for International Settlements. If you'd like to join us, that would be great. Those of you who are physically present, that way we can sit here together during the panel. Make yourselves comfortable. As an introduction about this topic, which is a topic which is quite encompassing, and before we ask you to share your assessment about what's at stake in your country, in your monetary area, perhaps it would be good to share, in guise of introduction, a few considerations having to do with the very nature of this topic, opportunities and risks for Africa linked to the digitalization and the competition between currencies. So there are a few issues here. This is not limited to anything, but it might give you something to start with. I can already see at least 6 possible topics of interest, which are underlying this topic. The first of which would be a kind of a generic thing to know in your monetary areas, in your respective countries, what are the big trends in terms of developing digital? And there's a second topic which crops up immediately and logically, which is also very important in the areas you are present in, is to know as a counterpoint, what is the position of cash as compared to the new digital payment possibilities, and what's the perception of that transition or cohabitation? The third topic, which is also so current today and has been for many months and will continue, is to know whether there is room and what room will there be for digital money in a central bank. And that is as well a partial response to the question of payment digitalization. A fourth topic, here again, which is not directly linked, but is a topic that's of great importance for many institutions in central banks, the issues of banking inclusion, which mean general means of payment as well, this big movement towards digital. And the fifth issue, which I've identified and like to share with you, which is very important for central bankers, and that is in fact closely linked to everything we said, is sovereignty. Sovereignty of payments and sovereignty ultimately of the central bank and your monetary zone. And another topic of interest as well that you might wish to deal with is that to know whether for your institution, do you see your role as being that of a regulator, a catalyst, or maybe an operator even? In these issues of competition and currency. So which of these characteristics do you see yourself comfortable with? What would be the most important for you as a central banker? As a counterpoint to the intervention of our guests in central banks, I'd also like to hand over it to Mr. Beck, who could perhaps share his thoughts about what's at stake as a member of as a Swiss Innovation Hub, who's one of the most furthest along in central banks in these to have his snapshot of the situation seen from the technological angle. Thank you so much. So without further ado, I'll hand over and we can obviously respond to the various issues at stake and to each of our guests. And I hope we'll be able to listen remotely to start off to Mr. Governor Sigolum from the Central Bank of Mauritius. Governor, the floor is yours. Thank you. First of all, I'd like to thank the Banque de France for this invitation. Unfortunately, I wasn't able to be physically with you, but I'm here virtually, and I'd like to say hi to everyone, to all of my governor friends. It's such a pleasure for me to share a few ideas with you and to avidly listen to yours and talk about what we're doing in Mauritius, what we've been doing recently in the digital world and the world of payments and digital currency as well. But above all, the topic itself. The discussions today in this panel discussion carry opportunities and challenges that digitalization entails. When one talks about our continent, the African continent, we should note that the potential of this continent is huge insofar as anything digital is concerned. And that's true for many reasons. So why is it true? Well, mainly what's involved are these opportunities that exist because of the fact that there's a very low level of bankerization in payment systems on the level of the continent as a whole. But the potential is huge. This has been said and said again, the potential is there. And we are seeing through the continent, either in the east, west, south, and north, in the center of the continent, there are many projects and a lot of integration going on, digital integration in finance, which are ongoing as I speak. But to get back to the situation in which we find ourselves as governors of central banks, it's very important for us to take particular care so as not to create make things even more complicated than it was before. Obviously, we're exploring opportunities. And you mentioned the major issues at stake in terms of the people intervening. But I think there's a huge and very long list which adds on to that and the issues that you mentioned. Obviously, what is of vital importance is that we need to make the necessary progress in actual digitalization of payment systems and banking systems on the continent, but we also need to have the infrastructure that is extremely robust and hermetic, because without an ecosystem that can support the development of digitalization on the continent, this is not going to help us. We can see this clearly in many countries throughout the world that are very far along in digitalization of financial services generally, and we can see that they have made a lot of investments in their ecosystem and in the infrastructure, whether it be hard or soft, whether they be systems that are there to support development, but also systems in the area of human resources and talent management. So we need to make it so that we can work together continent-wide to share our experiences so that we can share and move forward together for the good of the continent as a whole. Because in fact, our objective is what? It's very clear for me. We need to facilitate the lives of our fellow citizens, and obviously to reach a point where we get past the cross-border transactions. We have to be able to support cross-border payments and investments. And this has to be much easier than it is now between countries throughout the African continent. For that to happen, we need to have the right infrastructures with robust systems and where there is a recognizance between countries. When you don't have an ecosystem, when you talk about ecosystems, you also have to recognize the fact that there are a lot of countries on the continent today that are not necessarily in the same wavelength as we are when you get right down to the legislative framework. That is another very important issue, and we have to get into phase on that and to develop a legislative framework that would be an enabler for that to support the development of what we're trying to do. We should not forget, however, everything having to do with the anti-money laundering, AML. And we talk about digitalization today. This opens many doors. I'm not going to say windows, but a lot of doors, insofar as the risks involved linked to increased facility for those indulging in money laundering. in terms of the regulatory authorities and central banks, we must set up the mechanism that's appropriate in order to accompany the development of digitalization. Yes, but through with a total respect and closing all of the doors that we can see that could be opening up very quickly. In the precise case of Mauritius, as you know, perhaps we were on the gray list of the GAFI for 2020 and 2021. And we got off the list, the GAFI list, in record time. But this goes to say that that we need to reinforce further the mechanisms that already were in place for AML. And we cannot ignore this process of digitalization that is affecting us significantly and which is already reality. So we need to work together to close off those risks. You mentioned obviously everything having to do with sovereignty. That remains to be extremely important. I'm not going to touch upon that subject in itself, but I'd like to talk about a challenge, a real challenge, which is also of great significance, and that we are talking about this continent-wide to set up a system which would be a source of improvement of the payment system, but also digital currency. Insofar as payment systems we can talk about, but in terms of digital currency, there are many things that remain to be put into place. And the main challenge here that we see today on the continent is that people are not necessarily well positioned to understand how digital currency can work. Personally, when I talk with many people, when I talk with various fora, there's always a kind of ambiguity around cryptocurrency. And the private sector seems to be interested in CDBCs, as we mentioned, and NBCs. In Mauritius, we have insisted on, and we got the message across to everybody, that everything having to do with crypto assets in the private sector, we do not recognize that as a real currency. We recognize that they're assets. You can invest in it, but you cannot use it as a hard cash, as legal tender. On the other hand, we're working on the digital rupee, which will be our digital currency of the central bank in Mauritius, be our CBBC. In fact, only last week, we published in the central bank, we published a document having to do with querying the public about the way in Mauritius about the introduction very soon of our digital rupee. So the essential aspect is what? We need to make sure that our respective populations understand properly what's going on, so that they don't let themselves be tempted by various players who are present in this market. By the way, we can see, and this is the case in many countries that already have kicked off a pilot project, who have already kicked off their NMBC directly. We've had many problems insofar as acceptance is concerned, the acceptance of digital currency by the public. And this can be explained by the fact that digital financial education has not been well done. I think that as to us, with the daunting challenge that we have, and that we have to get across to our respective populations what the issues are that are at stake and that are present. What are the opportunities as well that this digital world offers? But even more important than that, in the NMBC, because I think on the continent today, almost more than half of the continent is already on board in various projects to introduce NMBCs respectively in their countries. It's essential to get the message across to our respective populations insofar as what is actually the way things are, the way things function, and how this can possibly improve their lives. In this respect, I believe that it's important for me to mention as well, for the end of this current year, in November, or earlier, we're going to be organizing in Mauritius the annual meeting of the FinConnect. In the panel that you had just before this panel, I heard a few people speaking about the FinConnect. It's a great initiative between the different regulatory authorities to improve and reinforce financial education, especially in the digital world, so that we can get things moving in the right direction. Now, the idea here of that annual meeting is to discuss how, between the different regulatory authorities and different players, we can pitch in together and really develop the mechanism and a system for financial education that can be both effective and on time. So I don't want to speak longer. There was just a few points that I wanted to share with you. And before I conclude, I wanted to say that there's a huge potential. We need to work as a team. We need to cooperate amongst the various countries on the continent and with other banks, other central banks outside of the continent, so as to be able to learn what tools are already available as of today. In Mauritius, we've developed a bridge between payment systems, NISUIT, between Mauritius and those payment systems of India. This is a pilot program, and it's gone very well, actually. It's now up and running. So I really want for the African continent, I say that we can work on projects to build bridges between our different payment systems as well. There are already bridges, and many, but we need to work on this so that we can truly facilitate even further the payment processes in the continent. And on the other hand, in terms of digital currency, this is a subject where we must work together and fully cooperate between central banks so that we can move forward in a secure way, so that we can inspire the confidence and trust of our populations. Thank you. Thank you, Mr. Governor. Very interesting. Just a question having to do with your project for digital currency. You've already decided on the date you're going to launch that, or you're still studying and prototyping, or where do you stand actually in the process? We already decided, and I've made an announcement already. It was last month. I think it was last month. We received in Mauritius a conference. We had a conference about digital currency, CDBC, that was organized jointly with the International Monetary Fund and the World Bank and the VIS. We talked about the various things at stake, and the essential announcement was that we were going to be launching the pilot project of the digital rupee in November this year. But this will be launched as a pilot project. Thank you, sir. A great round of thanks. And I think you have a bit of a constraint. Yes, indeed. So wishing you a great afternoon and evening, Governor. I'm going to hand over to Mr. Governor Roux, who could share with us your perspectives of the problems in the État d'Afrique de l'Ouest, in the central bank there. Thank you. Can you hear me? Thank you so much. First of all, I'd like to salute and thank the Banque de France, the FD and FERDI to have invited us to participate in this meeting. I'd also like to thank and congratulate all of the speakers since the morning started for the quality of their presentations. It's a very instructive day for us. We're happy to be here and to participate and to exchange and to listen, be attentive to the various experiences about an area which in some aspects are new for us. And there are a lot of exchanges about these new things. That's I'd like to salute that effort. The BCRO is the central bank and the West African actually is 107 million inhabitants. This is a region which for some 10 years we've had this 5% growth per year on an average. In 2022, we wound up with 6%, and we should probably do a bit better in 23, I think. So we get up to 7%. With the same challenges as all central banks. We've got inflation, same thing in Europe, I think. Finished 2022 with more than 7% inflation, 7.8%. But with the measures taken by member states and the central banks, we should be able to, we're currently in April, we stood around 5.5%. So the trend was going in the right direction, but we're extremely attentive about that. Maybe talking about digitalization in our case, because the situation since this morning, I heard people talking about, even if we're in the same dynamics, the situation is different for everyone, you know, from one region to another, one country to another. But for us, digitalization, we really insisted on digitalization because we had observed with more than 100 banks, commercial banks, retail banks, more than 400 microfinance activities which operate in the 8 countries in the rural areas. Bankerization wasn't moving forward. There was no financial integration. So I'll give you some figures. When you take into account the level of bankerization, the number of bank accounts in microfinance and treasury and post office and the Caisse d'Épargne, there were 27%. But when you're talking about electronic money, the figures were 5%, only 5%. Usage of financial services globally, the rate of inclusion, financial inclusion, the classical definition was barely 30%. So really far off the mark. So we said to ourselves, we have to insist on a certain number of reforms in order to improve the financial inclusion, because financial inclusion is all important. You're getting more people into the rural area. 60% of our GDP comes from rural areas. To include them significantly in the financial sector, small companies in the informal economy, in the urban and rural areas, very important, the informal sector. They need to be included. And women, they're very active in the informal economy, in the rural economy, in farming and others, and also in services. They're more, but for us, that was a way of increasing savings, having a bit more investment, and indeed having a better consensus with respect to employment. That was the objective. So the central bank initiated a certain number of initiatives. I'm going to pass them on review very quickly. because they are legion, but very quickly we had to, we talked a lot about infrastructures. We wanted to modernize our infrastructures, payment systems in real time, notably for mass amounts available for all countries. We also pushed banks towards interoperability of money settlement systems so that a client in one bank can mobilize resources wherever they happen to be located in these 8 countries. Secondly, we set up a regulatory framework to support the development of electronic money. We authorized operators to issue electronic money based on telecommunications companies. And in the public treasury got involved in the process, and they permitted the issuance of electronic money for payment operations, for salaries, social expenses, everything having to do with student scholarships and so forth. So now we are trying to automate certain transactions from end to end. For microfinance, the difficulty was the actual capacity. There were good intentions, but a low capacity. So what we did in the central bank was to mutualize, to federate capacity, so as to, because they are present in rural areas. So that was really the purpose initially when microfinance was introduced in the country, was to move towards the areas where we can have a big effect on users with low revenue. And that's what we've done. And fintechs. Now, since this morning, we've talked a lot about fintechs. That's true. We have implemented a follow-up activity for the activity of fintechs to help them to play a more significant role in the effort for financial inclusion. So by the end of 22, we performed an assessment and we had identified results that seem to be quite encouraging in terms of bankerization has increased. We've reached almost 45%. We were at 27. In electronic services, they're 90%. Madam Director, this morning in Financial Inclusion gave us the figure of 150 million. And the rate of usage of these financial services is almost 82%. So the amount of transactions were multiplied by 10. And we get the feeling that there has been an impact. So obviously, as was mentioned, we are totally in agreement. The growing utilization of activities via the electronic supports also has, along with it, a certain number of risks. We have identified 3 key areas of risk. The first is anti-money laundering. And here we've had a few concerns in this respect, which brought us to reinforce our arrangements and the law prohibiting anti-money laundering against the terrorism. That law was just passed 2 months ago at the end of March, which includes CAFI provisions to keep better track of this type of transactions in electronic money. The third level is cybersecurity. The more we use it, the more vulnerable we are. In our zone, there are credit establishments that have been subject to attacks, very strong attacks, with a significant operational risk. What we have done is to reinforce the standards of IT infrastructures in establishments that are using electronic money to avoid, or at least limit, the damage possible in this area. And there's also data protection, because with e-money, there's always the possibility of personal data being used for fraudulent purposes. Identity usurpation, identity theft, for example. And this is important. This is why we need to be very cautious about the information infrastructure being used. So for us, there is progress, but it's not enough. Still a great deal needs to be done to look further into financial inclusion, to have a more significant impact in terms of the economic impact, as I was saying, through the support of operators in rural areas and the transfers and loans in particular. So to reach these objectives in the central bank, we've launched 4 initiatives. The first of which was spoken about, I believe you raised the question of the problem this morning, is that we are developing an interoperable platform, which is very far along because we are practically in the testing phase. And that will be in place by the end of September. Now, the objective being, through this interoperability, is to make it possible for all citizens out of the 8 countries to do their operations and transactions, whether it be electric money or by card or by bank transfers using or cell phone transfers. And this is going to enable us to move up to another level, to reinforce the usage of electric e-money in our region. Another point that we are pretty far along as well, which was spoken about by the gentlewoman who came this morning from the World Bank. Today, fintechs, and there are some 200 fintechs, for their operations, they have to be backed up by financial establishments. We're going to be modifying the regulations in this respect to detach them from financial credit institutions, to enable them to use basically their full capacity for innovation, for a better penetration and a better financial inclusion. This is very important as well, which was spoken about by my colleague and friend from Mauritius, financial education. This is fundamental. All of this, if you have no education, or financial education, you have to accompany the people who are in rural areas and women, those who are in the informal economy, the small companies, which are the most likely to use electronic money. I think we need to do this or it's not going to work. So we need to have a financial education program with the member states so as to help people to learn, to reinforce their knowledge on the part of different users having to do with financial questions so that they can make the right choices for them. Lastly, we're putting into place a laboratory of financial knowledge to enable fintechs that have ideas to be able to operate in a specific framework with specific regulations to test out their ideas and their models before deploying it at a big scale. Regionally. And we think that with these 4 reforms, this will contribute to reinforcing an ongoing dynamic. And the digitalization
and that is also another important reason, because with the economic growth we've experienced, that's a point you were addressing earlier, the use of cash is actually rising, on the rise. The number of banknotes between 2003, 2004, and 2022 was multiplied almost by 7-fold. And for us at the central bank, of course, it's a huge responsibility. So to us, digitalization is also a good way not to get rid of cash, because we believe that cash will always be needed we believe that growth is going to continue. As I was saying, 60% of our population lives in rural areas. So we will always be having growth in the demand for banknotes, for cash. So we believe that is quite momentous. And as for the issue of cryptocurrencies for central banks, crypto assets rather, they are assets, indeed, financial assets, private financial assets. Of course, those who use them are the operators. So indeed, they are assets, but we do not consider them currencies. And in fact, the users use them at their own risk. We saw how they have behaved, how these assets have behaved on the market. There is indeed a very high risk. And of course, to us, it's we really do not believe that they are currencies. And our answer to that is, of course, very clear. Financial assets, and there are other bodies in charge of monitoring this. The Financial Markets Authority, we are seeing how an adequate regulation can be implemented. As for central bank digital currencies, we are thinking about it. We have a committee working on this question. We are looking into the various aspects to see to what extent a digital currency could be implemented. Would it be a wholesale currency or a retail currency? We're paying close attention to that. And then your final question is also essential. Do we play a part as a regulator or as a catalyst, or do we simply provide support? We are the central bank of a developing nation. So I think we do all three. Indeed, we are first and foremost a regulator. We are there to ensure that banking operations, anything that is connected to electronic currency, we do indeed have a very strong responsibility with other players, other regulators, insurance companies, and social insurance, social security. We're all responsible for the financial stability and the monetary stability in our region. So our role as a regulator, and notably as a regulator of the key players in that field, is undeniable. But then alongside that, we do also serve as a catalyst, because we need to ensure that all of the necessary reforms made necessary for the economy as a whole can continue to move forward in terms of modernization, in terms of best practices to support economic growth and development in order for this to deliver. So we are often there when trying to envision new solutions, then we share our conclusions with all of the other stakeholders, and then there's a contribution in the implementation of all of this, and then we hand over. And we also are there to provide support, because as the Central Bank of Developing Countries, we must work and provide support to players during the implementation phase, in training. We organize a lot of training initiatives to encourage and update people's knowledges. We have 8 countries through which to roll out. So we do indeed wear these 3 different hats, which, because of course we are a central bank, and also because we're the central bank for 8 developing countries, we have very specific and multiple types of constraints. Many thanks, Mr. Governor. Before we continue to listen to our other speakers, perhaps a question about your perspective in terms of the general public and therefore consumers who are, of course, important players in your zone. You were talking about all of the very interesting initiatives you have taken over the years to support players in the economy, to encourage economic growth in the zone. Would you say that for the general public, are you trying to encourage the population to enter the world of banking more, or do you think a digital retail currency might be the future? I think what we are aiming for is for every stakeholder to be fully integrated into the financial sector. I stated our priorities, our priority initiatives in that respect. But then as regards the central bank's digital country, perhaps I would say, what we're observing currently is that we really are just in an interesting phase of reflection. I was recently in Mauritius to meet my colleague and friend, whom we heard earlier. And there were a number of central banks where, of course, we discussed these issues. And I think what came out of it, what came out of our discussions, and the OECD said so, it seems that almost everywhere people are thinking about the question. Some might be at a slightly more advanced stage or in the testing phase. We had a colleague who had already launched that, namely Nigeria. They were with us and they could tell us about their own experience. But in the majority of countries are still simply considering this solution because there are significant challenges, significant things at stake here. Should it be a retail or a wholesale digital currency? What would the implications be for banking institutions today? And then, of course, a digital currency for a central bank. Of course, that was a commitment of our central bank. So there are aspects that need to be carefully weighted. Work has made progress, undeniable progress, but we really do make sure that everything is fully understood before we embark on any initiative. I listened to what the Mauritius Central Bank said. They are currently, in fact, just about to launch a pilot program, which is great for them, but we're still considering things. We have a committee in place, in-house, that is examining these solutions and that will soon be making proposals. Many thanks, Mr. Governor. Might I add to that, for Eurosystem, of course, I agree with all of the colleagues here. And in fact, we should be agreeing in October or November to launch a so-called prototyping digital currency initiative, and the same would go for wholesale. So yes, everyone is pretty much at the same stage at the moment. And I now have a great pleasure to yield the floor to the governor of the Central Bank of Madagascar, who is speaking remotely. And welcome again, sir, and welcome, and thank you for joining us. Thank you very much. And I'm very sorry that I couldn't be here physically, but unfortunately my other obligations prevented me from traveling in person. When a technological innovation appears, such as smartphones, social media, artificial intelligence, people always have questions, and rightly so, about the benefits and risks. And electronic currencies, such as cryptocurrencies, have also become very popular in a number of African countries because they are affordable, accessible, easy to use, and also have a great potential for cheap and swift cross-border payments. But these electronic currencies often compete with those that central banks are in charge of. And although this poses a number of, although it increases financial inclusion, we do, as central banks, need to manage the associated risk, cybersecurity, financial instability, as reported by my colleagues, and also digital exclusion, because even the penetration of the internet and of mobile telephony remains limited. Let us look at the financial landscape in Madagascar. If we look at the offer at the moment, there are 3 financial institutions, 17 microfinance institutions, 3 intermediaries in banking operations, and 3 electronic currency institutions. And according to that, around 41% of Madagascans are excluded from the banking system, 46% in rural areas and 31% in urban areas. And only 18% of adults use the formal banking system, and 12% hold a mobile money account. And slightly less than half of the adults have no national identity card. Let's briefly talk about the opportunities, risks, and challenges, and what we would recommend, and what the central bank is currently doing. Opportunities, of course. We can talk about digitalization, which might extend the service to populations or communities that are not integrated to the banking system, notably through the use of new fintech players. Also, the financial sector is very much involved in the economy's rebound, because during the COVID crisis, the response in a number of countries, fintechs and transfers with mobile money reached multiple layers of the population, whatever their revenues. It was cheaper, swifter, and well adapted to changing customer needs. I think one can say that this digitalization might also lead to reduced fees and costs, because facilitating trade, intra-African trade between African nations, may also foster regional integration, although sometimes the domination of electronic means of payment may not be so favorable to users. As for investments, one can say that these financial systems help to obtain better traceability of transactions and creates conditions that are conducive to direct foreign investment and portfolio investment. But there are risks and challenges. Among them, weaker transactions, easier transmission. A lot of regulations say that financial digitalization and the proliferation of digital currencies have a destabilizing effect on currency demand, and that might jeopardize monetary policy. In Madagascar, for instance, the volume in terms of the use of mobile money, electronic money, is as large as transactions that go through the bank's clearing system. And de facto, this creates a parallel economy. and the proliferation of e-currency might also foster that parallel economy, and by essence, crypto assets were created to compete with the official legal tender. To us, no currency has been declared legal tender, apart from the Ariary, which is our national currency. The others are merely a substitute for means of payment in view of the central bank. And therefore, one might lose sovereignty over monetary authority. And for the African economy, where the informal sector is much more powerful, there's a greater loss of sovereignty, as is the case with instances of currency dollarization. And as has already been said by my colleague, the cybersecurity risk is huge because you cannot follow all transactions, and a lot of these are suspicious. We need to strengthen regulation. I think it's been said so already. And that is why the central bank is currently working in close cooperation with regional organizations to ensure that African nations work together to design regulation of electronic currencies to promote monetary stability and avoid a fragmentation of the system. And of course, strengthening capacity building was also evoked. The digital skills and digital education, literacy through of the population through communication initiatives and so on. And in that manner, we can reach, of course, better awareness, better education, and the various stakeholders should raise awareness through campaigns, awareness of these electronic currencies, and the modeling of the educational system is very important. What the central bank is currently doing, there's a national payment switch, which is a form of interconnection of electronic payment systems in Madagascar, allowing every actor in the economy to use mobile money or mobile phones or bank accounts to make and receive payments, and why not with a national payment card. The central bank has implemented what we call a transformation of the information system to foster collaboration with our employees so that they can use paper documents less and less and increasingly use technology, leverage technology to become more efficient and avoid any errors in our operations. And then, of course, the central bank has a project called E-Area, which is a project for an electronic currency that is currently being examined by Madagascar. We are in the exploratory stages at the moment, and we have discovered that the central bank e-currency has already is already now in a pilot phase in actually in Jamaica, and we are going to go on a fact-finding mission to Jamaica to work with their central bank to see how they are doing, because it's very important to see what progress other nations are making, and that will help us to adjust our policies and strategies in terms of this electronic currency. And that is what very briefly I think can be said about digitalization and competition between the central bank's currency and these electronic currencies. Many thanks, Mr. Governor. This is incredibly interesting. And we have noted that there seems to be some subjects that are common concerns to governors of central banks. Perhaps a brief question before I yield to my colleague from the BRI. In terms of the priorities of Madagascar's central bank. And more precisely, you started by explaining the situation of banking in the country. Would you say that the increase in access to banking services in the population is a priority for you? You were talking about Ari, but is that a priority of your central bank? Of course it is. Of course it's one of our objectives. Madagascar is has a very specific situation because mobile money with the 3 EME companies is extremely advanced, and a significant proportion of the population uses them. And then there are initiatives by the Madagascar post office with the e-pocket, which is a payment card. And thus the central bank wants to stand out in a position of leadership for banking integration of the population to further the central bank's monetary policy, which is why we were ramping up our action on the central bank's currency. We already started thinking 2 years ago about it, but we really this year want to push much harder. And then, of course, as I explained earlier, the payment system, the national switch payment, will be in force in November to ramp up and accelerate access to that and boost our action in increasing access to banking services in the population. Many thanks, Mr. Chairman. Let me now turn towards the tech incubators, and notably one of the most popular in the Club of Central Banks, the Innovation Hub of the BRI, the Bank of International Settlements. So we have heard the concerns of central banks here and there. What does the boss of an innovation hub such as you think?
Okay, thank you. First of all, let me just maybe just reflect a little bit on the day-to-day from my perspective. I think, as I mentioned, the Swiss Center is a joint venture with the Swiss National Bank. So in my daily work, I work with a central bank in a very advanced country with a very developed financial market and financial market infrastructure. So just this today has just been a great opportunity for me to hear about the problems from a very different perspective. And I think that has been really, really good and interesting. So if I'm, I can see that we are running late on time. So let me try and entertain you all by talking a little bit about economics. No, that's a joke. But the idea, I was thinking about what is it that we do in the Innovation Hub. I think I spoke about it a little bit earlier, but I really think it's about the production possibility frontier of central banks. Okay, and so what we've been talking about today is really how do we move central banks in Africa and other places in the world to the production efficient part of the production possibility frontier. And so that's what we've been talking about today. What the Innovation Hub is trying to do is actually trying to move that production possibility frontier so outwards, so that we can produce more, say, monetary and financial stability using the same resources by using better technology. And let me mention just 2 examples on how we do that. One is a project that was just released today, actually by the Eurosystem Center, which is called Project LEAP. So they are based here in Paris, but also in Frankfurt. And they just released a project report on this Project LEAP, which is about how central banks can secure their communications against quantum computers. So the cryptography we have today, if and when we get quantum computers, are not going to be safe. So this project is really about what kind of cryptography do you need in order to protect against this future state. So that's some of the things that we're doing in the Innovation Hub. Another project is something that's called Project Mariana. there we basically envision a future state in the world where central banks have issued CBDCs and in tokenized form, and how would foreign exchange or currency conversion happen there? And there we're actually using some techniques that comes from what we discussed earlier, decentralized finance. There, when you have to go from one stable coin to another stable coin or from Bitcoin to Ethereum, you use something that's called automated market makers. And these are really, really interesting smart contracts or protocols and liquidity pools, but they are basically like in very efficient and innovative way of exchanging one currency or crypto asset for another. And we're trying to see if we can build something like that and whether how that would work in a central bank digital currency perspective. And hopefully, if that works, then you would be able to plug such a thing into some kind of process where you're doing cross-border payments, which is really one of the things that are driving a lot of the work we're doing. So I think if I should summarize some of the things, it is really about we want to be pioneering. We don't want to do the projects or the things that central banks already, as we heard today, greatly doing themselves, but we really want to look on what's coming next or what is on the horizon or even beyond the horizon. And so hopefully that's the way that we can help central banks. If we publish all the work we do, we try and share code, we try and educate. We also want you to learn for all the failures that we do. You know, that's really important in innovation, that you fail forward and learn. And let me give you just two very small examples of where prototypes that were developed in the BIS Innovation Hub is close to being put into live production. And this comes from the area of wholesale central bank digital currencies. So one example is a project that ran out in Hong Kong, which was called Project Genesis, which was around how can you issue a green bond for the government and using tokenization. So basically putting it on a distributed ledger platform. And so they did that out in Hong Kong. And then the HKMA looked at the prototype, talked to the Hong Kong government. They liked what they saw and they decided to go ahead and actually implement this. So together with some other companies, then the companies that had actually been involved in the prototype, they built this new platform. So now there's a retail green bond available for citizens in Hong Kong that is based on DLT, and it's working fine. But in order to settle these things, the HKMA realized that they needed a tokenized form of money. So basically what they did was they also issued a tokenized form of Hong Kong dollar. And so this is one of the first instances of a wholesale CBDC. It has a very limited purpose in that it can only be used to settle a certain asset, which is this green tokenized bond. But it is a wholesale CBDC, I would say. And also, just very quickly, in Switzerland, there's another example. The SNB has just announced that they will take what we worked with them for a couple of years ago on something called Project Helvetia, where we also used digital central bank money in tokenized form to settle tokenized assets on a platform that is live and regulated for digital assets in Switzerland. And they are also going to issue onto this platform a wholesale CBDC into a live environment. So I think, even though I think I said earlier that wholesale CBDC is, while that's hard, retail CBDC is even harder. We have seen more examples actually on retail CBDC so far, but actually I think wholesale is slowly catching up. And I'm encouraged to hear both from those gentlemen that you're also considering wholesale CBDC. Thank you.
Thank you very much. Merci beaucoup. Peut-être en conclusion.
In guise of conclusion about what you just said, a question which is both, how can I put this? Maybe it's simplistic, but what's your perspective with respect to what is at stake technologically in the next few years in these areas? And if there's one important issue seen from your control tower, what would that be?
I really think it's about getting the cybersecurity right on everything we do in digital space. It's an arms race between the ones that want to do harm and us that wants to protect the financial system. I used to, but I had my job before at the BIS before I did this innovation gig. I was the secretary to the Committee on Payments and Market Infrastructure, and my first job on the first day was to arrange a meeting between the CEO of SWIFT, the governor of the Central Bank of Bangladesh, and the New York Fed. And that was after that big incident. So I think I have seen what can go wrong when things are not properly protected. And so I think even though it's probably the hardest bit, it's also probably the most important bit that we get right.
Un grand merci. Je crois que dans l'ADN des banquiers centraux, il y a bien entendu la volonté de soutenir.
Bankers, you have to support economic growth and stability, but you also have to be prudent when you do that. And that's the whole question of cybersecurity. And it's so consubstantial with respect to development of the economy and the payment systems which support that economy. So this is indeed extremely important subject in the steering group we're going to be involved in the next 3 years. Well, I think we have reached the end of this session. I'd like to thank very warmly all of the people who participated. Thank you so much for the quality of your presentations and the thoughts that you were shared. And I'm going to hand over perhaps to Bruno. Thank you.
On peut pas faire question-réponse, on n'a plus de temps, Bruno, c'est ça? Désolé, ça c'était pas prévu après la table ronde qui devait être finale, surtout qu'on a beaucoup de...
We're a bit late here. I'm very sorry about that. I'm going to hand over to Christian Yuka, who is a General Director in the French Development Agency for Africa, who's been giving us the closure from the point of view of a funding organization. The whole question of digitalization of the financial system. How is that important for someone interested in this type of investment or funding? Thank you, Bruno. Hi, everyone. I'm the African director of FERDI. I'm not the general director. So very happy to be with you. Mr. Rimeiro apologizes who couldn't be here. He's in a meeting right now with the chair of the ADFC. Indeed, in guise of conclusion, perhaps leave that to Mr. Guillemot to summarize the basis of our exchanges today. I would like to give the point of view of the AFD and to briefly speak about a project that we support. And that will be a good reason to raise some questions, not about opening discussions, but a way of reserving a slot for the next meeting, which will have a lot of questions to deal with then. So with your permission, there will be two of us speaking, myself and Derek Bruno, who are going to be very quickly presenting the project that we're supporting in Kenya. This will not going to surprise you. At AFD, we consider that financial services as one of the founding activities of development. Now, financial inclusion has a central position in our mandate to favorize development and the fight against poverty. And now, so there are three thrusts to this. There's access and transition to accompany the transformation of the various people involved, transformation, both digital and increasingly a transformation to make it possible to take climate change issues into account. And thirdly, consolidation. So this is obviously a group approach. We're mobilizing both AFD, but also other companies from this private sector. We also need technical assistance at three additional levels. There's a macro approach. We're being involved with standards, supervision, and the House support for certain sectorial initiatives and a micro approach with direct funding with respect to financial institutions that are involved in the sector. We utilize all of the financial tools available to us, whether it be loans, subsidies, holdings, subsidies, and other things, and via the mobilization of public-private loans. In 22, we financed almost 400 million euros. So digitalization is part and parcel of the main trends in the various financial sectors, and we are developing these sectors to help to seize all of the opportunities, and there's several reasons for that. And the technology comprises a sector for investment, which is a privileged area. The start of fintech had an annual growth rate of 25% in 2019, in 2020, and 54% of all investment to startups. This is a sector that had almost $900 million in 2019. It's more than their competitors, the closest competitor in electronics and retail technology. In fintechs, we see only payment solutions by cell phone, but for years, the product line has extended considerably. Digital payments, services, loan solutions, microfinancing solutions, saving solutions, investment solutions, and insurance solutions. And for all of these services are limited, still limited. When you think about insurance, it represents only 5% of the fintech companies in the sectors. There are still efforts, important efforts to be made still. Another reason for financial technology is linked to the development of business, of commerce. You can see the main people involved in trade are investing increasingly in payment areas. Online commerce, such as Unia Congo, have launched their own payment systems so as to keep people away from using cash, and on the contrary, the parent company also started investing in e-commerce. Another reason for us is that digital money has become an important catalyst for financial inclusion in the sub-Saharan area. That was said this morning. In the sub-Saharan areas, 55% of adults have an account, for 33% had a mobile money account. It's 3 times more than the average worldwide. And we were able to talk about that this morning. Africa represents 45% of the payment by phone, by mobile phone, which is not nothing. If you consider that in sub-Saharan Africa, only 80% of the population is not bankerized, and more than 95% have no credit cards, as we said earlier. So for funding organizations such as we are, the idea is to encourage financial autonomy of families. Now, the impact of supporting financially women, make it possible for them to have activities that generate revenue. And this brings along with it overall development in the society and the group, which represents for us an important area for activity. Now, the women that are members of microfinance institutions that received free savings account were able to reduce their dependency and improve their ability to face up to economic emergencies. What we're observing is that the evidence is that this is an important sector in Africa. More and more people are investing. The digitalization impacts very concretely the human development that goes on to make general financial independence more generalized. Financial inclusion is indispensable to development and to reinforcing the resiliency of households. Now we're talking about support of projects for financial independence. Now, the ambition is really inclusion. This is the case in Kenya, in Tunisia, or in Ethiopia. We also have a certain number of projects ongoing, including your own institution with the BCAO. We are supporting the development of fintechs, but also the implementation of new digital usages, including strategies of digitizing governments. And now this is with public authorities. Through these financial instruments, we can, in fact, accompany public policy of governments in this respect. We are well aware of the challenges that arise. what I would call here is the long time period of regulation. Now, the absence of regulation nationally is not necessarily a limiting factor. In the initial phases of growth in the sector, whether it be in fintechs or electronic commerce. However, as these areas develop, regulations will be necessary to ensure the macroeconomic stability and to protect people involved. The second challenge is to accompany the switch over to cross-border interventions. The governors have spoken about that from various countries. In Mauritania, they spoke about that. It's important to continue harmonizing payment systems more broadly with a view to having a pan-American operability, because finally, electronic commerce cannot sustainably develop regional activities and continental activities if they don't have some kind of solution for trans-border payments that is fluid, that does not depend too strongly on cash. Obviously, this requires a complicated initiative given the regulatory considerations that are attached to that, but it is important to work on this despite it all. To have a Pan-African system of payment and settlement set up by the IXIM Bank has been important to advance in their digital system for payment and settlement to facilitate cross-border transactions. And the payment system will make it possible to African countries to proceed with settlements in their local currency. And there are infrastructures, digital infrastructures, and the distance, the lack of money, the lack of documentation has always been cited amongst the main obstacles to inclusion and bankerization from a bigger number of people. There are solutions to counter these obstacles, and the infrastructure is important, has an important role to play in this. The worldwide efforts are being made to grow inclusive access to identification systems that are reliable and to cell phones to be able to improve the ownership aspect of accounts. And the idea is to increase access to financial activities via the people that are not bankerized yet by improving infrastructure. Another important challenge is to fill in the gap that exists in availability of adoption of financial services of a digital nature. There's a big virtual divide between countries in urban areas and rural areas. There's a big divide there, and along the same lines. And this was said earlier by the governor, that users that has no financial experience cannot take advantage of all of the properties of an account if they don't understand how it's used. So the role of education is all important. So there's accompaniment that's necessary to avoid digitalization being as perceived as a threat. It has to be perceived as an opportunity. I'd like to let my colleagues say a couple of words about the project we're supporting in Kenya, which is quite original from this point of view to face up to the challenges I just mentioned. Mr. Governor, ladies and gentlemen, I'm going to present this experience that started up about 10 years ago in Kenya, thanks to a charity that set up a community currency that was inclusive in nature. It's inclusive because it's for the poorest, and it's communitarian because we're grouping together a group of people, 30 dozen people who know each other, they're in the same neighborhood, to give them some currency by crediting to their phone, because for 5 years that money that was paper money has become electronic money, and to give them an amount that corresponds to what could be their sales of the poorest people amongst that group of people. And we assess what they're able to do to sell for goods or services or fruit or vegetables or a little bit of work. So these are not huge amounts. The average amount might be 40 euros, 25 CFA francs on average. Now this is for the poorest people, and it gives them the resources to stimulate their exchanges. So this is a currency that is not competitive, but it's complementary, because this additional purchasing power is concomitant with the national currency. Clearly, someone who I've seen this in a shanty town in Nairobi. There are a few killion shillings here, but no salary. But receiving this additional money means that they can go to the hairdresser, and they might pay a half a shilling and half in this money. So each community, it could be the baraka or whatever. So it stimulates exchanges. And this is supported by a system of a blockchain system, which has the huge advantage of keeping and securing the secure nature of all of the transactions, so that we are able, and that's why we're presenting this today. This experiment basically is a way that seems effective to us to fight against poverty, and is also being run seriously with the whole blockchain system, which makes it possible to have full traceability of all transactions, which makes it very interesting for a certain number of academic institutions who are starting to look more closely at what we can do with it. By the way, it interests more than 60,000 people in Kenya for the amount of transactions, which globally is more than some $3 million. So we're presenting that to you. It seems to us to be interesting as a quite effective way, and not very costly way, compared to things like the Red Cross, which has been able to test, comparatively the same system which they supported, and the cash transfer system. On the one hand, we're obliged to give the money to the poor, and the other way, we have something that's not very costly because it's digital. And to finish, the system, compared to the topic risks and advantages, the risk is that since it is a community-based, there's not much risk in terms of embezzlement. And there's a blockchain system as well. And for the central bank, for central banks, and for the FD as well, the question that arises is, with respect to Mr. Governor, you've spoken about the three roles of a central bank: catalyzer, and to accompany. So how can we accompany the system? And what is the advantage of replicating this without being a competition for national currency? Because you have a community scale, but which can touch a huge number of people. Thank you. Why did they put this at the end of the friggin' day? It is very late indeed. I'm not going to talk very long. I am supposed to conclude these wonderful proceedings today with four panels. Very interesting conclusions that we just heard. I would like simply to say 3 points to thank all of those who had the patience to say that again, but also those that came from very far away, in particular the governors and friends from the BCO, Comor, and those that were online and who were with us here today, and all of those that I've forgotten, speakers that did the main communications for each of these panel discussions. And naturally, I'm not going to list all of them, but they're all interesting. And the second point is, I would like to just say where the conference is situated in the alignment of conferences we've had over the last 10 years. FERDI and Banque de France for 6 years, FERDI and Banque de France and AFD, French Development Agency. There have been 5 conferences. So the topic in one word, well, show you exactly what spirit we're working in and how we wish to continue working in 2014 on financial integration. As this was opened up by McKinnon in a presentation that was remarkable. Then it was financial policy faced with the shock of raw materials in 2017. In 2019, policy of exchange and sustainable development. And sustainable development was introduced in the topic of our conferences. You might see the presence of the AFD in that. The brand of the AFD appeared in that intervention. And we had all of the topics of sustainable development that we've spoken about earlier today by our friend from the Monetary Fund. Very interesting. And then 2 years ago, we had Africa facing climate change, what financial applications. And I'd like to indicate to you, since it's fashionable these days to do some advertising, here you have the publication of the review of economic development in 2024, which is the collection of a certain number of interventions that were given in this conference. So you'll find them in there. This will be available in a few days. Africa facing climate change, what financial choices, conference for the AFD 2021. We also have this wonderful conference today about financial visualization in Africa. Now, what do we have in common about these 5 conferences? Well, we are seeking to develop a link between research and practical application. Now, this balance is a hard one to strike, but I think that today we're more on the practical side increasingly. And I mentioned this earlier. So the contribution of research in these areas is a bit late compared to actual practice. And as we were saying, let's let them move forward. Let's try to measure what they're doing insofar as that is possible. So each conference came on time. This one was definitely welcome. And I'll conclude by saying, why is it welcome? It's welcome because we are celebrating this year very clearly throughout all of France, the 400th anniversary of the birth of Pascal. And Pascal was an inventor and promoter of digital because he invented Pascaline. And to take the position that the governor, Yves Gaudreau, said this morning between innovation and regulation, is Pascaline was a major innovation. It was a breakaway, a leading edge advance. But at the same time, it suffered as an innovation from a lack of regulation. The chancellor who accompanied Pascal in promoting his Pascaline had to call upon legal experts to see how they could protect the right of ownership and to avoid almost savage reproduction of the Pascaline by those who were fanatics of it. So it took years and months and maybe centuries to obtain the extent that it has now. So happy anniversary to Pascal, happy birthday to Pascal and Pascaline, and good luck to the digital world. Thank you.